TJ the Wheel Joe coming at you live with another episode of Wheelers, the solo edition. Just kidding, it's getting better already. We got Billy Branco from the Bronx, number 14. What's going on, Bill White? How are you?
Good. How you doing, TJ?
I'm good, brother. I'm good. I am excited about today. I've been trying to get Chris from Data Driven Investings on the channel for some time because I want to understand SoFi at a different level. And my thing is this: if you don't know, ask somebody who's already dedicated the time. They have a different mental capacity than you do, because we can all agree this dude's way smarter than I am. He's way smarter than I care to be. And he knows SoFi at a very different level than I do. And I feel like because I own so many damn shares, I control many more shares than I own through the fund and whatnot, and influence that I have with people in our financial circles. I just feel like it's important to know what you own, like kind of like the whole Peter Lynch thing. Anyway, how are you, man? How's everything going? What happened with, like, is it Helene? How do y'all pronounce that hurricane that hit over there?
Uh, yeah, I don't even know how it's pronounced, but I hear it's pretty crazy in Asheville, North Carolina.
Yeah.
Got a text from a guy at work that I work with. Got a text from somebody who was there and said they saw 6-year-olds walking around looking for their parents. So I think it's a lot worse out there than the news is actually reporting. And my dad lives an hour from there, outside of Greenville, and they got hit pretty bad. He's fine, but yeah, I think it's a lot worse than what the media, the news is projecting out there.
Right. Wow. So I got a message from I hope everybody's okay, man. That's the thing with Mother Nature is, it, there's an old saying that God first showed his power with, like, the wind, right? Like how powerful it could be, either like awe inspiring or very destructive as well. And it's just, Mother Nature has a way of like humbling you pretty damn quick. You know what I mean? It's like you
Mhm.
think your life's all badass, you think your house is real awesome. Well, can it handle 100-mile-an-hour winds? Can it handle, freaking 2 feet of rainfall in a couple of days? You know what I mean? Like, we realize that in the larger scheme of things, we're at his mercy.
Yeah.
And so it's one of those things, man. So hopefully everybody's going well, and we're able to come out on the other side of this thing. So let's just chit chat a little bit before Chris was able to make it on. I'll periodically check my Twitter as well to see if he's messaged or anything. But I did send him the link, so we're good to go there. He did say that we're back on our way to the hotel, so I'll just be a couple of minutes late. That was at 7:54 p.m. So I expect that he will be on here pretty soon. This isn't one of those fake thumbnail things or whatever that people do to try to get attention. And this isn't that kind of party. So anyway, I actually need my wife to bring over the other phone, though, real quickly, Bill, because I've got some questions that I want to ask him. And I don't want to rely on my mind to remember. Bring me the other phone, please, baby. And she's gonna bring me some church's fried chicken, baby. We were at a little political event, and we hadn't had a chance to eat. So I've only had one piece of fish earlier, like 2 ounces, and that's all I've eaten today because I wanted to eat some fried chicken, the spicy fried chicken from Churches. What do you know about that, Bill?
I've only had it a couple times when I
Bro,
lived in the DFW area.
bro, it is worth all the calories. There's nothing good about it for you, dude. I promise you. There's nothing good about it for you. So anyway, do you have a couple of questions that you'd like to ask Chris as well about SoFi? I mean, tell us about your situation. You are a SoFi investor. What is your elevator pitch on SoFi bull case, and what's your elevator pitch on SoFi bear case?
At these levels, I can't really see a bear case. I guess if they just got, if interest rates kind of stayed where they are, maybe the stock would be stuck even longer than it has been. I mean, I just think at these levels, I'm kind of failing to see any kind of bear case, and I've kind of put my money where my mouth is when it comes to that. The bull case would definitely be that, on the banking side, they still have, they're growing. It's a fast growing bank. Yeah, the valuation is probably stretched if you just look at it from the perspective of being a bank. But they have the tech side, and that should, deserve some sort of multiple. What type of multiple? I'm not quite sure yet, but I haven't really, figured that all out. I just know it probably should deserve a multiple when you compare other fintech companies and the multiples that they trade at. Like, why shouldn't it have some sort of, hybrid multiple between somewhere between a fintech / tech company and a bank? I'm pretty confident that over the long term that will be realized. So yeah, that's kind of, that's my bull case. I mean, it's really just, understanding the business and where it's currently trading. I just think you can make a lot of money on it. Truth be told, I'm actually technically not an investor anymore because I've been wheeling the stock and I got rid of it. But I have over 1,000 outstanding cash secured puts. So I'm kind of an investor. I don't know.
I'd say so. A $750,000 position. Yeah.
Yeah. So
just a little something, 1,000 puts. Never
yeah.
mind me.
I want it to go up. That's for sure.
Or at least stay right at your strike price, because that roll would be massive.
Yeah, exactly.
That roll would be massive. That is awesome. So, do you have any questions so this is going to be a theme. This is going to be a theme tonight. If you could sit in front of Anthony Noto and you can ask him 3 questions, what would those 3 questions be?
I can think of the first one for sure, and it's, you brought up the point many times, is why don't they sell the idea of being more of a tech company? Because I follow Anthony Noto on X. I pay attention to a lot of what goes on in SoFi just because I do have a decent amount of money riding on the stock, and I can't for the life of me figure out why they never really, really, truly talk about the tech side. Everything that he kind of mentions is always really about the banking side, and I just can't really figure that out for the life of me. So I guess that'd be question number 1. Question number 2 would just be, I understand there's a difference between maybe their app and their website and some of the fintech technology there, but why does the app and the trading or the investing platform, why does it suck so bad? Because it seems like they'd have a pretty, they'd be able to attract a lot of customers and maybe compete against SoFi a little bit if they actually made that made that platform a little better. Those are definitely kind of my top 2, and maybe a third one was, and I actually have the question for Matt. What's his name again? I know it's data driven investing.
Chris,
that's right.
I believe his last name is pronounced Hager. It'd be Hoger. I think it's Hager.
Right.
I hope it's Hager. I know he works as an I know he works as an engineer. There's like 4 types of engineers. So I'm going to guess, as nerdy as he is, it's probably going to be electrical or chemical. I don't think he's do civil and mechanical. Those are for the not as smart people. So he's probably going to be in the chemical or electrical engineering space. I happen to know several engineers, so I know how to classify their level of smarts. But
I want him to explain, and I know the answer to this to a certain degree, but what exactly is Galileo and what is Technisys? Like, what exactly is it?
Sure.
There's some questions that I have on the banking side, but I think I know the answers to them. But I think it would be the answers would be very helpful to other people that are watching. So I'll save those.
Absolutely. Would you guys like to know my 3 questions for Noto, or do we want to save them after I ask the same question for Chris?
Maybe just give us one of them while we're taking up the time.
Days, 3 questions for Noto.
Oh, for Noto, yeah.
So my first question is, with someone with your resume, we're talking about the former CFO and whatever other title he held for the NFL, the National Football League, arguably the most known sports brand in the entire world, aside from soccer, right? You could argue like Manchester United or something like that might be bigger, not sure. I think the NFL makes the most money out of any of the leagues. Y'all can Google that. I just think that's an assumption. I don't know that for a fact, right? Because I know there's a lot of people that are into freaking football, right? Like soccer.
Mhm.
So having that type of resume, you know, working at Twitter, working at Goldman Sachs, you have the resume of resumes. I feel like a lot of jobs are there for the taking. Why SoFi? Like, why SoFi? Like, what was it about SoFi that you're willing to put your entire life's work on the balance, risk your freaking impeccable reputation, your business acumen on a roll of the dice like SoFi at the time he took the job? Because when he took the job, SoFi was in the fucking toilet. Make no mistake about it. They were dealing with sexual harassment. They were dealing with just crazy ass shit in the workplace. Like, why would you want to put your reputation on the line and take a fixer upper that was not a shoe in for success? Like, of all the things that you could do, why SoFi? And I would like to get an honest answer to that, because it had to be way more than just money. At $300 million, bro, I don't think that's enough to want to take on that task. You know what I mean? I don't think so. So
It's a
that's
good,
one.
yeah, it's a good question.
That's one question that I have for Anthony Noto. The second thing that I would like to ask him is, how screwed up was the situation when you took over? Like, did they give you this bag of goods and then bait and switch your ass? Like, once you signed on the dotted line and you're like, hey, I didn't know that I signed up for all of this. Like, what was really the status of SoFi? And were they ever at the verge of like not making it? Like, whenever like he took over, not that long after, we had this thing called COVID, right?
Mhm.
They took away what? What did they take away? What was SoFi?
Yeah, student loans.
Yeah, student loans. They took all that away. How already in place was this massive pivot, which is the main reason that I'm still invested in SoFi to this day, because COVID-19 and the suspension of student loans by default backed SoFi into a corner that made their company so much better today than it was back then. Because necessity is the mother of creation, right? I mean, let's not get all spiritual, but I'm just in the business world. Necessity is the mother of all creation. So they needed to pivot, or they were essentially going to be out of business, in my opinion. They didn't have enough money on the balance sheet to keep going the way that they were doing it. So, how close was it to failure, or was their plan already in place and they were simply just able to implement?
Can I guess your third question?
Yeah, go ahead.
If you could do it all over again, Mr. Noto, would you? Or was this a lot harder to get to the thresholds that you have in your compensation? Is it a lot harder than you initially thought? Because that'd be, that would kind of circle back to your first question. Why'd you do it? And then if you could do it all over again, why would you?
Yeah, that's a good question. That's definitely a good question. So those are the questions that I would have for Anthony Noto. And then the other question, I guess, like, let's just throw one on top of that because it's a really, really good but question, is for people that have really studied the journey, like the SoFi journey, and followed the story as I have. I follow it a lot closer than I lead on because I don't have that kind of channel, right? Like I don't want to bore people with a lot of facts and all that shit because people just want to see you make money at the end of the day because we're in this thing to make money. Let's not. This isn't a freaking soap opera that we all enjoy watching. Like we're trying to figure out how can I make money here? Is there an opportunity here? Where's my alpha, if you will? So my question is, have they ever considered a buyout of any sort? Like, has there anything ever been discussed and brought to the table that really made it worth considering because it was early on in the project? Because I think right now you can't consider it because it would be an absolute utter failure, in my opinion, because he's already been on the record saying top 10 financial institution, etc. But anyway, let's introduce someone a lot smarter than I am. I can't speak for Bill, but I'm pretty confident in saying that this dude is a lot smarter than I am. He knows SoFi at a level that is just so fucking impressive to me. Because I don't like to know investments that intimately because it gives me too much of a bias that I'm almost not even willing to listen to the bear case anymore. So to protect myself from that, I don't really even know how to do that kind of research. I don't like to do that kind of research. I say I'm not a librarian. I want to own the library. You know what I'm saying? So I want to ask him some questions. Let's get to know who is Chris Ager from Data Driven Investing. How are you, my man? I appreciate you coming on Wheelers.
Good. Sorry, I'm late.
It's all good, brother. It's worth it. I've been reaching out to you for a couple of months now. You're a really, really busy guy. First off, I want to thank you for your time because I know you're raising a few kiddos. You're married. You have the job. I believe you're a chemical engineer. Somebody in the chat said. I said it's got to be electrical or chemical because he's too nerdy to be mechanical or civil. So which type of engineer?
I am chemical. That's right. So I'm a chemical engineer.
So I'd like to start off by asking you, Chris, how long have you been investing and how did that happen? Like, do you come from a long line of family of investors? This is what we know about you. This is my little snapshot of Chris. You're married, you got like a gazillion kids and they're for like a basketball team, and you live in Utah and you work as a chemical engineer. And for whatever reasons, you probably know more about SoFi than some people that actually work there. So that's what we know. What don't we know about you? And I also know that you were an Olympian.
Which is also true. Yeah. All right. So I guess you get my life story and I'll make it short. So as far as investing goes, the first time I ever bought an individual stock was probably 2006. And ever since, for the most part, I did mostly passive investing until I got enough capital where it made sense to start putting in the time to do more DD and to kind of get into it. And then I just really enjoy doing research. I enjoy asking questions. I enjoy that sort of stuff. So like actively involved in doing my own DD and stuff probably started around 20. So I would do it, but not even really as a hobby, just like every once in a while I'd listen to an earnings call of something that I owned. But for the most part, it was, passive investing in pretty well-known companies. And then about 2018 is when I really started to get to the point where where it moved from being a hobby to something that I really enjoyed doing. And it wasn't even a hobby, right? It became a hobby in about 2018. And then in about, call it 2021 is when I really started, getting fully into it and stuff after I'd spent a few years kind of developing how I like to look at companies and that sort of stuff. So yeah, I guess from an investment standpoint, that's where it is. So I live in Utah, chemical engineer. I work with a company that does, so I've worked at the exact same company since I graduated. I've got a master's in chemical engineering. So it's been 14 years.
Where did you go to school, Chris? At BYU?
I went to school at BYU. Yeah, so Brigham Young University. Did my bachelor's and my master's there. And then one of my professors spun out this company for this technology. It's a carbon capture technology. And so we've just been scaling it and developing it and doing R&D since then. So and then we were acquired in 2020, December of 2020, and so now we're part of a larger company that does a lot of. So we work with cold temperature stuff, so we call it cryogenic carbon capture. And the company that acquired us is that's kind of their that's their MO, right? Is doing like LNG systems and other things, and they're involved in oil and gas. But just from that, I kind of have a big background in energy and electricity generation and that sort of stuff. So that's me, I guess. And then I've got 5 kids.
So you haven't
right now.
How old how old is the oldest?
The oldest is 11 and the youngest is 3. So we basically had them every 2 years. It took us a little while to have the first one, but then they popped out pretty quick after that.
Wow! And so you haven't slept in about 11 years.
Yeah, it's been approximately 11 years since I got a full night's rest. I actually am looking forward. So I'm on a work trip. I'm in a hotel room. It's going to be weird to be able to not get interrupted during the night while I'm sleeping. So
that is awesome. So I want to ask you a couple questions about our beloved sofa.
Okay.
And I already asked Chris this question, and I answered. I told my.
I was listening to the stream for about 5 or so minutes, so I heard the what 3 questions. Is that
Let's start there. So let's start there. If you had the pleasure, because he'd be more interested in talking with somebody like you than somebody like me that knows the company on a very surface level, what 3 questions would you ask Anthony Noto?
Man, that's such a hard question. I would love to know more about like markets in general, and even earnings calls and everything else are so focused on just the next quarter and even maybe in the next year. I would love to hear his vision, a greater in-depth part of his vision for what he wants this to look like 5 and 10 years down the road. Like he said things like, we want to be a top 10 financial institution, right? By market cap. That means that to me, that seems to mean that they can't just do that being a consumer facing company only. So like, what is the roadmap for the products? Where do you see and we kind of have gotten some of this. They've talked about international expansion. They've talked about business account, but it's all been really kind of just hand wavy, right? Like there's been no predefined roadmap. And what is he like? Where does he see the company in 10 years? Like what would, if he could build it and everything went according to plan, what would it look like? That'd probably be one of the ones that I'd ask him. Let's see, what else? I mean, I'd love to know. So, for example, the Technisys acquisition kind of caught me off guard just because I'm not in the finance space, right? Like, at least not. I'm aware of it because of everything that, because I've done so much DD on SoFi. But like, what other pieces of technology do they not have that they would need in order to kind of fill out their vertical tech stack? Would be another kind of question that I'd ask.
So you're saying that Galileo and Technisys might not be sufficient. You want to know what holes they need to fill? Is that what you're saying?
Yeah, if there are holes that they need to fill, or if they feel like this is, they can build the rest internally or that sort of thing. Because like, I didn't know what a banking core was until they, bought Technisys, and then I had to go and figure out what it meant.
I still don't know. Yeah. Can you do it in layman's terms for people like
I was going to say, can we start there? Because my first lay on Technisys. So,
so Technisys, at least again, this is my understanding of it. So a banking core is it runs the ledger and all of the back end of a bank. So this is like everything that you need in order to keep the books clean, in order to make sure that the processes are run accurately, that is reporting all of the transactions accurately. And a lot of these older ones that run, so that kind of the industry standard that's been built in the past is run on really archaic technology. So I actually in my job, I use a program. The program I use most is built in Fortran. I don't know if you guys have ever heard of that language, but it's like from the 70s, right? 60s and 70s. And it's still built in that. And to give you an example, like in my company, we were syncing everything to the cloud because that's what you do, right? And we were having all these problems with like our simulations would all of a sudden throw us these weird errors that we didn't know anything about. And we finally got in contact with somebody, and they're like, and like we'd gone through all these troubleshooting things, and they're like, oh, you're not trying to sync to the cloud, are you? And we're like, of course we're trying to sync to the cloud. Like that's where we save all our files. And the way that the file structure is done, it's so archaic that like it has like hundreds of subfiles that it's constantly updating, and then when it like pulls them all together and then uploads them. But the problem is that then it will like break that file back apart in order to like get those subfiles back when it's actually running the program. And so as it syncs to the web, it would like corrupt these files. And so like all these simulations, we wasted thousands of hours on this because it's built on something that had no idea what the cloud was or the internet was. That's kind of how I think of like what Technisys could replace on the core banking. So like a lot of the things that they run are programmed in COBOL, which is again like a programming language from the 1960s, 1970s. But the point is like the banks have to run these programs every single day in order to make sure that everything adds up, in order to report it properly through the proper channels, in order to make sure that all the transactions went through, and all of that kind of back-end system. That's what the banking core is. And again, kind of the legacy way to do this is each individual product had its own individual core. And so like if you had a brokerage, you had to have a core for that. If you had savings accounts, you'd have to do one for that. If you had debit cards, you'd have to do one for that. And this new architecture is cloud-based, and it allows you to have multi-products on the same core, so that then you can also, so instead of having to, so you don't have siloed data, right? Is kind of one of the most important parts of that, so that you know exactly. So it, like if my data on SoFi is in a multi-product core, they can pull up everything from my credit card and my brokerage account and my checking and savings and everything else, and have access to that data to be able to then, serve me better as a client. Did that answer the question about what a banking core is?
Yeah, that was actually the best it's ever been explained to me. Yeah, that was very helpful.
Sounds exciting. Is it worth $1 billion?
That's
what they say,
now,
right?
So okay. That gets into a different question, which is how much is it worth, right? So I actually think
I'm here to ask the dick questions. The rich guy in the room that's got a lot of shares, and I'm trusting Noto with my livelihood here, and I want answers to the tough shit. Now I'm not here to make fun.
That's fine.
Well, I think his answer is going to be no, because I think the write-offs came from Technisys, but you're going to know better than me.
The goodwill, or is that what you're talking about?
Yeah. So there was the goodwill write-off, but the thing is, so probably the best public companies that you could say are similar to Galileo would be Marqeta, who's an issuer processor, which is something that we haven't talked about yet, right? But an issuer processor, these are the people who print your debit cards and process the transactions on your debit cards. And that's what Galileo started out as. And they also do like ACAT transfers, which is like when you transfer from one bank to another, and other similar type of transactions. Anyway, so Marqeta is similar to Galileo. There's also another company that does banking as a service that's similar in a lot of the things they do to Galileo. That's called nCino. The ticker is NCNO. And the crazy part is the revenue between SoFi and nCino is actually, between Galileo. So if you just take the tech platform alone, and they're at almost the same revenue, like total revenue run rate that Galileo's at. Their growth rates are similar. Galileo's growth rate is actually slightly more, and they're valued at, I should pull it up because I don't want to get it wrong, but I think they're valued at like a price to sales of something around, well, let me look it up so I don't get it wrong. And I have it in an article somewhere too. But anyway, the point is, give me a second.
I get things wrong on this channel all the time, bro. You don't have to be that precise.
Anyway, the point is, I think that like, if I remember correctly, it was something like $3 billion is what they're worth. And they are very, very similar. Sorry, so they're like $3.6 billion is their market cap. And again, their revenue is really close, and they're growing actually slightly slower than Galileo is right now. So if you were to just say what's Galileo worth by itself, probably the best comp is this Encino company, and it's about $3.6 billion by itself.
That's like half SoFi, about 40% of SoFi, right?
Yeah, like 40% of SoFi, right?
It's crazy.
And that's not accounting for any of the customer facing anything.
Wow. So going back to these three questions, what does SoFi look like in 5 to 10 years? And then is there anything that's missing for the flywheel, if you will, right? Because they all use this terminology, the flywheel. So those are two questions. What's your third question?
I don't know.
And
I mean, there's a million like nitpicky questions, but like I wouldn't want to waste like it's like the genie, right? Like if you've only got 3 wishes, you got to think about those wishes. If I only get 3 questions,
I want to understand my wife question. That question.
Exactly, right?
I'll let you sleep on it, and we'll get going. And if something comes up as we're on our way, let's talk about it. I've got some more questions here. I'm like a journalist, and I'm halfway prepared for this. So here's a question for you, because you are probably the most bullish person that I know that invests in SoFi. But I feel like your bullish nature came because you did all the research. Whereas people like me are bullish because I don't see another place that I can make this much money in the next 3 to 5 years.
Uh-huh.
And I think that Noto is the guy to quarterback this thing. Like this was the moat and all that stuff. No, this was, for me, it was more than anything, it was a management play. They had the right situation at the right company, and they got the right man for the job. So to me, they filled that hole, because nothing happens without the right captain. Without the right person steering the boat, if you will. And I think that they have the perfect man for the job. And then when I saw the way that the PSUs were lined up, as you and Tanner and Tevis and Roy Crossroads, all you guys did an awesome job of explaining that to us. I was like, dude, this dude's positioned to get paid, and guess what? I'm gonna get paid too. To me, it was just that simple. The bull case started forming. But how big, like on a scale of 1 to 10, I feel like your bull case is a 10. Just me from the outside looking in, but this isn't the question. The question is, what would have to happen for that bull case to be shattered, and for Chris to say, hey, you know what? I got it wrong. Because, I mean, my goodness, dude, I feel like you're willing to debate anybody on X if they even talk the slightest shit about SoFi. I want to know, what would make you eat the most crow that you've eaten in your whole life?
If they stop executing, right? Like, I think that most of the conviction is from the fact that, like, I've been watching them through really difficult times as a company, like through things that, like, they probably shouldn't have survived through, honestly. And they've continued to execute. They've continued to grow. Like everything else, with the exception of maybe like Affirm. Affirm has done a pretty good job also, but SoFi's executed better. But Affirm also didn't have the headwinds that SoFi had, right? So like if you go back to 2020, right, and SoFi's student loan business was something like 60% of their revenue,
right?
And you take any other company and you take away 60% of their revenue, like, and you come back 3 years later and you say, what happened to that company? It wouldn't be, it tripled in revenue, right? And tripled is an over exaggeration. It about doubled in revenue in that time, but it's tripled since about 2021 until now. And so like the point is that they've been, and then you had the rate hike cycle on top of that, which should have, and so if you look at all their competitors, so you look at Upstart, you look at Robinhood, you look at Lending Club, you look at all of them saw a downturn. Like in 2022, Robinhood's overall revenue, it troughed at like 40% like deceleration, right? Like minus 40%. If you look at like Upstart, like peak to trough revenue was something like a 70% drawdown. Right. So that's losing 70% of your business. And then you look at SoFi over that exact same time period, and they are primarily a student, like again, in 2020, they're primarily a student loan lender. and then kind of a personal loan lender after that. And what they like, not only did they not slow down during the exact same circumstances as everybody else, they continued to grow. So I think their execution would have to stop. And I don't think that that's going to happen, especially now that they're finally they finally got all these headwinds that are turning into tailwinds. And I just don't see that, like, the way that the management was able to pivot the entire company away from something like I use this like, it would be if Apple lost the iPhone tomorrow. Like, if all of a sudden their iPhone sales went down to from where they are right now to 40% of where they are right now. And you fast forward 2 or 3 years and they've doubled or tripled their revenue. Like, that's insane. Or an even better one is Nike, because Nike's actually sucked recently, and but they haven't even, the only thing that they haven't done is not executed. They're losing to competitors, right? And they're losing market share. But 60% of Nike's revenue comes from shoes. So imagine that, like, Nike tomorrow lost their entire shoe business. Like, the US government started giving free shoes away to everybody in the entire United States, right? That's essentially what they did with the student loan moratorium. They said nobody has to pay their student loans anymore. So if the US government, like, maybe some people who really love Nike would still go to Foot Locker and would still go buy shoes. But for the most part, like, that would suck for Nike if we start giving away free shoes to everybody. But then Nike would have to grow 2 or 3x. They can't even grow 2 or 3x without the headwinds, right? And SoFi has, like, when you just look at the execution and what they've been able to accomplish in the last 3 years relative to what you would expect of that company with those types of headwinds, there's no way they should be where they're at right now. And so that's what gives me so much confidence. And that, and the fact that, like, every single bear case. So I mean, I've been writing about SoFi since, the end of 2021, like August, September 2021-ish, I think, is when I very first put out my very first article. And, like, there have just been bear case after bear case after bear case that people have brought up, and every single one of them, like, hasn't come to pass, right? Like, every single last one of them, they've either executed out of it, or somebody was essentially just misunderstanding or lying about their company. And so at this point, the 2 bear cases that are, like, legitimate and that could happen is, number one, if their growth doesn't reaccelerate, right? So, like, if they turn into, and this would be something that I would be wrong on. So if, like, this would make me eat crow, is if their revenue does not, and their entire business doesn't reaccelerate next year, where they go from, because currently they're going to be somewhere around 20% growth. And if they, in order to hit their guidance, they need to go back up into, like, high 20s, maybe 30% revenue growth for the next 2 years after that. And if they instead go down to, call it 15% and then 10% the year after that, that would mean, like, that for me would probably mean that I was wrong, because I think that they can execute to the level that they expect. I think that they can hit their guidance. I think that you can trust management to hit their guidance because they've always done it. But if they weren't able to do that, if they missed that guidance that bad, that would be a game changer, right? That would mean that they stopped executing, that they couldn't foresee how their business would grow, and that they didn't understand the market and what they would do. Now, obviously, like, if there's a giant recession, right, there can always be mitigating factors. But, like, if we don't have a massive, huge downturn, if it ends up being a soft landing and they don't get those numbers, that would be a big deal. So growth slowdown is number one. And then number two, the other bear case that I think is legitimate, but I don't think, like, that wouldn't make me feel like I got something wrong, is just the valuation piece. So, like, if it continues to just be valued as a bank with, like, a 1.5 times tangible book, despite the fact that they continue to grow, despite the fact that they're growing earnings, all this, like, it's possible and it's feasible. And I can see a reality where they hit their guidance and they're at, call it, 65 cents of EPS in 2026, like they've guided for. And it's still trading around 8 because people say that a bank should be trading at a price to sales of 10, right? And it'd be around that. It'd be like 12 or something. I think that that's ridiculous, but it might happen.
Sit right there for a second. I was really hoping the conversation would go there. Do you think that Noto deserves a little blame there? Because every time he comes on CNBC, he just laments at how amazing they execute on the banking side of things and kind of glosses over the thing that we're all invested for, which is the technological component of the company. Because I think you said it best on X. SoFi is a technology company that owns a banking charter. And I think that Noto might have even retweeted you or something like the fact that you get it. But he doesn't present SoFi in that way to the general public. So how are they ever going to command this hybrid multiple unless Galileo just comes out of the park? And you look at Galileo as a different sector, and their CAGR, right, their compounded annual growth rate starts growing hand over fist. I feel like there's been a little bit of lack of marketing there, not just from SoFi, but from the entire brass. Whereas Elon has been saying, hey, we're AI, we're robotics for the last 3 to 5 years. And that's why we're getting this multiple. If you don't believe in all of those things, you shouldn't invest in Tesla. So I feel like we need a little more Elon Musky type out of Anthony Noto. And if we can't get it from him, who can we get it from? Because I feel like that's the only way that we get that multiple that we all invested for. Unless I'm wrong. I mean, did you invest at SoFi's peak?
I mean, no, not exclusively, right? Like if they were just a bank, I wouldn't have, like if banking was their entire thing and they didn't have the technology platform, I don't think I would have invested.
Me neither.
And so, and it, I think everything you just said is really valid criticism, because it is hard. And the other piece that I think is really hard to sell on that, though, is kind of like what Bill was saying, right? Like people don't understand this, right? This isn't something that like you go to somebody, like people get what AI is. They know what robotics are. They can understand conceptually what a robot or what a full self-driving car would look like. If you come to somebody and say, hey, we've got this super cool modern banking core technology, people are like, what's a banking core, right? Like legitimately. And so it is kind of hard to sell. The interesting thing is like Derek White does a really good job, who's the CEO of Galileo, for those who aren't familiar. He actually does a really good job of putting that vision out there. And if you listen to him, like he can explain that in a way that actually makes it sound really exciting. Because it is, like in some ways it can be really exciting to be able to help people to serve, because everybody needs a bank account, everybody needs financial products, everybody needs these things, and if you can serve those people in a much better way, like that's actually a really exciting opportunity. And he does a good job talking about like below the glass and above the glass, and if you've ever listened to his podcast. The other thing that's actually been really interesting but has gotten almost no views even within, and no love even within the SoFi investor community, is they've actually started a Galileo podcast series that, and a lot of it is like old interviews they've done from like a year or two ago that they're like releasing every single week. I have felt like through those things, I understand that part of the business like 10 times better than I used to. But if you go onto YouTube and you look at those things, and if you look at the Galileo podcast, it's got like
a few hundred
views. Yeah, 200, 300 views. So like it's not getting any traction, right? Like the people who are watching it are nerds like me, and nobody else. And it's tough, right? Like because it's never going to be a sexy thing. I don't think banking is, like, even if you become a fintech company, if it's B2B, it's not necessarily going to be sexy, because who the people you're selling to are banks, right? Like, and so it is kind of hard to do that. But again, Derek White actually does a really good job of doing it. And I think you've got some really fair criticism there, where they need to be able to articulate that in a really distilled way that can tell that story. And you're right that they don't do that very often.
Agreed. Do you have any questions for him, Bill? Because I want to pivot towards something else to see where he stands on something that I'm very curious on, to compare apples versus what I feel like are oranges.
Kind of just a quick question, because I think we all agree that SoFi should probably have more of a hybrid type valuation, somewhere between a bank and it's like a fintech company. But just because I haven't, by the way, I wanted to say thank you formally, because early on I double checked some of the information you put out there, and it all checked out. So no, I don't do any of my own due diligence. I just rely on you.
That's not what I want to hear, but that's fine. I try to be as honest as possible. But
I owe you, Tanner, Tevlis, SoFi Dorks like a steak dinner twice over.
I was
I
just
don't
gonna say that I owe you a steak dinner. Let me know
know.
when you're in Florida.
All right, we'll do.
But what percentage of the growth? Because you talked about kind of the what they're projecting out. What percentage of the growth is coming from the tech side versus the banking side?
So what they said in the guidance is they said that they want to have a 25% CAGR through 2026 overall, which means that if they've only got, call it 15 to 20% this year, that means that they've got to get up to, call it 27, 30% in 2025 and 2026. Oops, my headphones just died. Can you guys still hear me?
Yes.
Yeah.
Okay. It must have switched over to my computer audio, which is fine. Anyway, so if that's the case, then that's the number they have to hit, is they have to get back to high 20s. And that's the part of the that it's really hard to predict, right? Because I've got absolutely no insight into what kind of deals they're signing, and they keep those really close to the test. That would be the third thing that I would ask Noto,
Yeah,
right
they
there,
need to
is
be.
why is it that we don't hear about any of the tech deals that they do? Like, are those NDAs? Is that the reason that they don't do it? Or like, who are they signing? Is it possible that this would absolutely be the third thing? I want more data from the tech platform. That's it. Because even if you can't disclose names, you can tell me we signed X amount of contracts. This many of them were banks. This many of them were community, or credit unions. This amount of it was a platform company like Toast or whatever. And like you can break up all that revenue. Tell me how much of it is coming from Galileo, how much of it is coming from the banking core. Like, help me understand the tech better, so that then I, as an investor, can also, and then I, as also somebody who writes about this stuff all the time, I can break that down and better understand the third of the company that's really a black box right now. Because it is, like, from
You had those metrics.
I call myself data-driven investing. I try to have at least some reason why I believe. So there's lots of opinions out there, and like, I feel like the way that you justify whether or not your opinion is correct is you go back to the data and you say, hey, is this actually true, right? And so, but it's really hard to do that with the tech platform because there's just so little data out there.
The information
And so little that they publish.
goes at best.
Oops, I can't hear you guys. Shoot.
Yes.
I'm trying to fix my audio. Come on. All right. Can I hear you now? The speaker test worked.
Yeah, sure.
I may have to leave and rejoin.
No worries. No worries. Well, good
Here,
stuff.
give me a second. I
No
still
worries.
can't hear you.
But yeah, TJ, that's kind of what I was getting at, is if you want to be valued as a fintech / tech company, there's certain metrics that people use to give you a valuation, whether it's user growth, whatever it is. And I don't think we have any of that information really. So
Well, I think that they have said, and I think I might have gotten this from Kyle White's channel, because I've watched probably 10 videos that he's put out on SoFi. And he said something like there's three business components of SoFi. You got the lending, the financial, and I guess the tech. And it's supposed to all be like 33, 33, 33. But I don't know if I'm just making that up. I feel like I heard it on his channel though. I'm sure Chris will know more if he's able to.
I can hear you good.
Okay. Are you familiar with obviously you know Kyle White, right? Stock Goat. He does a lot of videos on SoFi, but I feel like he has said something like they've laid it out to where I guess you got financial services, and I don't know what the other one called, lending, I guess, and then you got the tech platform, and it's essentially supposed to be a third. That's kind of the way that SoFi is trying to shape it up to where the company kind of grows like symmetrically in that aspect.
Yeah, they've said that a bunch of times, that they want it to be a third. In order to get there, they need to accelerate the tech platform faster, especially because financial services is growing so fast right now. And so, actually, that's a good question. The tech integration, but that's what they've always said, is that they want to get to that point. They're not there yet, and the laggard has been the tech platform for sure. And kind of, Bill talked about this earlier. The reason that they wrote down the goodwill is because they didn't see the performance that they expected out of Galileo and Technisys, right? Like, that was in the 10Q from whatever it was, Q3 last year. was the fact that they didn't see what they hoped to get out of it, and a lot of that is because of the macro environment. Because previously their go-to-market strategy was just, fintechs and neobanks are taking off. We will sign them small, and they will grow, and we'll grow with them. But then 2022 happened, and the rate hike cycle, and all of fintech took a crap, and nobody, there was no more investment, there was no more growth, or not no more, but very little growth relative to what it was, and they had to pivot.
I hear you. Can we pivot a little bit?
Yep.
Are you guys good with a little pivot? So I said on Amit's channel, he was interviewing me, second time that I went on YouTube. This is like, my channel was like super small, less than like maybe 500 subscribers. So I went on Amit's channel. The first time I had maybe like 200. He helped get me to 1,000. And then I went on again after I had built up the position substantially to like 250,000 shares at the time. I'm like 3 times that now. But I said, what makes sense to me is some sort of a merger between Robinhood and SoFi. I don't know if I'm living in fantasy land or whatever, but I just totally see that you have like the most hip investing platform right now going, which is Robinhood, and then you have something that they don't hand out, which is banking charters, because SoFi snagged one of the last ones. I feel like they just don't get enough credit for even being able to do that, because I was totally going to be out of this investment if they didn't land that banking charter.
Me too.
Like, it was no question. I was outies, bro. Like, I was gonna make like a banana and split. You know what I mean? I was not interested if they didn't land the banking charter. And I feel like that's when Noto showed me that he's like super, super legit, because he was able to finagle his way through that banking charter, and absolute kudos to him. But I just felt like the merger made all the sense in the world, and I've talked to Amit about it, and then they talked about it several times on SoFi Weekly, but obviously it didn't happen, and I feel like they are apples and oranges company. But whenever those talks they were kind of hot on YouTube about a year ago, did that ever make sense to you in any world, or you're like, no way?
So 2 things. Let me cover one kind of tangential thing real quick, and then I'll answer that question. But it's related. So you talked about that, like, if you were going to be gone if they got the bank charter and they don't get enough credit for it. They actually get the opposite of credit for it, I think, which is the fact that now that they have a bank charter, people can throw around, well, they're a bank and they should be valued like a bank, which I think is like, this is the cognitive dissonance that I've never been able to understand around the bank charter, is the fact that there is like, the fact that they were able to receive the bank charter is the reason they were able to grow when nobody else could, right? It makes them a leaner company. It makes them a company that doesn't depend on others. Like, for example, Robinhood doesn't, like, they don't set their own APYs. Those are set by whoever their partner banks are. SoFi can set their own APYs because they have the bank charter. So it allows them to control their destiny. It allows them to control their funding sources. It allows them to have better net interest margin. It allows them to hold loans or sell loans in a much more agile way. And yet somehow all of those things, and it makes them more profitable and more revenue. And so somehow, it's the definition of cognitive. Anyway,
You say you lost half the club,
that makes the company less valuable. That doesn't make any sense whatsoever. Like, how is something that helps the company, like the actual company, is better in every way for getting a bank charter, and yet people say, well, now it should be valued less because it has, like, it makes no sense whatsoever. Anyway, that's a side rant that I always go on. But to get back to the actual question, so Robinhood and SoFi merger, like pie in the sky world, it makes a ton of sense. And the reason why is because SoFi has a bank charter and Robinhood has ridiculous amounts of capital and is really good at quick innovation on their UI. So Robinhood's UI and UX is awesome, right? Like, I use them as my brokerage. I used to use SoFi. The fact that SoFi doesn't have level 1 options was a deal breaker for me. Once I saw that it wasn't coming, I transferred out.
So real
because
quick,
I also run the wheel, right?
Level 1 options, real quick side tangent. I do feel like SoFi lied to me one time as an investor because they said that that's frequently asked. They're coming and they literally just went radio silent. I'm like, breaker 19 for a radar check and nothing, bro.
I'm with you.
I literally went to Smokey and the Bandit for that one for you guys. Breaker 19 for a radar check, and they ain't shit. Noto's over there on West Point hanging out watching football or some shit. He ain't talking about level 1 options though, yo. Did you feel like you were just flat out lied to about level 1 options?
On that one, yes, yeah, they
Me
didn't
too.
deliver, absolutely.
Yeah.
And that's why I no longer use, like, I still have some funds with them, but my big brokerage account that I do most of my trading on, like, I guess my IRAs are still with SoFi, but like the account that I actively trade, and most of that's just passive investments, right? Like it's index investments and other stuff. But because I can't do everything on just, individual stocks, I would feel, well, I couldn't explain that to my wife if one of them went to zero, right? But like my main brokerage account is with Robinhood. But getting back to, again, the question itself. So Robinhood has all this capital. They've got like $7 billion in cash.
Okay.
If there was a merger between the two companies, SoFi could turn that $7 billion of cash into 30% annualized returns.
Yeah.
Instead of what Robinhood's getting with it, which is, whatever treasuries they have invested in it. And then that they have made some small acquisitions and stuff, but for the most part, their capital is just sitting there on their balance sheet. They're not doing a lot with it right now. So if I could turn that into huge returns immediately, so that would be the huge benefit from Robinhood's side, right? Like all of a sudden, this capital is returning giving you way higher returns. From SoFi's side, you get all of the consistent updates and like Robinhood ships products way faster than SoFi ships products. It's true. And then from the other side of things, the kind of the last thing that would, the thing that wouldn't make sense though, is the fact that the reason that SoFi had to leave crypto. So Anthony Noto is a big crypto bull, right? He owns a lot. It was because of the charter. So they forced them to divest the business. So if SoFi and Robinhood were to merge, they would similarly probably force Robinhood to get out of the crypto business. And I think that would be a deal breaker for a whole lot of people who use Robinhood as a brokerage. So that would be the huge downside. And then the second, but from a
So stay right there. Stay right there. I own a boutique hedge fund. And I've talked to big hedge fund buddies. I know 2 billionaires personally, and they mentor me, and they're like, "Hey, get your shit together. It's fun over here." And I'm like, "Bro, I wish I could, but it was hard just to get here, so I can't even conceptualize that life." You know what I mean?
Right.
But they're like,
just like,
hey,
I can't conceptualize your life. It's fine. We get it.
Oh, well, dude, there's levels to this game. We're just all figuring it out. We're all day to day, bro. Nobody's got to figure it out. So here's the thing, though. They were like, couldn't a bigger bank or a bigger institution like a la Goldman, a la JP Morgan buy both of these and then have all of it?
Yeah, but here's the thing.
It makes rules. I'm just saying this is the talk that's talked about by people with a lot bigger money and bigger brains, if you will. They're like, then both of these, aren't they just really just acquisition targets waiting to happen?
I think it's really misunderstood. I think this aspect of it is really, really misunderstood by people in general, which is the fact that Robinhood and SoFi are disruptive technologies. Yeah. And the reason, and people don't understand what the word disruptive technology is, because most people think of disruptive technology as something new. And a disruptive technology, if you go back to, so Clay, have you ever read The Innovator's Dilemma? Either of you?
No, but
The Innovator's Dilemma?
Disruptive technology is like when they started selling cars online. That's a disruptive technology.
Right. So what a disruptive technology is, something that the exact quote is, it's actually not, there's most disruptive technologies don't have new technologies of any kind. They're previous technology that are packaged in a way that is novel. And the thing about disruptive technologies is that it's something that only makes sense in a niche. So a disruptive technology only makes sense because you are growing, but it's often a niche market. And then it's also at margins that don't make sense for competitors. So what that means is that, like, so again, if you go back and, like, if you haven't read Innovator's Dilemma, it's actually really, really fascinating. And it's totally worth reading. I try to go back and re-listen to it like once every other year because there's always stuff that you forget. But let me give you a quick. Kathy Wood did ruin the term disruptive technology because the things that she says are disruptive aren't actually disruptive technology. They're emerging technologies. That's neither here nor there. The point is that like, so this is a really, really simple one, but it's one they use in the book. So back in like 20 years ago, when you built a backhoe, and when you built a Caterpillar, the technology that they used were just like chains in order to lift the bucket, right? And then somebody started using hydraulics. But the problem with hydraulics is that at the time they could only have like small buckets because they weren't able to lift as much. And so they took over these really small applications that the other people wanted to see to them because that was their low margin business. So these big companies like Caterpillar that are making, well, that Caterpillar back then, right, were making these huge things. And that's where the highest margin was making the really big equipment. They didn't care about the backyard excavator that people would use to dig a trench because that's low margin business for them. And it's such a small market that it doesn't make any sense for them to focus on it. They're happy to cede it to this new technology that's just hydraulics, right? But then what happens is eventually the hydraulics get better and better to the point at which the bucket sizes get larger and larger. And now because it's a more reliable technology that takes less less maintenance and other things, as they scale up, they start taking over more and more valuable parts of the market. So emerging technologies don't solve the growth needs of large companies. That's the takeaway of disruptive technologies, right? And I'm not doing a great job of explaining it, but hopefully you guys kind of get it. So the thing about Goldman Sachs and the thing about, JP Morgan is that they don't want to buy SoFi and they don't want to buy Robinhood because they don't care about TJ and they don't care about Chris and they don't care about Bill. We are small potatoes to them. We're worth nothing, right? Like relatively speaking, because the contracts and the stuff that they're worried about trillions of dollars of assets. They're not worried about billions of dollars. They're not worried about people who are taking student loans and personal loans, right? That's not where they make their money. And so they are happy to cede that to somebody else because that's low margin business for them that doesn't solve their growth needs, right? The entire personal loan market is, I think it's like something like $200 billion. $200 billion doesn't even make a dent in their balance sheet.
Yeah.
And so so the reason that Marcus by Goldman Sachs failed is because big companies don't do disruptive technologies right because they're not built for it. They don't allocate the assets properly to be able to build it properly. And so nobody cares. Like that's the thing is that like JP Morgan they're fine seeding this to SoFi and Charles Schwab finally is getting to the point where I think they're starting to worry a little bit about Robinhood, but that's only because Robinhood now has been taking their accounts directly and they're starting to see large accounts like TJ's leave their platform. But by the time you get there, now it's too late, right? Now, if you want to buy Robinhood, it's $25 billion on that's its market cap. That means you have to pay a huge premium to that. And so that's the thing is that the growth that Robinhood was experiencing 5 and 10 years ago, Charles Schwab didn't care about that. It was a bunch of, degenerates who are moving on to Robinhood, who are trading a bunch of options. Like this is the psychology, right? It's a bunch of small $1,000 and $2,000 accounts that are blowing their accounts up on options, and they don't care about that. And it's all like disruptive technologies. That's the way that they grow is they take over niche, small margin markets that the big players don't care about, and they're actually happy to give away. And that's why JP Morgan will never buy, in my opinion. I don't think that they're going to look at SoFi and they're going to say, it's not worth $8 billion to us. Like if that's its market cap today, that's not how much revenue it's going to bring into us because that part of the business, like we don't even care about it and it's not going to bring us that value. So both SoFi and Robinhood, I think are more valuable as small independent companies than they would be as part of a conglomerate.
But not only that, it's pretty hard to actually acquire a bank, even for a larger bank. I mean, normally it's under times of distress where they need to, they allow the banks to kind of step in and take them over for pennies on the dollar. But I don't think JP Morgan, if they even wanted to buy SoFi, they could come really place an offer and it would actually go through the regulatory,
Yeah, there's that too. And anybody else who wants to buy SoFi would then have to take a, like, if they're not already a chartered bank, they'd have to become a chartered bank. And unless, again, that's how SoFi got theirs, right? They acquired a really small bank out of California, and eventually the regulators, greenlit the application. But if you're not already a bank, you wouldn't want to acquire SoFi because you don't want it. Like, for example, Apple would never want to buy SoFi so that they could spin up a financial services, because Apple doesn't want, the federal regulators that the OCC and the Fed and the SEC and everybody else that looks at banks in great detail. They don't want that kind of regulatory oversight.
Agreed. How much time do you have, Chris?
I mean, I've got all night because I'm sitting in a hotel room.
We've done Joe Rogan 3-hour sessions on here.
No, I got plenty of time. I actually have a couple questions for you.
Yeah, so we'll get to those. We'll get to those. This is when it's over here. My wife comes in here and she goes like this. And it's like, I'm afraid of that 110, 115 pound woman, dude. I'll wrap this shit up quick. Sky blue skies, whatever.
I get it.
I can't even do the outro. But real quickly, let's talk about valuation, because I read. First of all, those of y'all that may not know, I feel like all y'all do. Chris, you write a lot of articles for like Seeking Alpha, and you do just a lot of research that you put out there. Like, it's like reading like Psalm 23 every time that you put something out on X. These aren't just like me screenshotting and be like, hey, we're up $500,000 a day. This is like going into detail, and this is the only chart you need to know, etc. What exactly is your intrinsic value calculation? What model are you using for SoFi? Because it's not easy to value right now, in my opinion. For me, it isn't easy to just, I think it's worth $10 a share or whatever. What metrics are you using right now at this stage in the game for SoFi? I know down the road the PEG ratio makes the most sense, but for right here, right now, how do you value SoFi? Because my intrinsic value model puts it right at about $9.50 to $10, and I feel like yours is substantially higher than that. And I just want to know, how do you get to those numbers?
So the way that I don't have like a hard and fast rule for how I like to value any of the things, like any individual. So like lots of people tend to use one method and put a lot of stock of that method, it seems to me, though I kind of like to look at it from a lot of different angles and kind of see where things shake out. So kind of one of the bigger aspects to valuation for me is that you have to take into account what stage the company is in, as far as like, what are they, a high growth company? Are they returning capital to shareholders at this point, right? Are we looking at something like, like a cigarette company who basically is just, paying a crap ton in dividends but isn't going to grow? Have they been profitable? Are they going towards profitability? If they have been profitable, how long? Because looking at a PE ratio, for example, for SoFi or even for Robinhood right now, doesn't make as much sense, because it's only been profitable, and Palantir and other companies, right? Because it's only been profitable for a short time period. So you can't look at the PE because they haven't reached their, so like if the margins, the net income margin right now is 4 or 5%, but in the future it's going to be 20 or 30%. Looking at the PE right now doesn't tell the right story. So with SoFi specifically, the things that like I've kind of looked at is, number one, I like to do like the most of the things that I look at, like I always run it through kind of a reverse discounted cash flow model. That's one of the things that I like to look at, because it gives you an idea of how much growth is priced in at the current price. It's a little more difficult with SoFi, again, because their cash flows are weird, because free cash flow is an awful metric for them because they're a bank holding company. Which is why, like, I have my own cash flow calculation that I do for SoFi that's a little bit different, that I think is accurate. But so DCF is one that or reverse DCF is one that I like to look at. If it's a smaller company, so if it's still a growing company that hasn't reached, I guess, to go back to that, what stage it is it in? To me, you want to look at the margin of whatever they've gotten to the, so like, as you're growing a company, first you optimize for revenue, right? Like you want to grow your revenue really fast. And then at some point you want to optimize your gross profit. So you want to reach your, like this is kind of the stages that they go to. So you get to the point where your cost of goods sold, you've kind of gotten to a steady state relative to your revenue. And so your gross margin is pretty steady. And then after that, you typically get to the point at which like your free cash flow margins get pretty steady. And then eventually down the line, your net income margin gets pretty steady. And so I like to look at whatever stage the company's at where their margins are pretty steady. And for SoFi, their cash flow margin is still increasing a lot. Their net income margins are still increasing a lot, but their gross margins have been pretty flat for the last couple of years. So they're at pretty much like steady state. So like price to sales is kind of the least useful, but it's what you use if you don't have anything else. Price to gross profit's a little bit better. Price to free cash flow is better than that, or price to cash flow. And then net income margin is also something that's important. So like for SoFi right now, the price to gross profit is kind of what I look like if you're talking about like standard, valuations, you just pull up one number and you want to compare it to another number. I think gross profit's probably the best number to use for SoFi. And then I also like to adjust it for growth, right? Kind of like Peter Lynch's PEG ratio, right? You take the PE divided by the growth and you get a PEG ratio. I do the same thing, but with gross profit. And then I compare it to other fintechs. And I say, okay, so, and maybe I can
compare to other fintechs. How is SoFi valued to, like, say, an Affirm, an Upstart? What's the other one? Lending Club, Lending Tree, something like that.
Yeah, Lending Club. So let me pull this up.
So how do they compare? Because to me, I always just like to compare the houses on the same street, right? Just to keep it simple for people like me.
Yeah, let me share.
Sure, go ahead.
My screen.
While he's bringing that up, TJ, I've thought about, it's difficult to value SoFi with the different sides. I've thought about doing kind of like a DCF on the tech side, and then like a separate valuation for the banking side, and trying to like bring them together where, somehow bring them together so you can get to a price, because it really does, like having it, the banking side really does. I can't value SoFi the same way that I would run like a DCF on Palantir. It's just not going to work out that way.
So Bill's a CFO by trade, by the way, Chris. Just so you're talking to him right now for these last 10 minutes.
He knows way more than I do. Then that's for darn sure.
He did one of these on Palantir, and I'm still trying to make sense of it a year later.
So this was last month or so, but it hasn't changed that much. But so this is like a price to gross profit for the trailing 12 months for assuming that they hit, like what analysts think they will, the forward price to gross profit. And then this is that price per gross profit per growth metric, right? And so if you look at these, right, and you just look at them just at high level, like SoFi is the lowest by far of any of these. And this includes, Affirm, Coinbase, Shift4, Hood, Marqeta, Encino, which are the two that are like the tech platform that we talked about. Nubank, which is the Brazilian bank. Toast, which is another payment processor, and then Upstart, which is also in the fintech lending business. But if you look at it, so here's the thing: is that like SoFi is an above average grower out of these comps, and they're also one of only 4 companies that are in these comps that's profitable. So they have more growth than most of these companies, and they're profitable when most of these companies aren't. And yet, if you just look at the price to gross profit, like it's like a third of the average. Right. And if you look at it on like, so I guess the point is, when I look at these and I say all of these are fintechs, SoFi is one of the best executing right now, and it's one of the most profitable right now. It should get a premium for those things. Like if you're a profitable company and you have the same revenues as an unprofitable company, there should be a reward for that. If your company is growing faster than other companies, there should be a reward for that, but they're not getting that. Like, not only are they not getting that, they're getting a way lower multiple than any of the other companies that you'd look up. So the kind of this bottom part is like the average, price to gross profit is 11.4. If you applied that to SoFi, it would be trading at around $20 right now, which is crazy, right? Like that, or to me, that screams really undervalued. So that's one of the things I looked at. I've looked at. I've done a reverse DCF, kind of basing it on the guidance that they've given or I've done an actual DCF. The reverse DCF proves that like they're only baking in like 3 or 4% growth from current cash flows. And then the other thing, like you can look at future peg and other stuff, but I guess the point is that like every single metric I looked at, so whether it's the DCF, whether it's this price to gross profit, whether you look at like it, assuming that they hit their guidance in 2026 and you look at a peg ratio at that point, like, and then discount it back to today's value with, call it a 12 to 15% discount rate. Every single method that I've looked at, the minimum that I get out of that is like $14. And so like, I can't like I haven't found a valuation methodology that I think makes sense where it doesn't come out to be at least like 13 or 14 bucks.
Yeah. And, TJ, kind of to bring this all together, I'm not sure what the right way to value SoFi is. What I'm pretty sure of is that I don't think it would stay below $7 for a long period of time, and I'm willing to place my bet on that fact. And I have. We talked about it earlier. I mean, it just doesn't make any sense right now. It just really doesn't. Whether it's valued at $9, $10, 12, 20, or 19 or 20, like he's saying, I'm not sure it really matters. What I've kind of focused on at this point is really just figuring out how to make money on SoFi, even if it moved nowhere.
Yeah, I know we've definitely done that. I mean, we sell puts, calls, collect crap loads of premiums, so that part's good. Real quickly, and then I'll allow you to ask me a couple of questions, Chris. What are your thoughts on Robinhood, the investment? Because everybody keeps talking about SoFi like it's the kid that's in timeout. Everybody's playing in the sandbox. It's a mischievous, ornery little kid. So you got to keep his ass in timeout so he can learn a lesson. And
that's what the stock has done, right? They're right.
Meanwhile, Robinhood is out there running wild. So I want to show something to people that maybe just have a very short memory, because the market is very forward-looking, but it also has a very short memory. Like if you do good in the market kind of forgets real quickly. If you do bad in the market on a bull run, it kind of forgets really quickly, surprisingly so. That's why you have companies like Intel, any glimmer of hope, and it goes from 18 to 22 just because there's talks of a buyout or something. Somebody's interested in giving them money. And last time I checked, I'm an investor in Intel, but the story is still pretty much in the gut. So let's just look at these companies real quickly, and let's just go with the 5-year chart, because they've been both around a little bit less than that, right? Publicly traded.
Yeah. They both came public in 2021.
Right. So let's just look at that. So where is SoFi at in the 5-year? Down 28%, 29%. I can't see that good with these glasses. 29%.
Yeah, 29.
Right? So let's just do the same thing with Hood. And this is the superstar Black Stallion child that everybody's super excited about. I'm showing my age. Black Stallion was my favorite movie as a kid. Dude, and this thing, all it's done is be down 40% in 5 years. So I'm just saying, like, show me how people that invested over here when Kathy Woods was touting it all crazy, like the next Tesla, right? Like, how have they made money? I feel like there's a lot of people still bag holding in these areas. And then there's people that have been building positions over here. And now, granted, like Amit and stuff, kudos to him, because he was touting it in the $8 range, along with Roy, Crossroads, etc. The only reason I wasn't interested in, guys, is because it was another fintech play, and I had already made my bet with SoFi. A and B, the options chain was absolutely just horrible. It was absolutely horrible. So it didn't fit the mold for my strategy. So if you invested in Robinhood over here, you're pretty excited about life. But then if we go back to SoFi, because I bought a shitload of shares over here in that 420, 450 range. So if we go back over here, and if you're invested in these areas right here, you're not that unhappy over here. You know what I mean? That's not a horrible return from these areas. So again, that's why it's very dangerous when you look at these stupid charts, because you could take you could take little time frames and you can formulate an argument that sounds really, really good for you. Like, to push out your agenda, if you will. But what do you think about Robinhood, the investment? Do you think that it's super rich right here? Because I have questions like, how are they going to, and Amit has asked this question, and I've watched that part of the interview like 5 times. And it really comes down to this for me. I didn't quite believe Vlad. Actually, I didn't believe him a lot. I thought he lied whenever they talked to him about the whole Citadel thing.
Right.
And I'm not convinced in the way that he answered that question to Amit. It just sounded too rehearsed for me. Again, this is just, I have a very critical eye and ear when it comes to investing large amounts of money. I'm not that cigarette butts mentality. You guys think y'all got to really study the way I manufacture these wins over and over. Like, I'm very, very diligent in my process. So I was just like, dude, this seems way too smooth. Like, I felt like he was a slick oil salesman type person. So what can they sustain this 3%? Like, I mean, do the metrics support that if you've studied it at all? And then what about all this crazy money, the 1% that they're giving for bringing the money over? Like, how does the math work for Robinhood? Because it's real great for the consumer, but how does it work for Robinhood, the company?
So I share a lot of the same concerns, and I haven't done a really big deep dive on Robinhood. I've listened to like a lot of the recent interviews, and I think that Robinhood is probably about fairly valued for where they're at. I think that they've executed really, really well in the last year. They've done an excellent job of getting people to trust them compared to where they were. They are also like, and the here are my concerns with Robinhood. Is number one, I'm really concerned about the credit card. We'll get to that back to that in a second. Number two is the things that you were talking about with giving out the 1% and the 3% and everything else. So I think that if we end up having a bull run or a bull market, right, like a secular bull market for the next 2 or 3 years, I think Robinhood's going to do awesome. My concern would be if we get like a 10, 15% drawdown in the market, if the recession hits, if that sort of thing. The thing that makes it really difficult for Robinhood is, so they give this 3% match, but the way that they're doing the accounting on it, they're not accounting for that in the quarter where they give it. Like, because otherwise there's no way that their sales and marketing costs would be as low as they are. Like, it's impossible. So the way that they're doing the accounting is they will give you that, like, they've got the requirements. So you get the 3% match on your IRA if you move it over, but you have to stay with them. I don't remember if it's 2 years or 3 years, whatever that time period is, right? And so what they're doing is they're expensing that account. So say I brought like $100,000 over to Robinhood and they give me a 3% match. That means I get $3,000. But they don't say, so I do that, let's say January 1st of this year is when I did it. They don't say they don't have $3,000 of expenses for that in Q1 of 2024. What they do is they break it up, and over the next 2 years, this is my understanding. I might be wrong about this, but like going through the financials, this is what makes sense to me. Someone's welcome to correct me, but I put this out there multiple times, and I think everybody kind of agrees this is how they're doing it. So instead, like they expense those $3,000 over 2 years. So now it looks a lot less, right? During the quarter that you're actually getting. So you get all these deposits in and you're starting to generate revenue on that, but you're going to be paying the cost of acquisition for 2 full years on that. So say that I stop trading, or we go into a bear market or something that makes it so that these people, like, so that they're not as active on Robinhood, and the revenue that's generating comes down. Like they said that in general, they make 2% on their assets under custody, right? I haven't verified those numbers, but that's what Vlad said. I don't think he's lying. That means that it takes them 1.5 years to pay back that IRA, right? Because 2% takes, to get to 3%, it's 1.5 years. If there's a downturn of any sort, they can't, like, that money is already allocated. Those expenses are already allocated and they can't take them back. It's not like they can pull back on like their sales and marketing spend is only going to go up from here over the next 2 or 3 years because they have like this fixed S&M cost, this fixed expense that they're going to keep paying out. So like that's one of the things that I'm concerned about. The bigger one for me, but I think the fact that they've made their product so sticky and like the revenue that they're getting from gold and everything else, they're doing a good job of making their product sticky enough where the long-term value of those customers is probably going to pay off that customer acquisition cost.
Hey, Chris, do they give you the money up front?
Yes, they do. They give you the money in your account up front. So that they give you a cash payout. But I think, like, again, I might be wrong. You could probably look at this and know it better than me. But I think the way they're doing it is they're expensing it over the entire time period, because then they can claw that back if you leave the platform.
Mm-hmm. Yeah, well, just from the pure accounting perspective, it makes sense that they would expense it out as it's kind of earned, right, by the customer. So like, let's say it was, 1% match and it's over 2 years. And so whatever that amount is, it would go over like, over a 24-month period. But upfront, the accounting would have to be that if they put the cash in your account, it's a credit to their cash, so it goes down. Something else would have to go up. So what I would check is if their maybe their receivables are going up through this whole process, and then as the customer earns it over time, their receivables are decreasing and it's going to the P&L on the expense side. So for
the 1% match, that you do earn it out over the time period, so you don't get it all up front. But for like, so it's the 1% deposit.
They don't give it to you right away. I have some that's pending, $6,700 is pending.
But that's on the 1% deposit match. Like if you deposit money,
they had a 1% boost, I think is what it's called.
But the transfer happens immediately, because I transferred when I transferred my account, I took advantage of that, and they did pay it up front. So maybe, and I might be wrong on that. So like,
yeah. If they do pay it up front, there has to be an offset of it. So if you earn it over a 2-year period, there has to be an offset to like a reduction in their cash because they've transferred the cash to you. And my assumption is that for that, in those situations, their receivables are going up, and then the receivables drop as the person earns it, and then it goes to their P&L, to the expense side. Because you always have to have, that's the nature of accounting. You need to debit it and a credit for like that hit somewhere. So my assumption is that I'm wondering, maybe I'll check it at some point, if their receivables are going up to offset those. And that's why you're not seeing it in the expenses all up front.
And then, okay, I'll have to look into it, because I don't know, honestly. Like, I haven't done the type of DD on Robinhood that I have on SoFi because I don't own it, right? So it's never been a priority. The bigger issue for me is their credit card. Like, I don't understand how that's not a massive loser for them, because the interchange revenue you get from, when you swipe a credit card, you get interchange revenue. But the interchange revenue that you get from something like the SoFi credit card is like 1.5%, maybe at the most, maybe 2%. But they're giving out 3% cash back, which means so I am a Robinhood card holder. In fact, I used it today, right? Like, so here's my Robinhood gold card.
The actual gold card?
No. I just have I don't have the real gold one, like
Amit. So what do you got to do to get that one? Because I feel like I'm qualified to have one of those, and I got the one that my platinum card from Amex probably weighs more than the Robinhood one. I thought this Robinhood one was supposed to be like the real deal, like a gold bar.
Only if you like get a bunch of people to sign up for gold.
So I got to be a network marketer. Got it.
Yeah. You got to be a network marketer. And get like, I think it's like 10 people or maybe 15 people to sign up for gold, and then you can get the actual like 15 karat gold card. Anyway, the point is, every single time I use this card, Robinhood loses a bunch of money on me, because I pay off my credit card every single month. They are paying me like if I spend $3,000 in a month, Robinhood lost $30 on me that month as a customer. And I don't think that I am still an active trader, but I don't think I do enough trades to justify that cost and pay for order flow. And then on the other side of so here's the part of the equation that I really don't get is you can lose money on the transaction if you make it up on the interest rate, right? So if you're paying, like, if people are holding a balance and they're paying 30% interest on that balance, then you can make up for a lot of 1% transaction fees. But anybody who's savvy, so they've given this to people who are gold members, and gold members only pay 6% margin, right? In interest on their margin. Why would I? So if I'm a gold, if I were carrying a balance, I wouldn't carry that balance on the card. I would carry it on my margin account. I would just pay off the 30% fees on my margin account, and then I'm paying 5% on that margin rather than paying 30% of my card. So now you're underwriting. So Robinhood's first of all, they're losing money on every single transaction that anybody makes. And then second of all, now their underwriting has to be 4 times as good as everybody else, because they're not charging 30%. Like, if their customers are savvy, they're not paying 30%, they're paying 6%. So I don't understand how the economics on the card work, other than it being a massive loser. And that's one of the things that even SoFi, SoFi's gotten their credit card wrong. It's one of the things that they haven't executed well on. And it's got they say that between Invest and their credit card, they are losing, call it $100 million is their run rate of losses on those 2 products. And SoFi knows how to do underwriting way better than Robinhood does. They've been doing it for over a decade. So and then Goldman Sachs dropped the Apple Card for the exact same reason. They were losing a bunch of money on the interchange. They lost like $2 or $3 billion on the Apple Card on that deal. Like, if Goldman Sachs can't get it right, and if SoFi can't get it right away, if Robinhood gets this wrong, it's not just going to be a loss leader. It's going to be a huge problem. And I don't understand from a unit economic standpoint how the credit card can be anything other than a huge loss leader. That's what when I look into investing in Robinhood, like, maybe for a short-term play, it would make sense. That's my concern long-term, is what they're doing with the credit card and how that ends up hurting them, because they want to give it to every single gold member. Like, Vlad has said that outright, which means that you're ignoring kind of if you give it away to everyone, it means that you're underwriting everybody, and not everybody should be underwritten. So anyway, then the reason I didn't.
So the credit card, though, for SoFi, because it's lost about $100 million. That's documented on the income statements, right? Didn't they inherit a lot of that business as part of the bank charter, though?
I don't think they did. I think most of it was them starting their own. So I did ask about that at one point, and they said that most of it wasn't from the legacy. It was from their customers that they gave it out to.
Wow. Yeah, I don't understand it, dude. So just real quick, let's talk about artificial intelligence and SoFi a little bit. How do they vet customers? Because they gave me a $4,000 credit limit.
I don't know.
And it is comical to me. And I use it. I still use it because I'm proud of the company. I'm proud to be a part of it. I convinced myself that I'm just too old for them. Like, they don't even want me. They want the Henrys. They want the high earners, not rich yet, probably under 40 years old. Like, I created all of these prejudices in my mind just to justify that maybe my credit score is not high enough for them, or they don't like my debt ratios. We bought the house. We bought all this other shit recently. Maybe they just don't trust me. I don't know. But how do they vet customers, dude? Because it's like, I feel like it's just a machine. And is it no different than just like they look at your FICO score and call life good? Because I thought that they were tracking a lot of things that I did financially. So they should know like who you are a little bit more intimately, if you will.
I'll tell you what they say they do. What they've said is that they underwrite to cash flow, which means that they look at like the cash coming into your account, the cash coming out, and that's how they determine. In addition, so they do, like, they've got a minimum cut off on FICO, but above that, right, they'll look at your cash flows in and out and determine how much to give you. This is on their personal loan underwriting. I assume that their credit card is similar. I actually did ask.
All the accounts that are linked in that SoFi relay, are they looking at everything?
They're looking at all of that, and then they have access to other information as well, just when they pull your credit and other things.
I mean, surely they got to see the house that we just bought. Surely they got to see the fucking Porsche on my credit.
Listen, I'm with you on this one.
There's some clues there.
The credit cards don't make sense to, like, I think so. When did you apply for your credit card? Is the other thing.
So I've had it going over 2 years, and we closed on this house not even a year ago, and the Porsche is like 6 months old. So a
Yeah,
lot of
they
that was
don't give limit increases. So
yeah,
like this is another thing. They haven't done a good job with their credit card product.
yeah.
Like just honestly. And so, but I would that it seems like they're trying to lean into it more with the newer cards. I actually think they're probably rejecting a lot of people on the older card because it's a better like it's 2.2% cash back, which is actually really like pretty high rewards. And the
Yeah.
newer ones have like are like overall, if you only use it for dining or whatever, then you can get 3% cash back. But I think that they're looking at the unit economics of that 2.2% cash back card and saying we need something else that doesn't like that has better unit economics for us. That's kind of just my interpretation. That's just my opinion, right? That's not based on anything other than what I think. Um, but the credit limits don't make sense, but they also don't make sense for Robinhood. So my credit limit on my Robinhood account, I think it's like
35,000, right? I saw
yeah,
it
it's like
on
35 grand or something. And I have like 5 or 6 credit cards, and none of them are more than like most of them are around 12 grand, 14 grand, something like that. But
yeah.
the like Robinhood just right away gave me this massive limit. That like I don't spend that much. It's way more like than I need, right, for my own personal use.
Sure.
But yeah, I don't know. I like that's what they've said. They said that they underwrite to cash flow, and possibly it could be because like you have uh what's the right way to say it? Unconventional cash flows, right? Like because you basically, buy and sell calls for a living or buy and, you
Yeah,
run
but
the wheel for a living.
that's not entirely true because I have a salaried position as well. That's $17,000 a month. That's W-2.
Well, in that
So
case, you're
I have
making
all of this
ridiculously.
going for me
I have like a $14,000 credit limit on my SoFi card, and you probably have like at least 10x my income overall. So I don't know what to tell you, right? Like,
Yeah. I might need to change my last name, bro. Wyatt is
yeah,
right.
maybe that's it.
I'm not even starting that narrative, guys. It's a joke. Like, relax. I don't know what it is. I really think that I'm 49 and I didn't always have my shit together financially. There was a child support blemish on my credit for several years. Uh, for those of y'all that don't know, my daughter took her life, and there was an outstanding payment on child support, and I just had a hard time paying it. Like, just wasn't a financial thing. It was more like a spiritual, physical, emotional, psychological thing. And I was like, it was like that closure that I wasn't quite ready for. And it didn't happen until like a couple of years ago. It was on my birthday. And I was just like, dude, I gotta like this is like ruining this aspect of my life now. I feel like I'm kind of healed. So it was like a spiritual cleansing to make that payment. I think I even did a video about it on my channel or might have posted it on X, but it was weird. It was weird. Like I was like, man, it's like that last student loan payment you made. For those of y'all that don't grow up with money like me, we had student loan debt. It's like such a like, wow, I feel unfettered. You know what I'm saying? Like one of those things. And so I feel like maybe SoFi looked at that, and that was like definitely irresponsible on my end. So I don't begrudge them for that, but I mean, I don't. It's not even on my report anymore. But I feel like they just haven't taken another look at me. I feel like if anything, they would have offered me some credit line increases to like 7 or 10 grand. Like, give me something that I could work with. Because you go and you have a couple of dinners in Vegas, and you're already at like 30-40% of your debt to income or whatever on that particular card. And it screws up my credit, dude. Like, I literally, when I try to use my SoFi credit card, my FICO will go from like 770 to like 720 because I'll get like a credit usage alert. And I'm like, dude, I can't
Yeah.
use this card. It's not functional for my life, dude. It's comical. It's absolutely comical.
Yeah.
So
No, I'm with you. I hope that they say that they've kind of figured they feel like they have it figured out and they're ready to scale it. So we'll see what happens. I also think generally speaking, I think that one of the reasons that we haven't seen as much innovation from SoFi is because they're doing so much on the back end right now.
yeah,
That they're bringing everything over into the core. And I think the majority, like, again, this is just me talking. I don't know that this is the case, But I think that a lot of the stuff that's going on the back end is taking up a lot of their R&D and a lot of their engineering time to get everything moved over. And then once they've done that, then hopefully we'll see, an increase in the innovation and in the products that they go to market with. But we'll see.
I gotcha. Well, before I think of other topics, shoot me over some questions, my man. Interview me.
All right. So here's what I want to know. So you talked about, I was watching Finance Junkies, and you were talking about like being able to, you need like a $250,000 account to be able to do this full time, make it make sense. So my question is, I am despite the fact that I invest in companies like SoFi and other things that people would consider risky investments,
Right.
I'm very conservative when it comes to debt, right? So like I've always paid off, like I've paid cash for cars. The only debt I've ever really taken in my life was
Mortgage or something?
was a mortgage, right? Like even student loans, like my wife and I worked our way through college and paid for our own tuition.
Good for you.
Um,
Good for you.
and everything else. So like I didn't even have student loans or anything like that. I have an aversion to taking out margin. So here's because you say, if you get up to 250K, then when you're using margin on your account as well, right, then you can start to generate the cash flows. What level? So say you've got a $250,000 account, right? Just hypothetically, when you were running these numbers, what type of collateral would you have? Would you draw on that $250,000 account to be selling puts against, and how do you manage those positions? Like those are the things that, like me personally, I don't like when I sell a cash secured put. It's a cash secured put. It's not a naked put on margin. And so, like, how do you manage that? And then, yeah, just that.
So what you got to do is you got to look at where your account stands, right? So let me see if I can pull up real quickly. Let me just make sure.
TJ, we just talked about this the other day. Remember, I came on in the middle of the day. I said, "Clip this."
4% of the whatever.
He gets this question three times a day, and I tried to answer it. No. It's a question that I understand why people want to know.
Yeah, no, dude, because that's the number that I told my son. Like we sat down in his little fancy little Model White Tesla. So real quickly on that off topic, dude, I have talked a lot of shit about Tesla cars, okay? But I have sat in my son's car 2 or 3 times. One time when we bought it, 3 times no. Bro, our Porsche Panorama is stupid compared to that Tesla Model Y. Like, I feel like for the amount of money, $140,000 that's sitting in that stupid garage, it should do a lot more because my car reminds me of a show called
is it Knight Rider?
I was kicked. A real good looking dude named Michael Hasselhoff. He was a Baywatch guy.
I know, Mike. I'm older than I look. I know.
It was a Firebird. Can y'all help me out in the chat?
Was it Knight Rider?
I think so. It's a black car named Kit. And the car would like talk to him. Yes, thank you.
It is Knight Rider. Okay.
So Tesla's like the modern day Knight Rider. You know what I'm saying? It's like you essentially have a freaking car that's Siri that drives your ass around and helps you drive for the most part. And the Porsche, the only thing that it does is if I'm approaching the lane, the steering wheel does this kind of weird shit, makes me think I'm about to have an accident. It's like on the motorcycle, we call it the death wobble. You don't want the death wobble on the motorcycle when you're like speeding and there's like this shit with like aerodynamics and centrifugal force and stuff, and you get that death wobble, and it could be the end of you. It's happened to me a couple times. It really, really sucks. Well, the Porsche, that's the only thing it does. It has like a little lane assist for me, and that's it. My son's car will literally be like a foot from this side and a foot from that side, driving like perfectly down the middle, bro, navigating turns and shit. I mean, it's just a way smarter car than mine. And you recently
love my Tesla.
You bought a Model 3 Tesla, yep. And it's probably the best car you've ever owned, right? In these
by far. Cars. I don't ever want to drive anything that's not like so we've also got a van, again, 5 kids, right? So I need something that has at least 7 seats in it. Right. And I loved our minivan until I bought the Tesla, and now I hate driving. Like I wasn't prepared to viscerally dislike driving anything that isn't a Tesla.
Mm-hmm.
and that's where I'm at now. Like I don't want to drive any cars that aren't Teslas, just because it's the Robin Hood UX of driving. It's like, honestly, like, or even better, it's like an iPhone, like using the iPhone UX compared to what it used to be, like a BlackBerry, which I owned way back in the day. Like, it's just that much better. It's just all the little things that make it so much better to drive. Anyway, that is what it is.
So going to this real quickly, and how did I come to this determination? It was just it's a lot of experience, right? I'm going on my 5th year of doing this full time. But essentially what happened is it comes down to your buying power and where you're at. So like here, there's the individual cash. There's the margin that Robinhood is willing to loan me based on the entirety of the account. That's where do you stand with your current open options? Where do you stand on the shares that you own? Because you obviously know that there's margin maintenance requirements, and those are different based on all the underlines, right?
Right. Yeah.
So
all that.
So picking 50 and 25% stocks, meaning the SoFis of the world, not even Tesla, because Tesla is not a 50-25 stock. Like you're talking about stocks that probably Amazon might qualify. Like I'm thinking off the top of my head, I don't even know if Enphase is a 50-25 cent stock. These are stocks that your brokerage is like, we ain't even worried about it. Bring the shit to the pawn shop. We're gonna loan you money against these because we know these companies aren't going out of business. And for those of y'all that don't know what I'm talking about, real quickly, just to bring the point home, whenever you go to a stock, the very first metric that I look at is this metric to see whether or not even qualifies to sell cash secured puts on. It's this little metric right here. What's my margin requirement? It's a 50-30. So you see 50-25. So SoFi or Robinhood recently changed this probably within the last week or so. And that is where you can get in trouble with this strategy, full disclosure, because if your brokerage, and they reserve the right to change this at any time, if they change you and put you at like 60-50, you can blow up your account overnight. So just keep that in mind before I go into this. But I look at the cash that I have, I look at the margin available, and then I look at the options collateral, and I look at my buffer. So essentially, I could have a 1.76 drawdown before things would get problematic. So then I have to look at my collateral, and I'm like, okay, where's that collateral at? Like, how at risk am I of owning shares? So Hood at 21, not a lot of risk there. NVIDIA at 110, not a lot of risk. Riot, that's a big position. It's 140 grand at $7. So let's look at it. Not really a lot of risk. It's probably about a 35 delta. Yeah, 38 delta. And it's very manageable. I could easily roll that one down. And then I just start looking. Enphase at 100, probably about 105, 108. Yeah, that's about a 35 delta again, 30 delta. There's not a lot of risk there. So I don't have any cash secured puts that are causing me a lot of stress here in the near term. Now, if I go out in the distance, I do have some stuff where I went a little bit more risky. Like I have this clean spark at 750 for January. I got these Neo $5 puts for January. These open doors at 150, open doors at 2, open doors at 3, open doors at 350. But it doesn't really add up to a whole lot of collateral, relatively speaking, to the size of the portfolio. And then I've got stuff Riot at $7, a real big position there, 420 grand. There's 200 grand at $10 though. That's problematic. There's another 180 grand at 9. And you just start going down the road. There's 800,000 at 8 on SoFi. I feel real good about that one. And you just go down the road. So I asked myself, if shit hits the fan, what would I do? I would just close out the puts that I'm winning on already, lock in a win, give back some premium, free up all the cash, stay away from any margin issues. And then I would manage the positions that I'm not winning on, roll those to like instead of having Riot at like 10 and 9, I would have it like at 8 and 7 so I could sleep easy at night, etc. So you just have to manage it. So if you're dealing with, like, say you're selling SoFi puts and you want to do them on margin, you got to pick that area of support that you're willing to, like, quote unquote, die like with your sword, so to speak, right? So to me, that area, if I was selling, like if I had to do $1 million cash secure put on SoFi right now, I would probably pick $6.50 because it's real hard for me to believe, even with a pretty substantial drawdown in the market, and SoFi coming on their fourth quarter of GAAP profitability, so that now for the last trailing 12 months they're GAAP profitable through and through. So now a lot more hedge funds are able to jump in. There's a lot of people that don't understand that there's some hedge funds that they don't just wait for GAAP profitability, they wait for four quarters in a row before they'll even consider touching the company. And then there's other funds that they're not going to touch a company unless they're actually buying back shares of it. Like the float has to get smaller. So there's probably 25% of the funds out there that would never touch SoFi, or at least not for the next 5 years, because I don't think those things will happen within the next 5 years, right?
So you don't like the $7 strikes?
No, but I'm saying if I'm doing it on margin and if I'm very conservative, I'd probably be going like 650s and I'd be grabbing a shitload of premium like 90 days out. But if you just do the math, dude, and so if you have a $250,000 account, it's going to essentially trade like a $400,000 account on average. So if you just do the math and you shoot for 3% a month, I shoot for 4, but you're more conservative with your deltas, and you shoot for 3. Just do the math on that. What is that, Bill? 3% on 400 grand. I think it's something like $12,000 a month.
Yeah.
So let's just say you screw that up by half. You're at 6,000. Let's say you're somewhere in the middle. You're at about 8,000. That's $96,000 a year. The majority of Americans can survive comfortably, almost even thrive if you're responsible at that $96,000, $108,000 a year. You're in a unique situation because you have 5 kiddos. So just not knowing anything about you, but knowing what it would take to do 5 kids and everything else, and living in a beautiful state like Utah, I think you probably need more like the $150,000 to $200,000 range to where you're not really stressed out. So I would say just on that information and drawing generalizations that I know about lifestyle and everything, I think that you probably want to shoot for having more like 300 to 350, so that account could trade more like $500,000, and then you would be able to generate, in my opinion, chemical engineer type money, just knowing roughly what they make without knowing your situation. Because you alluded to potentially it's kind of like a startup. I don't know what kind of incentives you have for working in a company like that. I mean, there might be, you might have your own PSUs like Noto, right? I don't know.
I do not. But, well, we do have, anyway, there are actually milestones that we can hit it that would like lead to payouts and stuff, but that's neither here nor there.
Yeah.
Anyway, but no, so basically you manage it. You don't have like a hard fast rule where it's like, I'll take, if there, if my margin is, call it 4 million, then I would take 50% of that, or 60 or 75. It all depends on what is close to the money, what's out of the money. And then so you basically manage on like a case by case, position by position basis, how you feel
really clear. And that's where the tracker comes in handy, because it tells me what puts are in the money versus out of the money, gives me all my percentages. So thank Bill White and Troy Hutch for that, because I have a lot of metrics that I look at on a daily basis. And so that tracker is essentially my guide. And then I just kind of like eyeball everything. But also, I don't normally use this much margin to sell cash secured puts, but there's another $1 million going into the account very soon. So I already started acting like it was in there so that I could get a little bit more alpha out of the portfolio.
That makes sense. Because I've got like collateral on margin, like on my Robinhood account, but all of it I have in a savings account, right? Like it's technically not a cash secured put, but if tomorrow the market crashes and I got assigned every single share that I have right now, cash secured puts put on, I could go and put that money in my Robinhood account and I'd be fine.
So I don't have this metric. This is something that down the road, I'll see if I can bribe Bill into putting on, because this is like, now that shit I ask him for, like I already owe Bill probably $10,000 or shit. Like this dude, I'm constantly asking him to do shit for me that you guys don't know, right? Like this thing's going to be on steroids, and we're probably going to make it available as some sort of like a QuickBooks thing, because the shit I'm asking him to do, it's just stuff that you can run corporations off of now. But I want to know how much money I make off of selling cash secured puts on margin, because I think it's in the neighborhood of about $500,000 a year that I wouldn't qualify for, because I simply wouldn't have enough money to do. You know what I mean? Because you
probably wouldn't be able to get that answer, because you'd have to decide what trade put you into margin,
right?
And it's impossible to pick that. You see what I'm saying? So
But I think that there's a way to go back for 12 months and be able to look at the entire spreadsheet and be like, this is how much margin you used historically. And roughly that's about how much premium it generated. Because I really think it's about $500,000. It could be more in premiums.
So Chris, I don't know if this will help you, but if you think about it, like if you had about $250,000 in an account, just like separate account, the second you put it in there, Robinhood's going to give you margin, right? So your buying power is going to be higher than that.
Right, exactly. I understand all the math that comes behind that. Yeah.
So but let's say you just don't even have to worry about taking ownership. Let's just say you were adverse of taking ownership of stock ever, and you didn't have to worry about the margin maintenance on all these different shares. Your goal was to never be assigned shares of a stock. Then all you're doing is selling cash secured puts, but you're managing your trades. What percentage do you think you can make on your money? Like dealing with a SoFi, I can tell you right now, if especially with how I know you feel about it and what type of money you can bring in from selling puts,
about 30% a year.
You could easily bring in 20 to 25% a year.
Yeah.
Right. So what we've told his other viewers is because he constantly gets the question, what type of account would I need to bring in $100,000 a year? Because people are looking to just not work. They want to be able to do this. Well, you can easily bring in 25% a year on just cash secured puts, collecting the premium over and over and over again. Then you just take that 100,000 divided by 25%. It's going to tell you that you need an account size of about $400,000, but it doesn't necessarily. You just need $400,000 disposable to you. Like some of that's going to be in cash, and some of it's going to be in the margin that you get from on that cash.
And it's also going to be in share ownership.
But I'm saying let's just take that completely out of the equation. Let's not convolute it with margin maintenance and things like that. But so if you just said I never want to own shares, I'm just going to sell cash secured puts in one of your accounts. It's that.
So if you're going to do that, in the premise, like Bill was saying, that you want to essentially everything's either going to expire out of the money, you're going to buy to close, you're going to roll your losers. They've done a lot of back testing with my trades, and it ends up being about 2.9% per month. Because whenever you roll, you lose some of your alpha, right? Because that initial trade pays you a lot, but then you lose a lot on the roll because the time value of money is not quite there. On your cash on cash return is no longer the exact same because now it's not the same trade, right?
Right. Yeah.
So it ends up being, for me, rolling in everything. And if I wanted to just avoid assignment, I'm at about 2.9% a month. So I'm very aggressive. So most people would probably be closer to 2.5%.
Yeah, I always say if you can if your goal could be 2% a month and you were just doing cash secured puts, that's 24% a year. That's close to the 25 we just talked about.
Doubling the market. You're doubling the market.
Yeah, no, that makes sense.
So saying you should clarify there's a difference between trading with margin and trading on margin. Exactly. So I use margin to sell cash secured puts so that an account essentially trades like it's on steroids. Like this account probably trades like closer to 10 million versus the 7 that it's at right now, so that I'm qualified financially to sell more cash secured puts without actually needing that cash in the account. I essentially use the shares and the cash in the portfolio as collateral via the margin. So instead of doing 100 contracts, well, maybe now I can do 150 or 200 contracts. So now I'm able to grab a lot more premiums because I feel that damn confident on those positions anyway. I feel like I'm not going to own these shares anyway, so I might as well milk it for all the margin that I can. And that keeps padding my individual cash. Like if I wasn't still buying shares, that individual cash would go to $2 million probably between Q1 and Q2 of next year. But I'm not done building some positions, right?
Right.
So keep tapping into that individual cash because I recently barely finished building out the riot position. And there's a couple of other positions like I've considered doubling the hood position because I think hood right now is a very sexy trade. I'm not convinced that it's a long-term investment yet, but I think that I think there's 70 to 100% to be made on Robinhood at these levels if things click because they're just it's a very sexy stock right now. It's very compelling, and a lot of people are moving big money over. I think that if they figure out a way to start paying you on your cash secured put collateral, these legacy brokerages are in some serious fucking trouble.
Yeah.
Because
I got to take off
they come with
because
data that people want. Like, hey, show me what my intrinsic and extrinsic value. I'm tired of looking and calculating, watching TJ's channel on board to death. Like, just tell me, give me these metrics that Tasty Trade gives me. Give me the IB rank for Pete's sake. You know what I mean? Like, give me things that are really, really important. Man, if Robinhood can come with that kind of information that's at your fingertips and you don't have to go to like 2 or 3 other platforms the way that I have to go to now.
Yeah.
My goodness, dude. My good. Let's just take it from Amit. Oh my goodness. I mean, that would just be, I would be so damn bullish on Robinhood if they were able to do that. And I feel like they're doing it. That's where we got to hand it to Robinhood. They're so damn innovative in comparison to our beloved SoFi. Like, they're quicker with the innovation, shall I say.
All right, I got to actually, my wife keeps calling me, so I think I got to take off.
Awesome, man. Well, hey, I appreciate you coming on. We'll wrap up here in just a second, Bill and I. But thanks so much for sharing your knowledge.
Yeah, it was great to meet you, Bill.
Yeah, keep the information coming on X, guys, and make sure to follow him. It's Data De-Investing on X over there, and then read the Seeking Alpha articles, man. They're really, really help you out with the due diligence.
All right, thanks, guys. This was fun.
Appreciate you, man. Thank you so much.
Take care, Chris.
Dude, what a cool dude. What a smart guy, right? Like, I mean, just crazy smart.
Yeah,
what did you think about that SoFi valuation? Because man, I feel like he's making a lot of sense. You know what I mean? Like, I mean, is SoFi really this undervalued?
I like the fact that he's kind of branching out and looking at like kind of a different way to look at it because, you know, like we're saying, you can't value it as a bank and maybe not as a full blown fintech. But, you know, how do you find some sort of middle ground? So I think he's just looking for a creative way to do that. You know, I think the more realistic way, and this is why I always say I wish SoFi gave us better details on their invest platform and the guidance on their invest platform, because then you could value their tech platform, because you could value the tech platform by a DCF and kind of like build in some growth, and then give like the banking side some sort of like banking, you know, valuation, and then find a way to combine the two. And I think he's just trying to come up with a creative way to do that. So I'm all for it. You know, I think it's the number was a little bit higher than I would be willing to put a value on it, but you know, there was definitely logic behind what he's saying and what he's thinking. So I mean, I'm all for, you know, any and all ideas. Yeah, I understand why he was doing it. It made sense.
For sure. I want to talk about this right here because, guys, I'm going on my 5th year of doing this, but I have a lot of help because of the fund. So there's a lot of people that do this at much higher levels that monitor the portfolio almost on a daily basis. So if I didn't have that foundation, that backing, if you will, I'd probably be a lot more conservative. So that's why, yes, I've been getting the 2.9, you know, I'm actually, dude, I mean, I'm I'm afraid to show these things, right? Because I don't want, like, the one thing I don't like to do on this channel, dude, is lead anybody down the path of destruction, because because my results probably not going to be your results. Why? Because we don't have the same genetic makeup, and you might not have the same financial backing and all that stuff. But that's total. That is total. What do you want to call them, Bill? Premiums collected for the year, 3.1. Total debits is 2.4. So I'm not keeping a lot because I bought 964 worth of leaps. So that has to come from over here. Like that has to get added here. Maybe the accounting's not exact, but I just do shit pluses and minuses because I keep things simple in my mind, right? Like this money came from here, so I didn't necessarily have to put it here, but either way, it's like it's tit for tat, right?
It went out the door. I mean, you have to look at it as you paid a premium.
Yeah.
But yeah, if you weren't buying leaps, it would look a lot better.
Yeah, but then I wouldn't have the leaps, right? So there's that. And then those leaps are worth, 1.1. So I'm doing okay there. I realized P&L 213. This is as of yesterday. The share cost is 6.6. The value of those shares is 7.2. So there's an unrealized P&L on the shares there at 608. And this is all from January the 1st, 2024. So, I mean, just bottom line, fucking crushing it. But I stayed with the same stock over and over and over again. I don't have shiny object syndrome. How many times have y'all tried to shove a ticker down my throat and I'm just act like I got gag reflex? You know what I'm saying? Like, I won't do it because I know the work that it is to really dig in. And I also know the amount of money, the courage, the conviction, the capital that it's going to take to manufacture that win if that trade goes against me. Because I always assumed that the trade's going to go against me the first couple of times, Bill, because, dude, if I was that good at picking the bottom, why are you going to sell puts? Just buy the bottom. If you're that good, why are you selling puts? You're wasting your time. You're not getting any alpha there aside from the premium. There's nothing else mathematically you can get. So I already know that I'm not that good at picking the bottom, and I certainly can't pick the top. I mean, hell, that's even harder to do than the bottom, I feel.
I am surprised sometimes how I'm not able to convince you to look into certain stocks, and then I see you in Neo. And don't get me wrong, I understand Neo's going to probably work out for you, but and then I've realized over time that there's no point in me. Like, I'll throw it your way, but I'm not going to try to convince you. You've gotten comfortable with something, and I've realized that I do the same thing to other people. They'll give me a stock, and I'll brush it off like they don't know. Like I just don't care, but they're probably right. But when you get in a groove, when you're wheeling, you get in a groove and you get really comfortable with the stocks you're dealing with. You don't even want to get caught, just like venturing off the path almost. And
it's because selling those puts, like for instance, there's a couple of stocks that I've been farting around with, right? Let's just say we're casual. You know what I'm saying? Like whenever the time's right, she's got time, I got time, we'll go hit up the movie, the Starbucks or whatever. So that's like Celsius and that's Elf Beauty. Those are two that I'm familiar with. I've sunk my teeth into them a little bit and I'm excited about them. The issue is there's no room in the portfolio because I pay people to help me manage and they're only willing to help me with 15 tickets. This is Wheelers After Dark, so y'all are getting more of the truth, right? So they'll only help me with 15 tickers. So if I go above 15 tickers, I don't have my my crutch. I don't have my safety net, if you will, to help me. And what's your overall delta? What's this? What they throw me metrics that I gotta like Google when these people are talking to me. You know what I'm saying? Like all this position delta and portfolio delta and what's your beta and all this other bullshit I call it. But it's important to have smarter people that I have access to. But for the program that I'm paying for, it caps out at 15 tickers. So if I shove anything else down their throat, now it's going to cost me about another $12,500.
But are they researching the stock for you at all, or are they just giving you
it's a turnkey. It's a turnkey. And and right now it's costing $37,500 a year.
Okay. Yeah, because a lot of the stuff.
Now I'd go to 50, and then I have up to 25 tickers at that point. I've considered it. The issue is, mathematically, if you look at all the wheeling experts from years past, the account's not big enough to handle 25 tickers. And it's just too much, dude. I mean, dude, what's earnings season gonna look like, Bill? It's gonna be a fucking zoo. Like, I mean, like, if you're really into these things and following, dude, like every day, my first emails are, these are all your moving averages. This is what the Bollinger Band, dude. I literally pay people to like chart these stocks for me too. Like, it's a turnkey deal. I should get a lot, right, for 37.5. I should get a lot, and I do. So it's like you get, you call them the little quants, right? So they're giving you all of this shit on a daily basis. And then I'm looking at what looks good and what doesn't look good as far as for like to deploy capital. And then like, this is where you're light in this sector, you're overweight, etc. Because I'm always trying to work towards a balance in the portfolio. And here recently, it was like 2 months ago, they're like, hey, how is Amazon not a top 5? Like, that was like the scolding session. I pay money for people to scold me. It's kind of funny, right? But that was kind of like the scolding session. Like, hey, everybody knows that Amazon's going to have a $300 handle in 36 months. Why aren't you over there and sleeping easy at night with 25% of your portfolio? So I've been, 500 shows here, 500. I don't know what Amazon's up to, but I'm trying to build it. But dude, it's not attractively priced for me. I mean, it is, but not really. And then the premiums aren't that great, So I feel like they're gonna hurt my average, if you will. But I'm up to 2,000 shares at a 178 average, and they're like, you need to have 5,000 shares, and I'm like,
that's very easy to say because I've gotten in and out of it. I love Amazon, but I've gotten in and out of it a million times because I can make so much more money selling puts on. Really, I mean, health beauty. You just brought up I can make more money doing that than holding Amazon. So it's tough to say to just throw that one out there.
Yeah, it's tough, man. It's tough, but I like people that have results, right? And the people that are helping me. I mean, did I say the lowest one? Because it's 3 people. And I guess he's worth like about 50 million. He's got the portfolio is right at about $30 million. And then one of them's a billionaire and the other one's like at about 270 million. So it's just like when people have done what you aspire to do, it behooves you to listen. That's a quote of the day for you guys. And it was hard for me because I have this ego, I have this pride. And I feel like I have worked my way up. Let's say there's 10 rungs in the ladder for wheeling. And I feel like I'm somewhere between rung like 5 and 6 already. But there's people that are over there at 9 and 10 and probably even more. They've already created other levels to the floor. Dude, there's just people that know so much more. And it's not just about wheeling, just investing in general. They're a lot more familiar with the macros. Because if you want to be good at selling puts and calls, go learn some macros too. Like, go learn some macros. And it wasn't until about 6 months ago that I started studying the supply and demand on the chart. Dude, freaking game changer, Bill. An absolute game changer for me. You go a year out, you look for really big bars, green bars. That's your demand zone. You look at really big red bars, that's your supply zone. And bro, it tells you where the crackheads are and where the drug dealers are, dude. It's pretty amazing. And you start selling cash secured puts over here on the demand zone and covered calls over there on the supply zone. And dude, it kind of works like a charm. And then you slap the Bollinger Band on there, and it's so coincidental, if you will, that damn lower end of the Bollinger Band is always right next to that demand zone, and the upper end of the Bollinger Band is right there next to the supply zone. I mean, this shit isn't an accident.
Are you looking at the level 2 on Robinhood? Is that what you're looking at, or where are you doing that?
Yeah, all of that on TradingView.
TradingView.
Yeah, so I've been as part of my package is they show you how to like really navigate TradingView. I'm on like day 40 on like really learning all the nuances of TradingView. Probably about 6 months from being comfortable on making that a segment on the channel, because I'm still like a little confused, and because trading view is like really intricate, right? And I'm like learning all of that stuff too. And so the channel, like as I get better, I'm gonna be able to give you guys more info. But I pay for the education, because there's a lot you can learn, right? Self-taught, all that. That's all fine and dandy, but I paid for college. That didn't make me any money. You know what I'm saying? I needed some tax write-offs, so I found these gurus, and I thought they were gurus. I thought I was getting taken to the cleaners, but my goodness, you guys have seen if you've been following me, if you've been rocking with me for over a year, surely you guys have seen a change in my methodology a little bit. Dude, obviously the results are the results, but I feel like I'm a much better wheeler today than my version of wheeling, right? I feel like I'm much better today than I was 18 months ago. And the guy that was doing bingo and sands, I don't even know who the fuck that was, yo. My God, I'm lucky that I didn't lose a lot of money. And there was a substantial drawdown in the portfolio. Dude, got my ass kicked trying to figure it out until I was like, hey, throw some profitable companies in there. Help you out a little bit. Don't let all your biases with Google and Facebook, etc. Like, don't let that prevent you from making money off of some of these companies. It's a hell of a lot easier than going over there and trying to figure out when Clover is going to do something. And Clover worked out. That's why I'm using that one, because Clover finally worked out. Thank you, baby Jesus. Finally worked out. But Bingo didn't. Sens wasted a lot of time there. Didn't really work out. You know what I mean? And there was another one called Oxygen that I made a shitload of money. And then on like 2 drawdowns, I lost it all. So I was like, dude, I could have gotten out on top of that one, but I stayed in too long. But again, it's a shit company that it was too soon. So now it's like there's going to be another segment where I'm like, too soon, but now it comes back into the fold, and I'll give it to you a little teaser right now. Spoilers After Dark. You want the teaser or not? Give me a thumbs up if you want the teaser. There's a company that I used to be in early pre-revenue. It's still pre-revenue, but they're a lot closer. Now. So it might be time to consider bringing them back into the fold. But when I first started this process, Bill, this was the only shit that was in the portfolio. And I'm really, really surprised that I didn't lose a lot of money. And that's Archer Aviation. I'm like super bullish on this space, but I want y'all to look at those times, right? I want y'all to look. I was selling puts on this shit November the 1st, 2021, 100 contracts, got 5,200. Gave back 9,000. Where I went to school, that means you lose money, right? But then I was like, let me try it again. Did another 100 contracts, got 14, gave back 5. So all in all, I ended up making like $4,000, and I was glad to be the hell out of there. So I stuck that shit out from November the 1st, 2021 to June the 21st, 2022. But I didn't stop following the story. And now they're getting closer, and I'm like, what would some puts on that look like right now? Because in the 350 range, it's a hell of a lot easier to manufacture the win. Lower your adjusted cost basis to 0. Let me really start digging into their contracts that they had. I want to say it was with Delta or something. They had a deal to like Newark Airport. Like, there's some pieces of the story that I'm familiar with. But now I'm experienced enough to know that shit was way too early. Is it still too early now? That's the part that because I already did NEO. I don't want to do that shit again.
You're probably still a bit early.
It might be, but it's compelling. It's compelling. And but again, these story stocks, man, you got to be very, very leery, if you will, and weary with these story stocks, because there has to be some substance to these stories as well.
One of their competitors, though, is it Joby? Is it Joby?
Yeah. When does Stanford did Kristen did the research early on these companies, and she said, let's talk about these in 2025. So 2025 is approaching. And again, it's my wife doing due diligence 2-3 years ago.
Yeah. Did
So now
what,
we'll see.
what was the news on Joby today though? Someone had actually invested. There was a partnership. You know,
No, I don't know. I don't know. I mean,
it's a competitor to Archer, and I'm just saying that you're starting to see a lot of even like a lot much bigger companies invest in these companies now or become partners with them. So it is starting up. It's still early, but it's definitely I guess it's worth starting to look at it. I guess.
27% today on some news, obviously.
Yeah. So I don't know if you want to scroll down to the news, but.
Yeah, so should you buy Joby Aviation stock after Toyota's $500 million investment? Holy shit, dude.
Yeah.
Yeah. I'm just saying, this is a space that I've been enamored with. And I had already started going in heavy, but the wife, thank God for my wife and her beautiful brain. She was like, how many Neos do you want in the portfolio? That's what she asked. Because you've already got something that's literally rocket launch or crash. Like there's nothing in between there. You know what I mean? So how many of those do you want? Because surely some of these are going to crash and burn. Obviously, we all saw the IDEX fiasco on this channel. But I think now it's getting a little more tempting, if you will, because it's a space that I want to be in. I think that is a disruptive technology. Because dude, if you can figure out how to go from point A to point B 150 miles or less and not deal with freaking traffic and not deal with the hassles of checking in at your local airport, and you don't have the kind of money for like a private jet or a helicopter, and you can go 100 miles for like $300 for 4 of you, my goodness, dude, there's an opportunity there, I feel, just on the surface. But I'm like, how many of those bad boys are going to crash though? Like 2 crashes, 3 crashes, and the business is done. I don't know. Like I'm just saying, there's just a lot of unknowns there, but it's just something that I'm very intrigued by. So I wanted to do a due diligence segment, 5 minutes a day on the Jobies, the Archers of the world. There was another one called Lilium, I think, that Palantir invested in.
Yeah.
That Palantir invested in. And I just want to see if it's going to be that's why I got that thumbnail, bullish or bullshit. So I want to do a segment on that and like take y'all through the entire due diligence. And it probably takes 90 days. It probably takes 180 days. And that's why I'm not so quick to jump on y'all's tickers. It's not that I think that y'all aren't smart, but it's just I'm only paying so much money for this amount of tickers because I need help with all this shit. I'm a one-man show. So if I want more tickers, well, I got to pay a lot more money. That's why I do these little things like, hey, here's $50. Help me out a little bit. It's a hell of a lot cheaper than giving it to those guys, but those guys come correct with the info.
That's why I follow people like data-driven investing.
Facts, bro. Like, dude, their due diligence is priceless, Bill. That's why I'm generous. I've met a handful of these people, and I'm like, dude, you ain't paying for shit today. You know what I'm saying? Like, you have no idea how much money your brains made me.
Yeah, I don't think he took me seriously, but if he's watching now, I mean, Chris, if you come to Florida, please reach out to me. I owe you. I really do owe you a steak dinner. He just doesn't realize it.
Yeah, no, absolutely, man, absolutely. And just to reiterate here, like, because we talked a little bit about margin or whatever, like, guys, I don't own shares on margin aside from on my son's account. I sell cash secure puts on margin, so please don't be going out there and blowing up your accounts or anything like that. That's not what we condone on this channel. You want to be really, really responsible, man. You want to be responsible. This isn't a hobby. This is a business. Businesses can make you money. Hobbies can lose you a lot of money. Go ahead.
I've gone on like into margin one time, and it was done purposely.
Yeah.
I mean, I think if you really have an understanding of what you're doing, and you have a plan to, if things go against you, react to the environment, I think it's pretty tough to actually get in trouble. It's when you don't know what you're doing. I think is
Agreed. So, Bill, I was on you remember Matt from the Bulls and the Bears?
yes,
He does a quarterly report on his channel, kind of like an earnings report. So every 3 months, it's really cool. I thought about uh, stealing that segment, if you will, and doing it on this channel as well. But I asked him, what are three things that you learned this year? And then he answered. He gave me a couple of answers because there was only like 6 to 10 people watching his live or whatever. So I just wanted to chime in, show him some love. But I'm always that's what I get asked. So some of the shit that I give you guys, it's what really rich people have given me, right? So that's how life works, right? You learn something, you teach it. Right? So these are questions. These questions were asked of me recently, and I was finally able to give them my answer. They gave me a week to sleep on it. But they're like, what are three things that you learned this year that have made you better at your craft? So, Bill, I want to see if off the cuff you can give those answers, subject to change. But what are three things that you've learned this year that have made you better at your craft, you feel, going forward?
off the cuff. Damn.
Right? It's a hard question. I know.
Um, I would say definitely utilizing backstop trades a little better, getting in and out of them and knowing when to get in and out of them and not wait until trying to earn all the money in the contract. Because I flipped my backstop trades maybe like 3, 4, 5 times, and if the return that you can get from doing that, assuming that you're doing it in a profitable position, that is definitely one thing that has significantly improved my returns this year. Utilizing the backstop trades and the money that you get from the backstop trades.
I feel like that's one contribution that I'm going to have eventually on the stock market is that backstop trades is going to catch on.
Yeah. And I kind of walked into like that concept, but I didn't call it a backstop trade. It was just like, man, I want a bunch of money up front. So, I guess a second thing would be being a little bit more open to owning more stock. Um, for a long time, I would either truly wheel a stock or um, really try to not take ownership. So, but what happens is that if you're constantly pushing the dates out on your puts, yeah, you can knock it aside and that's great, but your actual return, your premium return goes down for the next couple months. So maybe just getting a little bit, I've done the research. Don't be so scared to take ownership of stock, especially at prices that you're very willing to own that. So I have been more willing to just take ownership rather than trying to kick the can down the road. And I would say the third thing would be just really embracing, I guess, like the community, even like the community that like you have, and being willing to just kind of uh, listen to what people have to say, even if their account is a lot smaller than mine.
Yeah.
Just you can get a lot of gem of ideas kind of in the most unexpected places. So being kind of open to really embracing the community, I would say, is definitely helped me.
Agreed. So the three things that I've learned this year are not to get overly emotional about stocks. If there's another way to have the same exposure, it's about proper capital allocation. So I had to eat crow on this channel when I showed y'all that I buy leaps because I always used to buy them offline. So I felt like I was betraying my audience because I've said I want to be the casino, not the gambler. I don't know how many times. But owning shares on a non-dividend paying stock is not a very efficient use of capital, probably 8 out of 10 times. Buying those leaps and running the poor man cover call campaign and keeping the cash on the sidelines to sell your bread and butter, which is cash secured puts, is just mathematically a more efficient use of capital. And you can roll those damn leaps for if you're down on the stock, you're going to be down on the leaves. So what's really the difference? It's a psychological component that I had to get over. Was just being true to thyself and being true to my little audience that there is a time and a place to buy some leaps. And it also helps to really protect you if you want to be very aggressive selling covered calls as well. So I guess it was like a confession that I had on this channel, if you will. We marathoning now, baby. We marathoning. Dougie Dollar, welcome.
Doug. Hey, Doug.
Hey, how's it going, guys?
Thank you so much for showing up because I am going to have to leave in about 2 minutes and I don't want the marathon to end.
Okay.
So the second thing that I've learned was, and this one was hard. It's easy for me to tell them. It's a little harder to tell the audience, right? Because, this is more people than we normally get on this channel, right? Is at the end of the day, my responsibility is to my family and the portfolio, not to you guys.
That's
sometimes
true.
Sometimes I felt like I was pressured by what the chat was going to think about me if I chose to exit a position because it was the best thing for my situation. Because it's a publicly traded portfolio, but it is not the public's portfolio.
That's true.
And dude, it was hard for me to come to terms with that, guys. Because
it really shouldn't be though, man. It shouldn't be hard.
No,
you got to take care of your family.
No, I know, but I'm just saying there's a sense of loyalty that, dude, I know that there's other people that know a hell of a lot more about SoFi than I do, but you're not going to name me another retail investor that's got more shares than I do. Because I like to know him. Come on the channel. Let's have a cup of coffee.
Well, you know what's great about this is it's not just TJ the Wheel Deal knows I sell puts, I sell calls, I collect premium. Okay, right. we got to know you. We got to know you with that. But now we're getting to see you, an experienced guy who made a lot of money and manages a lot of money. We get to see you continue to learn new things.
Yeah.
And so that's what's interesting with your channel, and that's another thing that makes like Amit's channel very interesting. Think about how much we've seen him learn, right, over the last 24 months. Right, like 2 years ago. He didn't know what delta meant, or he didn't know what implied volatility was. Okay,
market cap.
Yeah, he didn't know what market cap was. Now look, he can go all day, right? And you're the same way. You've learned new things. You've learned about backstopping that cash. You've got that cover call, but you're gonna buy another tiny call a little further out of the money just to make sure. Oh man, if that cover call goes against me, I want to make sure I get a little bit more on the backside there.
Yeah.
Right. So, that's TJ evolving, and that is really cool to see people learn and pick up new skills and apply them.
Yeah.
So, kudos to you for having the courage to say, I'm not worried about what the audience thinks. I'm learning new things. I have to apply them to my trading and to my business.
For sure. So the third thing that I've learned this year was valuations truly, truly, truly matter. And if you cannot get the price that's right for you, even via a cash secured put, then it's just not the right investment for you, because it's okay not to understand that stock enough And there's a lot of people that might make a shitload of money with it, and you're just not going to be one of them because you weren't willing to put in the time and the effort to understand. And that's okay. Not every investment is for everybody. So I guess that's the third thing that I've learned is not every investment is for everybody. Shout out to someone in the chat. They brought kava to my they brought it in my scope to my attention probably 3 or 4 months ago. My buddy Chris had brought it to my attention like 7 or 8 months ago. And bro, I just could not get into it. I just couldn't get into it. And dude, all the stock's done has gone up. And I don't even think I was willing to look at it an extra 20 or 30 seconds. And I don't even know why. It just didn't appeal to me. And you know what? It's okay. There's going to be stocks in my portfolio that aren't going to make sense to you. Neo, Open Door. They don't need to make sense to you. They need to make sense to me and hopefully dollars, right? Dollars and cents. And you need to make sure that your portfolio makes dollars and cents to you. A fourth thing that I've learned, this is just me adding to it. This isn't part of the coaching now. A fourth thing that I've learned is that platforms like X can be very, very constructive, productive, but they can also be very destructive. So you have to be very, very careful who you listen to and why you're listening to them, and myself included. Because you need to make sure that Chris's conviction, TJ's conviction, the SoFi Weekly guys, all the other Resident Bulls, Bill, they they have their bull case for their reasons, and you need to make sure that you're formulating your own bull case and you're aware of the bear cases so that when shit hits the fan, you're able to hold steady and not do anything that could potentially blow up your account. And that's why I said it several times. You can't borrow conviction in the stock market.
Yep. If you
So
can't
that's
steel man the bear, if you're a bull and you can't steel man the bear argument, you don't have any business owning that stock.
Agreed, man. Absolutely, absolutely agreed. So, Dougie, you're new to this podcast tonight. You're a SoFi investor?
Yes,
I have several thousand shares. I am not TJ the Wheel Deal.
I gotta go.
Hey, brother,
But I'll be watching.
Later,
Thank
Bill.
you. See you.
Bye-bye. So I've been asking everybody if you could interview Anthony Noto. Let's put our Amit hat on because Amit's probably got the best chance of interviewing him or Tanner, I guess, right? What are 3 questions that you would like to ask Anthony Noto?
Oh, 3. Well, I was in the chat earlier and I said him there, so I'll just steal my answer from there if you don't mind. And it's really what you guys were talking about, and it's just kind of neat because I've been saying that for months, and now I'm starting to hear other retail investors say the same thing. It's, dude, why are you talking about boring bank stuff? No, literally no one cares. The only people that care are the boring bank analysts on CNBC. Right now,
Yep.
you got put in the category of bank, and the boring bank analysts are going to ask you boring bank questions, and if you answer their question, you've already lost. You got to pull a Kamala Harris and say, I was born in a middle-class family,
Right.
and don't accept the premise of the question. Talk about what you need to talk about. That's what I would ask for note. And then the other thing is, I would ask him why they chickened out on the small business banking.
Oh yeah, because they did a
If
deal with
they are
American Express, right?
if they are so good at retail banking, I mean, I'm not a Henry because I'm not really young anymore. I guess I'm Henry Senior, right? Henry Senior. But I've
You're
got
more
small business.
sophisticated. You're Enrique. You're Enrique. You're not Henry.
I've got, but I've got businesses now that I need banking for,
Right.
and I don't want to join the end all be all one solution one stop bank if I know they're just going to farm my business part out to someone else. You
Right.
know, I if that's the case, I might as well go, you know, look under every rock uh, and log for the best deal for my situation. You know, the credit union 2 doors down the street from my brick and mortar store is going to be a whole lot more convenient than depositing cash every week at us trying to find that into SoFi, right? But
Right.
if their bank experience was better tied into all my other jobs, maybe they're an option. But anyway, real frustrated with that particular decision.
Agreed. Agreed. I asked Chris this question, and I'd like to ask you, Doug. How much responsibility do you think falls on Nodo for not pushing out the technological narrative?
Um,
Because I feel like it's like everything's great, banking, we're doing this, we're doing that. Oh my God, our FICO score and all this other shit.
yeah.
But it's like,
If you talk about yourself
why
as a
don't they
bank,
ever,
you're going to
why
get
don't they,
valued as a bank.
why don't they ever talk about the AWS of fintech? Because that's why we all invested.
Because he's not a tech guy, right? He's not a Silicon Valley dude, right? He's an NFL executive, right? He's got connections, he's got high level management and execution abilities, but he's not a tech founder. He doesn't know how to run a tech startup. And so he kind of isn't going to know what to get excited about. That's where like an Alex Chris, right, at PayPal, he was a technology company COO, operations in the weeds with the product, pushing it out the door. Noto's a manager. He doesn't know the details. And I think that's why he doesn't necessarily feel the most confident going to talk about them when he's sitting in the CNBC studio with Jim Cramer or whoever else is interviewing him.
So, do you think that maybe someone like Derek White should accompany him to those types of interviews or be on the earnings calls?
I mean, he does the fireside chats, and so the heavy SoFi nerds like us are paying attention to those, but I don't think that I don't I can't think of a good CNBC bit type of thing that got done where you had the CEO and the COO sitting there, because what you're the COOs or the CTOs going to steal thunder from Anthony Noto. That's not who the CNBC called on TV to talk. It was somebody they don't know. They want to talk to Anthony Noto.
Right. Dude, real quickly off topic because my OCD is getting the best of me. What the hell is that thing spinning back and forth behind
That's
you?
my 3D printer.
Okay. And then what is that throw? Yeah, I wanted to say Lakers, but I know it doesn't. I zoomed
It
in. What
says
is
LSU Tigers.
Tigers? Okay, so go Tigers with
Go Tigers.
GAUX.
GEAUX. That's right.
That is awesome. That is awesome. Hey, what's going on, Dallas? Join us, brother. We're marathoning as usual. I sent him the email. I didn't forget about Dallas. He must be working. He must be working by doing push-ups and sit-ups. I mean, you don't look
Yeah,
like a Greek god on accident, I guess.
I guess not. Let's see if I can turn some.
So, what do you think about the stream, man? Is there anything else that you would have liked me to ask Chris? Because I wanted to really pick his brain a little bit, and I'm glad that we spent quite a bit of time on the way he comes up with like his valuation. Because I guess I wasn't really looking at it in those metrics, but because I've been saying that I think that SoFi is kind of like just a little undervalued, but I'm starting to think it might be like a little more undervalued than it really is.
If SoFi is a bank, it is valued appropriately. Actually,
Yeah.
it's it's overvalued because it's a shitty bank that doesn't pay a dividend. If it is a tech, if it's the AWS of fintech, then we have a lot of room to run. If
Right.
it's 20% the AWS of fintech, if it's, if that's a small portion of the business, they still have room to grow on top of it. And that's why I'm still holding these shares. 2 years ago, I bought a lot of leaps when SoFi was like $4, and I rode that up to 12, 10, probably sold them around 12, didn't quite hit the top, and converted them to shares because I didn't want to see it all disappear as time ran out on me. So now I'm
Right.
sitting on connection problem.
Yeah, I think your voice is going in and out. Your audio. You look like this on
There
the
it is.
screen.
Okay.
You look like that. It's your drool face. It's your drool face, Doug. Hey, what's going on? We got RoboCop in the telephone booth. Fight me.
Wow.
What's going on, Dallas?
And he's got better lighting in the middle of the night wherever he is than I have in my room. So
No, he's guarding the Pentagon over there. I don't know what that was doing. No audio, Dallas. No audio.
Bitcoin needs to be a topic. Where's old Bitcoin?
That'll be the three.
Amit messaged me like 20 minutes ago, and he said it was picking back up again. So where is it?
Is it really?
I think it just bounced off of a quasi technical level. Let's see. It's my trading view. Yeah, it just bounced a little bit off of the volume level. That's all.
Right on.
I mean, people are like, why is Bitcoin down? It's like, well, I mean, from September 7th through September 28th, it was up 25%. Calm down, everybody. Like it's going to come down a little bit.
But the rainbow chart, bro, you're telling me there's no pot at the end of that rainbow? Is that what
Oh, there's a pot. It's in the rainbow. Just gotta be patient. Just gotta be patient. Look, China just unleashed the money printers, right?
Yeah.
Bitcoin is just gonna vacuum up all that liquidity. It's just gonna be a
Hey,
vacuum.
look, guys. I wear jeans too. Can y'all see? $5 if y'all can guess the brand of these jeans.
I do not know the bougie brands of jeans. So, and I know your wife dresses you, so I have no idea what they are.
No, they're polo. I'm polo from head to toe, baby. Are you there, Dallas?
Yeah, can you hear me now?
Yeah, we hear you now.
Yeah, I like those Lucky brands, though. You pull down the zipper, it says Lucky You or whatever. Woo! When I got married, my boxer briefs said Lucky You on them. I still have those in a special part of the drawer because that's when, I was lucky enough for Kristen to say I do, and she meant it, man. I couldn't believe it.
Well, I'm not standing up because I'm not wearing jeans. So I'll do you all a favor.
We had a little political deal earlier, and so that's why I got dressed up.
Oh, okay.
I was wearing my my Cayman boots, and I was looking the part, yo. But now it's time to loosen everything up. I had that piece of fried chicken I was waiting for all day, so Let me loosen my belt up a little bit here. Anyway, talk to me, Dallas. How's it going? Did you catch any part of the interview with Chris from Data Driven?
Yeah, I saw a little bit of it.
What questions did you ask Anthony Noto if you could meet him and ask him 3 questions? That's kind of like the theme for tonight. What are 3 things you'd like to know?
And what'd he say?
So he said, where do you envision SoFi like 5 to 10 years from now? Is there anything else that's missing to like fill all the gaps to really be the AWS of fintech, position yourself to be a top 5, 10 institution? And then the other part was, when can we get more info on the tech side of things? Like why are y'all so ambiguous?
Mm-hmm.
And then he used a thing like cognitive dissonance, and I had to like AI that shit. And he went on nerdy valley. I was like, cognitive dissonance, what? No. Half of the audience was confused. I just helped them out with a little copy and paste. But what would you ask Anthony Noto? I mean, you follow the company a little bit. Like, what would you ask him? Like, what do you feel like? Because when you're researching the company a little bit, even if it's just a little bit, like right away you have some questions that you would like answers to, but who's really going to give you those answers?
Yeah. What would I ask Anthony Noto? I guess, I mean, I feel like one of your main points is like people aren't going into brick and mortars, banks anymore, which I agree with. But why do I need SoFi in order to solve that problem when all the same banks have apps as well? Like I'd rather, like, with all these bank runs, not saying like a SoFi bank run is going to happen, but like, do I really want my money in Chase or in SoFi, or or Navy Federal or SoFi? I don't know. I'm not.
So in other words, like, is your money secure if poo hits the fan?
I mean, I think it's secure up to 250K regardless, right? No matter.
Oh, it's SoFi. It's actually a little more than that, I think, because they have these other insurances that put you like in the $2 million range, I believe. I think that's help me out on the chat, but I think that's kind of like one of their claims to fame.
I mean, that's good. I mean, as long as it's FDIC insured, I'd feel comfortable putting money in there. But that's not special enough for me to buy the stock or to put my money into SoFi.
Right. Yeah, 2 million according to Doug B.
But I think are they doing something similar to Robinhood then, where they use a bunch of different banks? Or you know how Robinhood has that as well?
Yeah. I don't know. That's definitely, I mean, did I stop doing due diligence on SoFi personally probably like 2 years ago?
Okay.
Because man, my mind was made up and I had to spend more time like trying to manufacture the win,
Yeah.
Because I mean, once you take ownership of so many shares, you just got to figure out how to do it. But essentially, Doug B is saying they partner with other institutions to spread the risk.
Okay.
So I'm not really sure how that works. I mean, this is that's above my pay grade, dude. I'm just not that technical. I really don't even have that kind of interest in learning how all of that works. But what do you want to talk about, man? I'd like to be on for another 10 minutes, 20 minutes before my wife comes and gives me that whole deal. What's going on in your world? Dallas, talk to me about the portfolio. And Doug, what's going on in your portfolio? Any things that are causing you pleasure? Any things that are causing you pain?
Go ahead, Dallas.
I added a new crypto today. It's an AI coin. I'll do a video on it tomorrow, so I'll make everyone watch my video. But yeah, that's still my biggest play. The most frustrating thing, dude, is freaking Riot, bro. Like, Riot it's not doing its thing. I don't get it. Like Bitcoin goes down and Riot's going down more than Bitcoin, and then Bitcoin will recover, and it's not even recovering with Bitcoin. Like, I really don't.
Clean spark. Yep.
it's kind of pissing me off because I'm trying to get out of Riot because I want to put it, if I don't want to be, I don't see it with Riot right now. And meanwhile, there's lots of spaces of crypto that are moving up nicely that I'm missing gains. But at the same time, I don't want to wait. Like, part of me was considering cashing out. I'm down 20% on Riot and then putting it into what I want to put it into. But exactly what I feared was happening last week, which is that all of the coins or projects that I'm in were really rallying hard. And so I feel like if I pull the money from Riot now and put it, I just want to build the same positions that I'm in, just continue to add to them.
Right.
I feel like if I do it now, then because those are up so much that they're going to be due for a pullback. So I don't want to double dip in the wrong direction by taking a 20% loss on Riot and then putting the money into the altcoins that I'm in, which are up, which I don't get. Like, the altcoins are up, Riot's down. But I get it because Riot trades more with Bitcoin, and past week, Bitcoin kind of, a lot of the money left Bitcoin and went into altcoins, which was cool because some of the altcoins were up like 20-30% last week, and Bitcoin was like 5% up or so. But that's what worries me with Riot. Like, I don't mind cutting the loss. I just then you're like, you want to deploy that money right away. And obviously with this Israel Iran stuff, it's very uncertain. I don't think Israel's going to really strike them back too hard. I don't know if anyone lost their life. So it might be one of those things, like, as soon as we get some more clarity there, that if that was the true reason that Bitcoin did sell off, which some of the very, very smart people that I follow and listen to are like, everyone's saying that crypto sold off because of the attack on Israel, but we've been trading in a range for like over 6 months now. So like all of the other lower lows, lower highs were not because of an Israeli attack, so it can't be for sure that that's the case with this one.
Yeah.
I think it's
Yeah,
obviously,
we just had a 3-week run up of over 20%. Like, it's gonna calm down. It's gonna pull back a little bit.
yeah.
But we made the higher high, so
yeah.
I think we're all good. I mean, we come back, we make a lower low, and I just use Bitcoin as the proxy for the entire crypto market. We come back, we make a higher high. It's all good. We're off to the races. It's just not. I mean, the days of like 2017 where it opened, Bitcoin would open at 12K and finish the day at 21. Like those, I think those days are over.
Yeah.
Bitcoin is now going to be climbing the wall of worry like all the rest of your tech stocks.
Yeah, I think
it's gonna have to do that until it truly evolves into a currency in about 20 years.
I think in the next 3 months, the crypto portfolio is going to be bigger than the stock portfolio. So that's my call. But what do you think, TJ? Do you get what I'm saying? Like I don't want to take the loss on Riot. I wouldn't mind taking the loss if all of the altcoins were also down and I can move it right from Riot into the altcoins, because if they move closer together, I know that as soon as Riot goes up, these altcoins are going to go up so much more than anything else in crypto, that I'm going to easily, quickly make back that loss from Riot. And I just did that recently with Enphase, right? I sold all my Enphase that went crypto, and like the loss on Enphase got obliterated quickly. But the problem is that the altcoins are like still up pretty high. So I'm worried about cashing out now, putting it into that, and then writing that down another 20% as well. But then it's like, if that does play out, then that means Riot is also going to come down if we do get another down move. So I think the best move right now is just to wait and see, and then just kind of wait till I get closer back to break even. because
I think one thing that I have over you and these miners specifically, right, is I've just been in it a lot longer. And the one thing that I did not agree with on your strategy is when you chose not to sell covered calls, because I feel like that's just an asset class that you cannot just own and not bring crazy premiums through the door. Because if you would have already brought in 1,500 or 2,000 in covered call premiums with the amount of shares that you own, for instance, then you're probably not even feeling any of that pain whatsoever because you're
yeah,
like, I got a freaking cash flow machine over there, but it hasn't given you any cash because you played it for capital appreciation. And I just think that right now, because the float's gotten bigger, it's kind of out of favor because of the way that they approach the whole Bit Farms takeover. Like there's a lot of people that don't want to invest in Riot right now, in my opinion, in the space because they're angry at Jason Les and company with the way they went about this potential hostile takeover with Bitfarms that doesn't look like it's going to come to fruition. But they tied up a shitload of money buying 19.9 or whatever percent of the company via shares. So I just don't know that Riot, even if everything goes up and to the right, and I think Riot would obviously do it as well, I think it's going to lag a little bit until there's more clarity with the market, with what's going to become of the call it the Riot Bid Farms takeover that never was.
yeah,
I think that's a question that needs to be answered in the next earnings call. And then I think that people will get very, very bullish on Riot if they're executing, if the uptime is there, etc. If they talk about like, hey, what's going to happen? Like, is emerging cooling really going to be a thing? What's going on with the production in Rockdale? What's going on with the expansion in Corsicana? Are you guys on track? Are y'all going to hit your metrics, etc.? Then I think they would start getting back in favor the market sentiment because market sentiment is one of the M's, right? Like that I study. And I think the market sentiment is very, very low right now because there's a lot of investors that are confused and or pissed off with the way they went about this whole Bit Farms fiasco, if you will. The shit show. And now they're like playing nice with Bit Farms, but are they really? Like I'm just saying, like I just think that that all needs to be. We got to air the dirty laundry. We got to clear the air. We got to clear the air on that. And then if Riot is executing, then I think they're going to run and they'll have a great. They'll chase the little Bitcoin rainbow like everybody else.
yeah.
Sold covered calls. How under your cost basis are you right now? Though you had 20% drawdown.
Yeah, my cost basis is like 890 or so.
Yeah, I'd be selling $9 covered calls a month out and using some of that money and maybe use that money to buy some of those altcoins and use Riot's covered call money to kind of
That's the
start
play.
building those altcoin positions.
That's the play. That's similar to what I did. I've got Clean Spark that's 50% upside down right now. And like I'm furious with it, but yeah, okay. Sell the 2026 or the January 2026 cover call, collect a crap load of premium, and go buy the stuff you want with it.
Yeah. I sold some weekly cover calls on Riot last week. I think I did $8. Yeah, $8 cover calls. And then I'm just, dude, like this quarter four is nothing to mess around with.
No, I know. It's just everything comes with risk, bro. There's giving and gotchas as you want.
So I'm like, you know how you just always feel like you sell the bottoms and like buy the tops. I just feel like that's gonna happen to me, and like I'm gonna write this cover call, and then October is gonna start, and like I'm gonna be kicking myself because at the end of the day, like if what plays out, if what I think plays out actually plays out, it won't really matter because missing the first little leg of that run with a small portion. This is like a DCA. The amount of money I have in Riot is like a DCA into the crypto portfolio. It's not as if I'm waiting to sell Riot in order to start my crypto portfolio. Like my bags are already heavily packed, and So I'm not really feeling too much FOMO, and so that's what's kind of keeping me grounded. But it is something that's a little bit just annoying, if anything. So I'm still very optimistic about these next 3 months, especially. I really don't think crypto cares who wins the election. Um, I think I think on November, what is it? Is it 5th or 6th? I think it's 5th. Um, I think on November 6th, or we normally find out like
By
12
the
o'clock, 12, 1 o'clock. Like if Trump
depends how close it is, because there may be some states that are too close to call, but typically they might even they can even call it on November the 5th if it's a landslide.
yeah,
But I don't think this is going to be anything other than a freaking no, by my opinion.
I think if Trump wins, then it definitely takes like an immediate hit up in a good way. I think if Kamala wins, then it'll probably sell off like 5-10%, but then everyone's gonna realize it's so stupid. Um, I think everyone's afraid of like Gary Gensler or something,
Yeah,
of her appointing Gary Gensler, but then the crypto narrative is so strong right now. When Biden got elected, it did just fine, so it's going to be fine regardless. But it's just it's a matter of getting to the election. So just like you just got to be patient.
agreed.
But it looks like I'm going to be able to,
Yeah.
unless hopefully I'm hoping to be able to get out of my M-phase calls this Friday that I've had since last. When did we have all those M-phase shares put on us? Was it October?
October of 23.
Yeah, so that's a good learning lesson. It's taken me a full year
Yeah.
to get out, and that's the danger of being wrong on calls and trying to collect premium. 'Cause I've been rolling these for a year now, and I've got 114 calls for this Friday, and I think it was at like under 110. So,
Yeah.
you know, uh, hopefully that'll be able to be over for me. And then it's like, well, M-Face is kind of at a good level to start selling puts again.
Yeah, I sold 10 puts at 100. I got 10 puts at 100, and then I'm finishing up the third round of covered call campaign against the Leafs, the poor man covered call.
Yeah.
And I've got 130 calls expiring on 10/18, I think, or 10/25.
Mm-hmm.
And I'm at like 80% on already. So any little bump in the whatever, I'll just close them out. Like I already know not to play with Enphase, dude, because the thing will go $20 in a couple of days.
Yeah.
So,
Yeah.
I'm nervous, dude. I actually want to do on finance junkies. I'm going to talk to Carlos to see if we can do Enphase a little bit because I what the hell?
I think people, I
No,
talked
because
about.
I don't know if like Carlos and company are still bullish on Enphase, or because it was as simple as rate cuts coming down, Enphase to the moon. But is that like really true? Because I keep seeing things like people aren't even as bullish on like their technology and stuff now, and I haven't been researching the company nearly as much since all I did was buy leaps because I don't have all that pressure of all those shares anymore in the portfolio.
Yeah.
So it's a much smaller position now because I only have 50 leaps. And I say only, it's just compared to the amount of shares that I had. I think it's like 11,000 shares. 50 leaps is nothing. So it just doesn't stress me out. And I think I probably already collected like 50,000 in premiums against that $220,000 in leap stuff. So it's been a pretty good PMCC campaign so far, but I'm down on those leaps as well.
Yeah. I would like the but they should do like maybe like once every month or two have the original finance junkies. I kind of wish that they would disclosed their just somewhat of an idea of like Enphase was like the thing on Finance Junkies for a long time, and like, you know, you really show how bullish you are by like how much of your portfolio it makes up. You know, not everyone's a millionaire, so it's not like you need to have $1 million of Enphase stock, but like if you have a $10,000 portfolio and 4,000 of that's Enphase, like you're really bullish.
Yeah, it's pretty bullish. Yeah.
I'd be interested to know where they still, you know, their opinions. Obviously, with 3 out of the 4 leaving, you know, they don't talk about Enphase as much. So I'd like to know what their thoughts are on it now, because it's going through that time capitulation, you know, where like there's price capitulation and then there's time capitulation where you get sick of waiting and you see other opportunities, and a lot of times that's like kind of the when you're kind of running into that time capitulation.
Right.
That was me capitulating, that's for sure. I held that thing and it went down, and I eventually was like, nope, I'm out. Like, I'm bullish on Enphase. Like, I bought it for my house. That's how bullish I am on Enphase. Okay.
Wow.
I took that 40 grand out of the stock market and bought the solar panels. So I'm bullish Enphase. I just
TJ,
can't handle the stock.
I got to drive a Tesla over the weekend.
Which model?
It was a Model 3. My buddy got one, and yeah, he let me drive it, and it's pretty weird to drive if you've never driven one.
Did you experience this a lot?
Yeah, dude, because like nobody
with the gas pedal or the accelerator.
I've never heard one person on the internet talk about it, and like I don't know why. You don't really use the brake pedal in a Tesla.
No, dude, it's freaking degenerative or whatever it's called, regenerative braking or some shit.
It takes about 3 days to get used to it. Yeah. I'm just telling you, like when me and my wife, when we bought ours in March, it takes about 2 to 3 days.
It was so
honestly
cool.
by the time I got done with our first road trip, we took delivery, and then we drove to Baton Rouge from Houston. And by the time I got to Baton Rouge, I was used to it, totally used to it.
Yeah.
So used to it, in fact, that when I got home from that weekend trip and got in my truck again, I almost got in a wreck because I was expecting to stop by taking my gas off the pedal, like not stepping on the brake.
Yeah. I'm sure they have. I just didn't know what they were talking about, but like it's super strange, but really cool. You know, it makes driving a lot easier.
Did you get an FSD ride?
No, he got FSD, but he didn't end up keeping it. So we just turned on autopilot, and we were going through just like a slow like a 25 mile per hour zone in like a like shopping center. So it did its thing. I mean, it drove itself fully.
Dude, it is getting good. So I'm the tech nerd. And I told my wife, we're buying a Tesla. And she's like, oh, I get the giant eye roll, right? And because it's mostly her car, I have a company truck. Joey being the Bengals. The FSD, though, she thought was she didn't like it. She wanted me to turn it off. She didn't even want me to like be using it. And now she is totally gotten used to it. She says she uses it like 90% of the time now. So I'm telling you, if my wife, who can barely operate a cell phone, now uses FSD 90% of the time, it's getting close to being ready for prime time.
Hey, can y'all still do FSD? Is that like a monthly subscription, or do you have to do the $8 grand?
Well, they lowered the price from 8 to I think 6, and then they lowered it again, I think, to 4 grand.
So what about?
But you can also get a monthly sub. You can also get a monthly sub.
And whatever. I kind of read something about a lawsuit that people like Elon misled people or something, but the lawsuit was dropped. I feel like that came across my phone here recently.
Yeah. It did. Yeah, there was a lawsuit over something, and they're like, companies make forward projections all the time. They don't always hit what they think they do on the time frame they predicted.
Especially
I
Tesla.
mean, they built something magical and amazing that no one else is even close to having. I mean, I don't know why everyone's so mad that they didn't deliver it last year.
I hear you.
You know what? You know what's going on today, though?
Not sure, but we got
China spreads are going on.
You're selling spreads or what? What are you doing?
FXI spreads on FXI.
Is that a Chris Patel thing? I feel like that's one of his tickers.
The market is so illiquid and so bad at pricing the spread that over the last 2 days, I've been able to just put my orders out there and wait for it to get filled. And these things are going crazy. They'll be up like 220% in a day, and then minus 15%. And the swing has been crazy. And this is in my little taxable account. This isn't in the big, the big account.
Your big laundromat account.
Right. Yep.
A lot of coins went into that account. You get it?
A lot of coins in that account. That's for sure.
See what I did there?
Yep.
Well, let's talk about my kind of play.
Hey, you can hate all you want, but I count my money by weight. Okay.
Hey, it's all good, bro. It's all
I have
good.
to weigh my money to count it.
Here's my China play. Got lectured a lot about this play. It's like a hand of poker. You don't really have to explain winners. But dude, how am I looking here? 468. And I do have another 200 cash clear puts at 5. I've got the shares for sale at $8. So didn't do right there because I never do. And then I also bought 500 of these. So how would y'all grade the play now after the fact? And then let's talk about it. How are you grading it the whole way through if you've been following a little bit? Because, dude, I feel like that's the play that has probably been ridiculed the most from the Warren Buffetts of the chat. Yes, I'm calling y'all fuckers out. But anybody giving me my flowers. Everybody's making all these fucking videos. Yeah, I told you invest was Corey. Shut the fuck. You didn't say shit. Let's see your portfolio, motherfucker. Let's see investment. Henry going to start talking about NEO soon. Let's see everybody that's going to start talking about NEO soon. I want to see where your average is $4.68 too. I don't want to hear your bullshit. I'm from Missouri. You got to show me.
Look, I'm embarrassed to be in this trade, but I'm in it and I'm green. So, and I've been in it for 2 days. So, I've doubled my money in 2 days.
That's crazy. See, you made as much money as I had, and you only had to deal with it for 2 days. Tells you how much better you are at this than I am.
No, that's just yeah. There you go. Amit Wheelers. There you go.
Amit, join the chat.
Amit writing the
Amit needs to join
today on Hood. You need to get Amit in here and explain his Hood.
Just so he can say, "Oh my goodness."
Yeah. Oh my goodness. Oh my goodness, Amit with the book on Robinhood.
Oh my goodness.
Did you see that tweet he wrote? He's got some Bill Ackman going. I think he got some Bill
Bro,
Ackman kids today.
I was just reading it right now, dude. I was like, okay, hold on a second. I thought I was going to do my Bible lesson later. But this is the myth. They keep doing like Psalm 23 over here. And this is like, this is going to be a super long and nerdy Robinhood post, like really long and nerdy Robinhood.
He ain't wrong.
Bored and lonely and haven't gotten laid. It says, but I tried on the numbers and I'm basically giving you their entire Q3 earnings, 28 days. Bro, you got too much time on your hands. Let's see. All right, let's dive in. So we have, my goodness. What the fuck? I'll wait till we do the pod and I'll have him summarize it.
We need it. He doesn't give you a summary.
There he is.
Hey, there he is.
Are you adding to the book of Psalms in the Bible, bro? Like, what the hell is wrong with you?
Dude, I was bored, so I started writing. I kept writing.
No, hey, it's a great job. That's a great write up. That's very professional. It's a good write up.
Honestly, I did it for myself to make sure that I don't fucking lose money on this damn stock. And then I realized, well, let me just keep writing it.
I don't think you can, based on what you just wrote. I don't think any of us are going to lose money on this stock. Like, it's the one in my portfolio I'm not selling covered calls on. I'm like, you know.
Oh,
TJ,
I had to beg TJ to not sell any. He's like, but they're squatters. They're squatters. They're not paying our rent.
I know.
They're not paying our rent. I was like, TJ, these guys get to live rent free for a little bit.
Dude, I got squatters, dude. I got freaking Robinhood squatters, man. Ugh.
I learned my lesson on Palantir, man. I'm gonna be chasing that trade for 2 years, trying to run those covered calls back, maybe longer.
Palantir.
I do not want to do the same thing on Robinhood.
Either Palantir is gonna crash like 23 and everyone will be saved with their covered calls, or this shit's going to 50 and those shares are gone forever. Like, it's one or the other.
Dude, how can it sustain that value? I mean, okay, look, I'm the guy that tells you it doesn't matter what the valuation is. Somebody's got to be the best, right? Somebody's got to be the most expensive, and somebody's got to be the best. We're lucky in this case that we're both. So,
Yeah.
I think we can sustain that. But man, can we double from here? And I don't know.
I mean, dude, we priced in like 5 years of growth or some shit, but like, fuck it, dude. It's it's just so crazy for me, dude, because I was stuck covering this thing when it was stuck between 6 and 8, kind of like TJ is with SoFi right now, right? Like, it's stuck in this range.
Yeah.
And then one day it's like it will never come back down. It just like won't fall. And it's like, what is this new world we're in? Like, it's a different era.
I couldn't believe it. It ended the day green today. I was like, oh, today is surely, you know, it was a little red yesterday, right? I was like, yeah, today's coming to another 3%. You know, people are gonna be mad. Amit's gonna have like 57 people in his market close. And why is Palantir down today? Why is Palantir down today? Why is Palantir down today? And you're like, motherfuckers, this thing's been up. Sorry for the swear. It's up 120% this year. What do you want? It's down 6% in 2 days.
I had 57 DMs of people that were mad that Accenture did not do a partnership with Palantir on CNBC, but they picked Jensen Huang. Everyone's like, well, why aren't they working with Palantir? And I'm like, I don't fucking know, but I don't care. The stock's up a lot. Like, you really think they need an Accenture partnership right now? Like, I don't know.
Amit, I got a question for you. I tweeted this earlier.
Let's buy another 5,000. I forgot to comment under that post.
It said, what's the bull case to just double this position right here? Can we get much better entry point? What's the valuation of these levels? Does it feel too rich?
Dude,
So we
buy
have
5,000 right now overnight. Fuck it, TJ. 22.50 is my price. Our average will be 21. If it goes to 30, we sell.
we do have 100 casket care puts at 21 for.
All right, so then we'll have 20,000 shares. The more, the better. You know, it's
Yeah,
when
the
it's not
more the
my
better.
money, it's so easy. When it's not my money, I'm like,
So I had Chris on earlier, and we talked a little bit about Robinhood.
I saw some parts of it. I saw some parts of it. I was surprised you guys were still live. I couldn't believe you're still live. But
So what is my wife's asleep, so I've got the green light right now, I think, unless she'll come in here and do this deal and it's over, bro. Like the lights are off quick. What he talked about, like the concern with like the credit cards, which I have that concern as well. And then like, is the 1% and 3% really sustainable if there's like a legit slowdown with people trading and whatnot? Because I feel like it's kind of like a poker game, and they got to keep the table running for enough to collect enough of a rake so that the house eventually wins in the end.
so
They
I
got
think,
so many ways they can do that, TJ. Oh, go ahead, Amit. Sorry.
yeah, I was just gonna say I don't think Chris understands it yet, and it's weird because it's been a year, and he doesn't understand how they're able to do it. Like, I was listening to his argument, and I was like, I just guess he doesn't understand it yet. First of all, if trading slows down, that means the whole market crashes. So SoFi is not going to do any better. Robinhood, like that concern is just like, all right, yeah, Robinhood sucks at that point, but that means we have shares on the cheap that we can buy for the next decade if you want to go long on this. But everything sucks if trading stops. You think Nvidia is going to keep going up if you know the market's slow? So that concern is irrelevant to me, just because it affects the whole market. Number two is 90% of Robinhood's costs are fixed. That's why they're able to get a yield that is higher than other brokerages on their AUC and then give off half of that to the consumer and then monetize it in so many other different ways that they have, whether it's credit card, transactions, net interest, cash sweep, etc. So that's not a concern to me. The credit card is not a concern either. Most credit cards, their biggest line item is sales and marketing to acquire a customer. Robinhood has 1 million people on the wait list. SoFi doesn't have 1 million people on the wait list. You know, it's like when you have 1 million people on the wait list, you don't have to worry about sales and marketing. You have to worry about getting the product out because people want it so damn bad. In fact, I am less concerned about Robinhood because they're being so conservative with the underwriting because they're not getting it out to as many people. Obviously, because they're afraid that they don't want to give it to everyone and then everyone starts running up delinquencies. I think they know exactly what they're doing. I think I have so much trust in Vlad and management, and the unit economics makes sense. So I think they're going to be fine.
I like it, dude. I mean, I'm bullish the company. I think that there is a legit, I don't know if there's like a legit double from here, like within the next couple of years, but I think 70% from here is definitely doable. I mean, you're saying when the valuation starts getting a little bit quirky, if you will, for me, right? Because I'm more conservative on my valuations. But
what is
I mean,
this?
it's got a very favorable market sentiment, and nothing moves the needle like market sentiment.
Yeah, but also, dude, like think about the next 3 months. This is why I'm saying if we want to buy another 5,000 shares of a $21 average, I feel like if Bitcoin goes up, there's your Robin.
I totally do that, but tomorrow got to sell covered calls.
We can sell covered calls on half
downside, just to protect against the downside.
Yeah, of course, that's fine. But they're having this new event. You're gonna have all these new products. You have crypto ramping up. If you believe we have S&P 6,000, Robinhood's not.
NBA season about to start. They just got the new advertising.
Also, here's another thing that what Chris was talking about. You know, he's worried about the unit economics because they're spending all this money in all these different places. Do we think Robinhood would actually spend marketing dollars on the Miami Heat and the Memphis Grizzlies if they were so concerned that they were stretched on dollars in their unit economics for the credit card, the Roth IRA, the 1% match? They obviously have a surplus of dollars, but they are willing to deploy against stupid shit, in my opinion, like sponsoring NBA teams. I agree with Doug. I think it's stupid. But if they have that much excess money, then that means, they have a decent amount of capital. My thing, bro, is on August 5th, did Vlad step in the boardroom and said, let's buy 10 million shares? They have $1 billion authorized in buybacks. If they bought 10 million shares at 15, that's like, honestly, I would have bought like 40 million shares. Because what other time would you get a deal like that? I mean, maybe if we get a big recession, we'll go back into the 15s. But with their organic growth, it's not easy to get back into those levels. August 5th was a one-time deal. So I don't know. If they took off a lot of shares off the table, that'll be good for EPS as well.
Can you
that show up yet on
Robinhood these hours? Is that true?
What'd you say?
You can buy Robinhood at these hours?
Yeah, it's on overnight trading.
I didn't know that people actually did that. Like that's like a thing.
Dude, I bought 3 shares today. I didn't buy 5,000, but I bought 3.
TJ, are you missing a tooth?
Yes, I had the implant on August the 5th. What is that? Hold on. I had an implant. That's why I don't have Robinhood at 15, because I was doing this implant, and then they gave me a I don't know, like a fake tooth that I put on there. I do it when I go out, but it's uncomfortable, so I take it out. I take it off at night because the dentist wants the wound to heal better. I guess something about like that, because there's a screw in there. However the implant works.
Dang, dude.
It should hurt, bro. Like it hurt.
I mean, $22.59 right now for more Robinhood.
No, I'm waiting to see if anything happens.
What covered call strike do you want to sell? If we did buy 5,000 shares, what, 25?
Yeah, I was thinking 25 because we have the cash secured puts at 21, right?
That's not bad, dude. I feel like the only way we get this hood thesis wrong from this price, meaning we collapse to like below 20, is if market gets into a recession. Did you see fucking Bank of America today? They think we're gonna get 150,000 jobs tomorrow. Goldman says 160. Like, not tomorrow, Friday. Like, I mean,
dude, if that happens, it is gonna erupt. And I'm in all the wrong
jobs.
I'm way too heavy in clean spark.
Why is China down right now though?
Because it's up, because it was ridiculously up. Like,
But down 4%? Like, why is, I mean,
it was up 7.5 today. So,
Nothing's,
saying we got to make sure Xi Jinping is not fucking around.
nothing's
well,
happening.
if he's fucking around, I didn't pay very much for these spreads, so I'll be very sorry to see them go. But they were not going to take a lot of capital with them.
So I put a limit order at 22.59 for 2,500 ships, and
Okay.
nothing happened.
Yeah, it
This
takes.
There's not a lot of crackheads overnight. I thought it would like automatically just do it.
No, it'll get filled. It takes a couple of.
Oh yeah, there's your other growth vectors too. Europe, Canada.
Yeah, dude. When people,
those are waiting in the wings.
I got into Robinhood for a trade, and over the past year, I've realized this is the next generation of finance. And now I'm like long, and I want to be long for a very long time. And I think it makes a lot of sense.
I like it. So I asked Chris earlier, and I've been asking everyone that's joined. You followed SoFi. I mean, you probably started the SoFi Weekly, right? And then you transitioned because you're just more passionate about Palantir and whatnot. But you're familiar enough with the company and the stock that you're not speaking out of turn here. But I just want to know, like, because you have experience talking to CEO of high caliber CEO like Vlad. What 3 questions would you ask Noto that you feel like were not answered during your time where you were like more convicted in the stock than you are now? Like what would you like clarification on, even because maybe he has answered the questions in a roundabout way, if you will.
Questions to like make him feel good in the interview, or questions that I actually care about?
Like, what are questions that you want answers for? You don't have to play nice here. Like my question, like a couple of my questions were like, why, like of all the jobs with his resume, why did you pick SoFi? And
that's one of the.
Why would you do it again? But then the other question now is like after the fact that I came up with is, do you feel like you dropped the ball on this lack of technology AWS narrative, and why y'all just getting be stuck as the bank unless Galileo delivers? I mean, you've pigeonholed yourself into that corner, if you will. So I feel like you bear that responsibility. I mean, the onus has to stop with him, right? It's got to be on him.
I think, dude, my question would just be, why is the app not good? Like, why does the app not live up to the promises of people who want to use it as a platform to invest? And I think his answer is really simple. He's like, we don't make a lot of money off that. We make money off lending. And I'd be like, all right, but then where's SoFi? I don't know, TJ, if you know, but
then you're just a bank. Like, I got news for you.
TJ, SoFi's tangible book value. I was on the phone with Steve last night. We were doing the math on this. SoFi's tangible book value is $3.92. Let's just call it they're at $8 right now. They're already priced in a less attractive way than Bank of America, JP Morgan, Citibank, Wells Fargo when it's priced to tangible book. So if you use price to tangible book, they're overvalued at $8. So you can't use price to tangible book. You have to use price to earnings. You have to use something that makes it feel like, oh, it's a growth company, therefore you put a growth multiple on it. But then the growth part comes from either this like consumer investing ecosystem blowing up, which they don't even have level 1 options, so that's not helping, or it's Technisys and Galileo. I still don't know what the hell Technisys and Galileo are. And that's not just because I don't do too much research on it. It's because Noto doesn't talk about it ever on CNBC, right? He doesn't mention they have this AWS fintech B2B tech product. So if he doesn't talk about it, why should I research it? And then number 2, if the product on the consumer side is so incomparable to the other products I'm using like Robinhood, then what am I investing in this for? Having said that, I don't know if you know, TJ, but I bought 100 spreads for 15.20 for Jan 2026. Right. And it's a $3,500 bet. If SoFi goes to 20, it becomes 50,000. So I have my exposure to SoFi set up like that because I don't want to miss the run, because we've been talking about it for a long time. It might break out of an uptrend and the shorts might cover. But every time I think about why would the shorts cover, why would it break out of a trend, why would the institution start giving $15, $20 price targets, I end up in this place where like I don't know. I can't come up with the narrative.
I just don't understand that if people are so addicted to the Robinhood app, wouldn't it behoove SoFi to have something at least similar to try to draw some of that crowd? And on top of that, you have the damn banking charter that Robinhood will never have. Like, I feel like it's so much easier for for SoFi to tap into what Robinhood does versus for Hood to tap into what SoFi does, because they're never going to be able to do lending or any of that shit because they don't have a fucking bank charter. And then over here, yes, you can't do crypto, but you can do all the other shit. Give us, I don't know, level one options maybe. I mean, there's people that they could go grab, and then you could literally have all your money in one fucking place. Like, to me, I think SoFi is in a better position, but their user interface is just absolute dog shit.
Well, what's the 10-year thesis on SoFi? Because if it's not wealth transfer, the 85 trillion that's going to come to people like me that are millennials and stuff that are going to put it into Robinhood, et cetera, what is the narrative? The only narrative I have is online bank that's more convenient than Bank of America. And I don't know if I believe that narrative at all. So it's like, I don't know, dude. Like, what's the narrative? Is it Technisys and
You're making me
Galileo?
want to dump these spreads, bro. Like, I'll take the
No. But here's I was saying on the market open, I didn't want to buy the spreads, but I bought them because I've been talking about this damn stock. I have TJ on my show every Friday. He has God knows how many shares.
I SoFi pilled you.
Yeah, no, it's not even you SoFi pilled me. I'm not going to let TJ become a multimillionaire when SoFi goes to 15 somehow, and I'm over here like no exposure. Like
multi, because that would put me in a different. But go ahead.
But hold on, if SoFi goes to 15, how much do you make? 150,000 times what?
Well, that's what, a millionaire.
You make 2.2 million just on that stock if it goes to 15.
No, but that's just on that portfolio. That's only a third of my SoFi exposure.
Right. So you get into the tens of millions, which is like so I want to get at least if SoFi goes to 20, I want to get at least like tens of thousands if you have tens of millions. So I have that part as like my play. But the shorts got scared on Rocket Lab this week or 2 weeks ago or over the past week.
Yeah.
It hasn't happened with SoFi. And rates have already come down. So I'm like, okay, so what the fuck is going to get these shorts to finally say we're done with this? We're not touching it. I don't know. Is it going to be this quarter?
It's got to be buybacks, or it's got to be look. If they said, "Oh, hey, here's our new app," and it looks exactly like Robinhood, which, by the way, Vlad said, "I don't know why anybody hasn't copied us yet."
Right.
And it comes
He
out.
said it on Amit's interview.
I think at this point we don't know why these features that we can get in other places are not available in SoFi, and that the app sucks. Like at this point, you probably could have got some college kids to write you a better app and paid them peanuts than the one you have.
Amit,
so it's just like, at this point, it's like all these things were set up for you guys to do amazing things 2 years ago. 2 years later, we're still holding the shares, and y'all have executed nothing. You've delivered nothing. And all you talk about is loans. Well, you know what talking about loans gets you? JP Morgan and Bank of America, they put their bank expert on you, and then that person rates you in as a bank, and then they're we're underweight, and we got a $4 price target on them as a bank. That's because the bank analysts are the ones analyzing you. If you want to get a tech multiple, you've got to get the tech people analyzing you, and you're not going to do that not shipping any new products. Go ahead. Sorry, I'm ranting.
I mean, are you saying you bought call debit spreads?
Yeah.
Can you briefly explain what a call debit spread is and why someone would do a spread as opposed to just buying a regular leap?
Yeah, the spread just limits the amount of premium you have to pay immediately. So when you buy a long call, sell a short call on top of it, the premium from the short call takes away some of the upfront capital you have to pay, the debit you have to pay for the long call. So you still end up paying a debit, but it's a smaller premium. It does cap your profits. So I paid 35 cents, aka $35 for a $5 spread, aka $500. So the return is 14x. If SoFi goes to 20, that $35 will turn into 500 by January 2026. I do have to wait till expiration. So if it's before expiration, it won't be a 14x. It will take time to mature because I'm collecting theta on the short call. But I think that's better than buying a naked call because it protects my portfolio when things are more volatile to the downside because I have that short call that's collecting theta. And capping my profits at 14x, I'm okay if my profits are capped at not infinity but at 14x. You know, that's more than happy for me.
Yeah. So you know exactly what your max profit is. It takes less money in order to buy those spreads as opposed to just buying regular leaps or calls, and you limit your risk basically.
Yeah, and honestly, you know, the way I learned this was from Chris. Chris hates buying naked calls, and Chris is a bit of a mentor to me. And the more I thought about it, I've bought naked calls in the past, and I've gotten burned on them so many times, and it's like, why? You know, like, why am I not collecting something to help me when things get volatile? And so for me, whenever I think of doing something long 2 years out, it's always a little bit more, how do I cover the downside with the upside, even if I cap my profits? The one mistake I made is when Robinhood was 10 in my Roth, I bought 200 calls for $25, like just straight calls, no spreads. And that was Robinhood was $10. Robinhood goes to 13. I sell them. I make $5,000. I'm happy. Robinhood's at 22 right now. I would be up like $75,000 if I had just held them. So that was a mistake I made. But yeah, usually I do spreads.
And you like that as opposed to
you have
like
to have level 3 options to
then
do
waiting
spread
for it
stuff.
to run up a little bit before you sell the other portion of the call.
Yeah, I usually close it at in once. I close the entire spread at once. So I kind of wait until I think the premium I'm getting on the spread is enough from the premium I paid. But that does give you options. Like what I did with some of the Robinhood spreads is I rolled out of the long call and I extended the strike. I got a net credit for taking out my initial, and I was still able to capture some of the upside, even if it wasn't as much of the upside as before, based on rolling up and out. So I think there's a lot of creative ways you can navigate the position. You've got to be right on the direction of the stock and the stock, obviously, but it's much easier in my head to manage the risk over the long term.
So
You can get a lot more leverage too for your dollar, because on a leap, right, you're paying a lot of money for the time value, and because you're also selling the long dated, the short call on top of it, you're collecting a lot of that time value back when you sell that call. So there's still a little bit of a difference in there, but that's part of what goes into the spread. But that allows you to buy a lot of contracts where you wouldn't be able to if you had just done the one.
But also the other side of that, and I definitely love call debit spreads, particularly, or debit spreads in general. I like to use them to hedge as well. But one thing is if it doesn't move like in time, you're kind of costing yourself, because like TJ has a lot of leaps that are open leaps, and then so he's writing several rounds of covered calls, essentially, making those poor man's covered calls basically in order to collect a lot of premium, which can help offset that stock not moving. Like if you had been really bullish on SoFi like for the past year or two, those spreads are just dying.
But the calls would be dying too, right? So you got to be right on the stock no matter what, and the direction.
Well, the calls would be dying, but you'd be able to like keep selling rounds and rounds of cover calls to make back some of that.
So that's my if you're doing, isn't a poor man covered call just the call debit spread?
Yeah,
with a calendar.
Yeah, it's pretty much exactly that. The credit you collect, I'm paying in upfront. It just reduces the net debit I'm paying. TJ's just collecting it over time if he runs it many times.
And compounding it.
And compounding it, correct. Yeah. Yeah, that's true.
Yeah, you're placing your bet one time, we're picking spots, and we're like, hey, it looks like it's going to be flat, or there's not a binary event, or there is a binary event. I want to maximize the cover call premium. So it's gonna minimize your cash outlay every time you do it successfully.
But are you doing poor man covered calls like monthly? Because usually you do a leap poor man covered call.
No, so you buy the long call, that's the leap, right?
Okay, and then you sell calls on the monthly.
And you sell calls weekly, monthly. You pick your spots, and then if shit doesn't work out, then you can just sell the covered call to match your leap, and then you created your debit spread. If you haven't collected more money than your capital outlay for the actual long call.
So if I buy a call on Nvidia for 150 in December 2026, I can sell a call on Nvidia for next week. Like the math works out for me to sell that call. Wow.
Yeah.
I didn't know that. Wow.
Yeah, but you'll only pick up a few cents. So rather than the price of the debit spread being, 5, 6, 7, 50 cents or whatever it's going to be, you'll only get 1 cent, or
So
you'll only be receiving 5 cents to reduce the price of that leap, right? So
Right.
if the leap is $10 or $15,
Right.
like a Tesla leap or something like that, and you get 4 cents back, well, it's not going to take a big bite out of your capital outlay.
Right.
the logic for the poor man covered call is that you control those same 100 shares without having to pay for those 100 shares.
Right.
And the
Yeah.
covered call premium is the exact same as if you own those 100 shares. So if it's not a dividend paying stock, you're not really incentivized to own those shares, right? Mathematically. So it's a more efficient and a proficient use of capital to buy the leap, sell the calls against those leaps, and then you're, theoretically lowering your adjusted cost basis a lot faster. Like I've sold covered calls against Tesla until I got underwater on those, and then I had to kick the can down the road. But dude, I was bringing in a lot of money on my 150 leaps.
Right.
Because it's paying the same money, right, as just owning the shares. So you essentially can control, like at about an 80 delta, 85 delta on the leaps, it's typically about a 40-45% capital requirement than as opposed to owning the shares outright. So that's why they call it the poor man, because you don't need 100 shares worth of delta capital to be able to participate. And it's it's effective, but you also got to manage them accordingly. And you can't get underwater on the covered call because you can't get assigned on shares you don't know. You're going to be in trouble, right?
Yep.
So TJ, when can we invest in your hedge fund?
Man, I think that I'll have all the licenses in about 120 days.
Accredited investor, ready to go. Send me the paperwork.
About 120 days.
I never heard from anyone on that other thing, by the way, Amit.
There's legalities that I'm obviously learning as we go because I've never done anything at this scale. So I'll be popping my cherry in front of everybody. But I have this idea to like crowdsource a lot of it. So like literally have panelists that I'm paying because they're like legit helping me try to like allocate this money, kind of like what we're doing, but like on steroids.
Yeah.
And I've already talked to Steve from Dividend Streams.
Yeah.
And I'm definitely considering offering him a position, a research position to help me not step on landmines, right? Because I mean, there's a lot of money, dude. It's a lot of capital, and people are trusting me. So I'm using the little platform that I have, and thankful to people like you that have exposed me to a lot more people. But I'm tapping into very, very bright minds to help me navigate it because doing 7 million is very easy or simple for me now. But 100 million, dude, you're searching for a lot more opportunities, a lot more contracts. I can't just be stupid with the neos of the world. I mean, I'm gonna have to do the Qs. I'm gonna have to do the spies because you gotta look for places to hide capital but still get yield.
So two things. First, Doug, just send me your number. I'll add you to that WhatsApp group for the group of people that I told you about. Two, okay, so if it's 100 million you're managing, is the strategy individual stocks because that still is the most premium, or is it SPY because if worst case comes to having to buy the shares, at least you're just buying an index?
Yeah, so it's going to be about a 60-40, 60% individual and 40% ETFs.
Is that going to do it for you though? Is that going to get your soul on fire? Because it'll be kind of boring, right? Just wheeling SPY.
Yeah, it's fucking cool, but you're barely beating the indices, dude. Again, dude, like they're paying me because, dude, my claim to fame is what's documented is I was over 25% for 4 years in a row. The collective average is over 40 because I had COVID to help me, right? So it's like now they want me to deliver on a larger scale because that's the kind of shit that puts you on the map. And dude, I average 2.9% per month in premiums. That's what I get. Like when you look at any portfolio that I'm associated with, that's what I get in premiums. And I'm about 7% of capital appreciation per year.
So hold on. If you're doing 3% a month, that's 36% a year. Most hedge funds barely do 15%,
I
right?
know, but they're famous and I'm not, right? So
No,
so
but
they
if you can actually do 36 a year with 100 million,
it's
I feel
insane.
like you're going to raise a lot more than 100 million when those results like compound, because
And that's
most hedge funds can barely do 15%.
and that's the goal. But I mean, I don't know if it's sustainable at those levels because you're talking about a lot of contracts. But this is where having this is where having a platform like I use in trading full transparency. There's a lot of smart people that have been tracking me that make a lot more money, and they're like, "Holy shit, you might be onto something." But do you know how many premiums I've collected in the big portfolio for the year so far? Like it's documented, and I can literally show all the fucking trades because it's what I do on the channel.
Like 1.5. I feel
No,
like.
bro, fucking way more than that. It's 3.153 in total
I was
credit.
gonna say 3, but then I thought it's a little bit less.
That sounds high.
That
No,
is
it's right. It's
pretty
right.
high.
God
Yeah,
damn.
but here's where it gets insane. I started the year, and there's been deposits since January of 1.8. So I didn't even start with I think like 3.2 or something like that, 3.194.
Yeah.
1.8 came in, and then these are all the credits. Dude, this is every single credit for the year, and then the debits are on the right side. And on the right side, the debits are also leaps. So I collected the three. So it's a lot of trades, right? So I sold
Bro, would you have the 100 million in Robinhood?
Dude, I'd have to honestly talk to your boy right now. Right now,
Or he's
Yeah,
no,
your
would.
no. I'm saying because right now the contender right now is Charles Schwab
yeah.
because they've already done an LLC with them. It's painstaking, and I don't like the platform, but I also know that they're not closing their doors, right?
But
And
I have a
Fidelity,
couple
Prime
friends who
Fidelity,
have
Thinkorswim.
or Thinkorswim, yeah. But there's a couple people I know that have 100 million in Robinhood, like legit cash in Robinhood, and so like it is possible to manage that much.
yeah,
If I
so
was putting 100 million in Robinhood, I would want Vlad's number.
Yeah, I think.
I'm just saying, dude, because this is like I don't want to go to jail or anything, so I got to know. Like, I don't even understand what the legalities are at these levels. Did I have not done it before? So just just to let you all know where I'm at. But dude, there's 3.15, but then I also bought 964 in leaps, and then that's how the portfolio stands. The leaps are up a couple hundred, and then I'm up 608,000 on the shares.
Bro,
So
the smartest thing you did this year was figuring out how to get the fuck out of N phase, because that thing has been a loser for the past year and a half.
Well,
And
what
I
I
don't
did,
know if you made it
what
back
I
to
did is
the
I bought 50 leaps, and I successfully managed 3 covered call campaigns against those. So I brought in about 50,000 on 220. So
Yeah.
now my net outlay on those leaps is like 170. And dude, it's like every month it's good for like 20, 15 to 25 grand in premiums. So dude, what I've really learned the most is the power of these leaps and running the cover call campaign against those leaps. It's way more capital efficient on such a dicey situation. Because you're lowering your adjusted cost basis like crazy because you're only in it for about 40-45% versus owning the shares outright. And if there's no divvy, dude, I mean, mathematically, bro, like everybody that makes huge money keeps telling me, like I shouldn't even own one SoFi share.
because there's no dividend.
It should all just be leaps and then sell calls against those leaps and go put the money somewhere else. Hell, go do TSL. Oh, you got a divvy. Go do BITX. You got a divvy. That's why I started going so heavy on those ETFs because I was getting that shit in my ear.
Hold on. So their logic is that if the shares don't have a divvy,
There's no point in owning them
Why?
because you're going to get the same covered call premiums. Why are you going to tie up the money? You're not incentivized to own those shares because you don't have the other spoke of the wheel, which is the dividend.
That's a good point.
Dude, the wheel strategy was meant for dividend stocks. The original thesis for the wheel strategy was meant for dividend stocks, and the fourth spoke of the wheel is the actual dividend collection.
Huh.
So you're just manufacturing a dividend on steroids that is no longer, that's not there. But because you're supposed to do it on stocks that kind of just do this right here, right?
Yeah, they're just range bound.
Yeah, they're range bound. But I'm like, well, what's it like to wheel growth stock? So now I'm learning, like, probably by sometime in 2025, y'all probably not going to see a lot of share ownership because I've had about 6 months to convince myself that, dude, I make a lot more money on the tickers that I'm buying leaps on and selling covered calls on. And then now I have a shitload of money to do my bread and butter, which is selling cash secured puts. How well has that worked on our little deal?
Yeah.
So if I had an extra $2 million that wasn't tied up in share ownership, you're talking about an extra $70,000 to $80,000 of sleep easy money, which is selling cash secured puts because that's my bread and butter.
Dude, I remember the day in March where TJ on the channel, he like talked about selling puts on margin, and we ended the stream, and I don't know if you remember, I called you right after. I was like, "Are you lying, or can you actually like use Robinhood's money and for no interest?" And he was like, no, you can actually do it. And I started, and they gave me a couple $1,000s, and I sold a couple puts, and I was like, did I just make some premium off someone else's money? Like I couldn't. And then I told Steve. Steve didn't believe me for a good 2 months. I was like, Steve, just call Schwab and get it start. And then he called them. They gave him the margin, and he was like, holy fuck. He still hasn't done it because he's scared to do it, but it's like, it's crazy.
It's crazy, bro. But I mean, you got to be careful, and you also have to look at what's your personal cash flow situation. Like, there's another million going into the account in about, we'll start tomorrow. Because with Robinhood, you got to do like wires. If it's, well, now they're letting you do up to 250,000.
Yeah.
But if I do I can do the whole million in a wire, but they'll only give you access to like 50,000, and then you got to wait like 5 to 7 days for the rest of it. But there's another million.
You're getting those lower margin rates too now.
Yeah.
Yo, TJ is gonna be the guy borrowing 50 million, bro. Everyone's wondering who's gonna do it. It's gonna be fucking TJ.
Yeah. I won't own shares on margin, dude. I mean, I'm doing like, I have like 14,000 or so in my son's account, but that's just an experiment. But I just won't do it because as the channel grows, I don't want to show that kind of fiscal irresponsibility because there's people that follow you into these trades, right? No matter how many disclaimers you put out there or whatever, people are going to be people, and they're always looking for the shortcut because they don't want to do any work. I'm full transparency, so it's easy for them to copy, and I don't want them to copy that because they don't have the access to cash that I do.
Right.
I mean, if I get in trouble, I could literally call my father-in-law to bail me out. They don't have that. You know what I mean? Most likely they don't have that, right? There might be a handful of people that do. So I'm just in a very unique situation. And I'm not, so I'm not going to condone or I'm not going to like promote behavior that's just not duplicatable or sustainable, even for me. Because you bail me out, but there would be a huge ass lecture coming shortly after. and I don't want to have those conversations with them. So there's that. But yeah, man, I'm excited, dude. I'm studying like crazy for the Series 65, and I'm also trying to figure out how to become a principal. And doing the whole Meet Kevin, dude, where Meet Kevin went and got a bunch of crazy ass licenses and stuff that he didn't even think he needed. But certain people that were going to carry these licenses, they bailed out at the very end. We all follow Meet Kevin's story. It's kind of.
Are you selling a coupon code? Are you selling? Because that's what I'm worried about. When Amit goes to India, he's going to come back, and I'm going to have bought a coupon code just because there's nothing else to freaking watch in the market open, and I'm not getting my fix.
The only thing
I get my Celsius, my coffee, and my morning open before I go to work in the morning.
You drink Celsius and coffee together?
It's a little bit of coffee. It's like a shot. It's
Hey,
like a
dude,
shot.
real quickly, Amit, since you know everything about every freaking ticker out there, now I call you my little encyclopedia. What's going on with Hims, dude? Because it's made us some money in our little program. And I remember Chris telling me that he was considering wheeling Hims. What's going on after hours? Did I see that it's definitely tanking a little bit, or tank?
Eli Lilly, there was an article on Eli Lilly that the GLP shortage is not happening, meaning there's an excess supply of Ozempic. And so people are thinking Eli Lilly's demand is going to come down aggressively. And somehow the market has interpreted this company as a fucking weight loss company, even though it's not.
It's like 7% of their revenue, right, or something minuscule.
I don't know. Yeah, it's a minuscule part, but it's a dick pill company. It's not a weight loss company, but
well, it wasn't getting these multiples when it was a dick pill company. When they heard
That's
weight loss,
true.
then they started giving it multiples.
So now you got to deal with the pain with the Ozempic stuff. So yeah, I don't know if it's a buy the dip here, but I think the headline's kind of stupid, and I think down 7% is kind of stupid.
I was driving, but I heard you. What's the paper guy? What's his name?
Yeah, Paper Gains Jason.
His name's Jason.
Yeah.
So I heard y'all charting. I was just listening because I don't like to. I mean, I was driving, right? But I heard y'all talking about Celsius. What was the conclusion of that? Because I had to get out of the car.
Conclusion to that, he's going to get assigned on a bunch of $30 puts, most likely, or $32 puts, and he's happy to buy it. I don't think it's horrible at this price. I'm just, again, what's the narrative with Celsius? Like, what is the narrative to get us back to 60, 70? Because it's not growth anymore. If it was growth, it would have never fell down here. I don't know. Like, are they going to take Monster and Red Bull's lunch? A little bit of it, maybe, but you got to remember, look at the max on this, TJ. Like,
Yeah,
Celsius is up a lot.
Yeah, it went crazy, and then it came back down. Look at this.
I mean, it's still up 800,000%. Like, this stock has done very well. Even over 5 years, I think it's up a couple %. So
yeah,
people wanting a double on this, if you weren't here for the past 5 years, it's tough to, want it now when it's 30.
Yeah, look at that double.
And the hot girls are done with it. I mean, they've dropped it like
wood.
They dropped it like Woody. I don't want to play with you anymore. What happened? Chris Patel made it popular, and a bunch of 45-year-old dudes started buying it, and then the girls were like, "Nah, I ain't about that."
Dude, Chris pumped the shit out of it, and then he saw it falling, and he's like, "I'm out," and he was gone. He did what Chris Camillo did. They both pumped it. They both saw it was bad, and then they just left. It's hard to do that, but they did that.
I got out of the options, but I was like, "Oh no, I'll be okay in shares." I am not okay in shares.
Dude, if Intel makes a comeback, if Celsius makes a comeback, like,
dude, Intel is not making a comeback. Intel is not making a comeback. Sorry, PJ. I know you got Intel.
I think it'll take time, but I think it gets back to 40. It's going to take some time.
So I got
one. The share price, I know, but it's not making a comeback as a company. It's done.
I got one for you, Amit, that this company, I feel like it's not going to go anywhere because it runs too deep with the government. But like,
I already know it. Boeing.
Yeah, dude. I mean, if not now, when though, dude? I mean, my goodness.
The premiums suck though. It's not worth it if you look at the premiums.
Yeah, I know, but I mean, you don't think this thing go to 200 at some point?
No, I think Boeing's not going anywhere. So I agree with you. It's just the management fucking sucks on this thing.
Yeah, do they need a new CEO? Where are they CEO?
So I mean, that might be one to put in the back burner and come visit it in a year and see if you like the CEO. Because like, look at Alex at PayPal. Okay, everybody knew he was going to be a good CEO, but it still took a year for that stock to move.
Yeah,
like that thing was stuck at 60 for a year.
But what's this return though? If you tie up 14,000,
6.6.
But it's over 106 days. I mean, isn't that the equivalent of like 25% a year?
Yeah, it's 2% a month basically. That's not horrible. It's not bad.
Yeah, I'm just saying, like, I mean, this company, where's it? I mean, is it going to go to 80 something? I remember during COVID for a hot minute, it was at these levels.
Yo, what did you guys? All right, so Doug, go first on this. What did you buy during COVID?
What did I buy during COVID? I was
Both
During
of you.
COVID, I bought on the first day of COVID, I bought Carnival Cruise Lines because that dropped right away. And most of the other time in COVID, I was just buying the indexes.
Really? That's it.
I didn't have any. I didn't have any faith in anything. Plus, I got laid off not long into it, so I wasn't having a lot of capital coming in the door. But yeah, as far as the stuff I did have that was going in still every week into my 401k and my, or not my 401k, but my Roth, that was just, yeah, it was just indexes. Uh, do I wish I had gone, Eli Lilly or Tesla, obviously, but no, I was not in a position to take risks at that time. I mean,
Okay,
I'm
TJ.
I'm living a fundamentally different life than I did in COVID.
Yeah, I can tell. I've seen screenshots. I know. TJ, what'd you buy during COVID?
So I was just transitioning out of the oil field because that's when we got laid off was during COVID. And I remember a couple of my first trades were a company called Plug Power.
Remember
Plug Power. So
Yeah,
anyway, it was a swing trade. I made like $3,600 in shit 2 or 3 days. It was ridiculous. The guy came on CNBC. He was talking to Kramer, and they just pumped the shit out of it. There was another one. It was a battery company called QuantumScape. It's an Indian dude or he looked like an Indian guy. He was the CEO. He was on Kramer again. Kramer was like my source, dude. I'd see what the CEOs would say, and I'd swing trade the stock after studying the trade. I made like $8,000 on a company called QuantumScape. I want to say they do some shit with batteries. Dude. This was a while ago. And again, I wasn't wheeling at the time. This was just swing trading. Boeing made me, I think, about $42,000 total swing trading it. It had crashed to like the $80 range, or it was something ridiculous, dude. And then the other company that made me pretty good money swing trading, but it took longer than I thought it was Disney. Disney was like pretty low, and it wasn't Kramer. It was a guy named Barney on the Fox channel.
yeah,
Is that it? Is that his name? The older gentleman named Barney, I want to say.
yeah.
And he was like Disney at these levels. That like he was just like dumbfounded. This guy, and then there was the black dude, the bigger black guy on.
Charles Payne.
What's his name?
Charles Payne.
Yeah, and he was like, he wrote a book or whatever, and he talked about it too. And I was like, dude, Disney seems like a can't miss here. So I made pretty good money on Disney, and then I bought a position on Tesla. Didn't see it throwing up, but I was real happy with the money at the time. And then that's when I was already like starting to study like cash secured puts and cover calls because what I was doing wasn't sustainable. It wasn't oil filled money, I feel. And I was spending too much time playing poker. And then it took me about 6 months of studying to like be like, I think I could become TJ the Wheel Deal.
Yeah.
Like this is the thing that I want to be known for in the market. This is who I am in the market. So I used COVID to discover that I wanted to be in the market full time. And then I also used it to figure out who am I going to be in the market? Like how can I like legit make oil filled money? That was my goal. It was just to replace oil filled money without having to be away from the family. And
Mm-hmm.
now it's like I live a life that I couldn't have even.
We're talking about now, and I am remembering. Yeah, I was trading. Some dog crap. I was trading Unity. That's a big loser. Yeah, Unity, UWMC is a big loser. Rocket Mortgage, big loser.
Yeah.
I watched GameStop. I was fascinated by it, but there was no way I was putting actual money in that.
I think there's something good about people who didn't make a shit ton of money during the GameStop meme stock craze because it was such easy money that I think it kind of conditioned people to get into a gambling mentality. Like I have some friends who made a lot of money during that time, and like their entire mindset is just gambling versus like because they got lucky once on
Yeah.
GameStop,
Yeah.
right?
So they don't know how to invest. They just know how to
Yeah,
put
and
it on
look,
black.
I'm not saying I know how to invest yet, but I feel like I'm like really taking this year, or I have taken the past 9 months of 2024 to like figure shit out, like whether it's wheeling or looking at balance sheets. And like I'm not perfect at it yet, but I feel like those are just things over the first 5 to 10 years of being an investor you have to nail, and then you can have your little YOLOs and gambles. But
Yeah.
that stuff's important, bro. Otherwise, like you don't have a career in this long term, you know.
So the wife wants me to go to sleep because I've got to meet with her dad tomorrow at 10 because they're
Yeah.
looking at putting together some serious funds for me for the family trust. So here's what I would like to ask Amit, because I paid for this mentorship, and it's quite a bit of money. And they were like, "What are the 3 things that you learned this year that are making you better at your craft?" So Mitt, I feel like you've gone on a big time learning expedition since I've known you, and you had your channel probably a year before then. What have you learned? What are 3 things that you can feel like, hey, these have like categorically like really changed my game for the better. If what have elevated my game. If you could like pinpoint 3 things. And you can change these, right? But just off the top of your head, what are 3 things that have made Amit a better investor today than January?
I think 3 simple things are: A, who's the leader of the company? Is he a founder? Is he is he just a random guy the board of directors put in? That's like the first thing I look at. B, is the company profitable or not? Like in 2020, like I didn't even know, it's the first question you are they profitable? It's like you never even
We
thought,
made fun of you earlier. We were talking about
yeah, profitable. And then
Mike.
What was that ETF? We actually looked at it that kind of discovered it was the
small cap
small
profitable
caps that are
IRJ,
profitable.
IRJ or something.
IRJ.
Yeah. I couldn't believe there was a small cap profitable ETF, but like apparently there is one.
That seems like the only one that should matter.
Yeah, I don't know why Tom Lee's talking about IWM. Like we should talk about the profitable ones, but
TNA? Are y'all talking about TNA?
no, IRJ. TNA's leveraged against IWM, but we're talking about a small cap ETF, but there's only profitable small caps inside of it. So not all the junk that's in IWM.
Interesting.
I would say the third thing is does the company have a moat? Like a real moat? And I think that's a hard question, dude. Like, does Lululemon have a moat?
Yeah.
Some would say no, but others would say yeah. And like that's a debate that you really have to have, you know?
The people that want to look rich at the gym. I was saying there's people that are very obsessed with looking a certain part and certain symbols. I mean, it might be a reason why I gravitate towards Ralph Lauren. That and I was just like as a kid, I liked horses. I still own horses. I'm like, well, that one's got a horse on it. That one's for me. But then now I also realize as an adult that well, people know he's got a $110 shirt on. Subconsciously, whether it means anything to me or not, that's just the fact that these fucking shirts cost $110 unless you find them on sale. So it's just little shit like that that I don't know. I think Lululemon has a little Ralph Lauren, Peter Millar shit going on.
But like the concept of a moat, I feel like is hard to get good at. Like Buffett talks about, like, does Palantir have a moat? I would say so. There's a lot of people that say there is no moat. Does Nvidia have a moat? I would say yes. Some people say no. There's like, it's a hard question, but it's an
It
important.
is. I mean, like I look at like Louis Vuitton, dude. You can't tell me these women and men too. They ain't buying that shit just because it's expensive. Like, like I think being expensive in your category is a little bit of a moat.
Yeah, when you get to that celebrity level, you can't come to a party with a shirt that's $20. It has to be hundreds of dollars or thousands of dollars. Like it's just, that's how it is.
You used
What
to be able
about
to.
you? What
It was
about
called
you, Dougie
grunge.
Dollars?
It was called grunge, Amit, and it was awesome.
What
called
about you,
grunge.
Dougie Dollars? What have you learned this year about your craft or about yourself that you feel have made you better going into 2025 here in the horizon?
I have learned a better how to do due diligence and break down a company, but I mean a real. I don't mean a stock for purchase. I mean purchasing a company.
Yeah.
Purchasing the laundromat this year.
Dude, that
Obviously,
is such a cool thing you've done. Like, that's the American dream, taking money from the make-believe land of the stock market and then putting it into the real world. You know?
yeah, I'd be up a lot more though on.
Yes, but like it helps you sleep well at
Like
night,
I
right?
bought a distressed business, okay, and it's still distressed because the guy who bought it didn't know how to run it.
Right.
Okay, so I have to learn the laundry business. This is the first thing I got to do. Somebody on TJ's channel actually messaged me, wanted to know about doing stuff because I think I had an X post or something. It was like, if I had to do it all over again, I would do this and this and this. And so
Right.
he messaged me and said, "Hey, can I call you and pick your brain?" I was like, "Sure." So we
Wait,
talked.
but
And
if you had to do it all over again, would you wheel? Would you take the money and just keep wheeling it, or would you still buy the laundry business?
I would still buy the laundry. I would not buy the laundry business. I would keep wheeling. I would invest in starting a laundry business, but I would
Okay.
not do it by buying a brick and mortar store. I would start it by finding some people who I know that I'm friends with that would let me do their laundry. Like I'll come to your house and do your laundry. Okay. And you pay me blah, blah, blah. And start off with a individual like concierge laundry service, roll that into pickup and delivery after you kind of go to their house and do it a couple times. Then be like, okay, is this service good? Is it valuable for you? Okay, I'm going to start doing delivery. Then just take it to the nearest laundromat, build yourself a little route, 2 days a week. You pick up laundry, you do it, you bring it, you fold it, you bring it back, 2 days later, and you kind of build from there. Meanwhile, you have no expenses except for the time on the machines that you're using, but
Yeah.
you've got the revenue up front to handle that expense. Meanwhile, and then once you grow to the point where you need your own facility because you have so much volume, and it's not that hard if you think about it. Add two weekly customers per month for 2 years, and you will have more laundry than you can hire people to do
Yeah. Yeah.
at $1.35, $1.50 a pound. And you're able to pick customers who are in more affluent neighborhoods, so they'll probably even pay more.
So you still feel the percentage return on wheeling would have been a better use of capital, basically?
I mean, you've seen the balances in my portfolio. Add $200,000 to that. Like,
Yeah.
what do you think I would have done? What do you think I would have done with that if that had just been in Palantir? Not even wheeling. If I had just kept my Palantir shares or the Robinhood calls.
Yeah.
Because that's what happened. Is I sold the Robinhood calls to buy the laundromat. If they had just been the Robinhood leaps, where would I be?
Yeah.
Actually, I'd probably be flat from July-ish. But
Yeah, but you've stumbled upon theoretically a perpetual cash flow business.
Yeah, I've got a business nobody can fire me from.
Right.
Right.
And it's a business that, if something heaven, banish it, something happens to me, it's a moneymaker for my wife.
Right.
And like
right.
I said, it's fun weighing your money, counting your money by weighing it is fun.
I think of you like Walter White, dude, with the laundry business because he had the car wash. Like I think of you in that same
Yeah.
way.
I mean,
So
I know how much $600 worth of quarters weighs now.
That's crazy.
So just
When I was in the oil field, I learned that a gallon of water weighs 8.33 pounds. I had to weigh the
how
mud.
much does a gallon of oil weigh?
I learned about viscosity and all this stupid shit from the oil field, bro. I tried to forget those 8 years of my life.
I'm a pipeline asset integrity engineer.
Okay.
So I'm very
Hey, what
familiar.
about you, Amit? Have you ever had a real job besides like showing people how to talk real fast and make
He had Audacity. He was CEO. I was going to ask you about that. I was like, how much did that kind of inform? And is that how you got? I've never heard like the backstory on Amit. Like, how did you get connected with Chris, Vitality, and Carlos? Like, how did?
Dude,
were they
it
like
was
Audacity
YouTube.
investors?
No, so it was Audia, but it was
Audia,
yeah.
right? Not
They ended up becoming investors. TJ was a small investor in that as well, but it was YouTube Finance that got all of us connected. And then I had my idea. That idea didn't end up working out. I realized content is where I like really am passionate and I can probably build something much bigger. But YouTube is what connected all of us. Me and TJ connected over SoFi on Facebook Messenger. I messaged him and that's how we connected. And Chris messaged me because he liked Palantir. Now he hates it, but at the time he liked Palantir. Vitaly and Carlos did a video saying Alex Karp was stupid. And then I hit them up and then we did a podcast and I tried to change their mind. I was unsuccessful, but it is what it is. And that's how we all came together. But yeah, I've never had a real job. It's always been consulting people on, like, I started making $75 an hour at 19 years old on how to talk to people.
That's awesome. That's awesome.
It was insane. But like,
that's priced about right. Yeah, that's priced about right though.
Yeah, and so and then I started charging 125 an hour. So like I never had to go to fucking, you know, a corporate job and work. And so it's been crazy, but it's also been a crazy journey just because I've never had like a guaranteed kind of healthcare. I never had this 401k benefits. I've never felt those, like, my life has just always been insecure outside of like living in my parents' house and having rent paid for, which I'm so blessed for. Everything else has been like, you got to figure this shit. Even with streaming and YouTube, it's like you take a day off from YouTube, you don't get paid, you know?
Right.
You know, it's like I don't have a $7 million portfolio where I could wheel and live off the wheel. It's like you got to like actually make this content. You got to really start doing this shit, you know?
But how much? Because I mean, obviously, you probably keep up with people that you knew at Rutgers and from your high school and whatnot. What kind of pressure did you feel? Like, hey, these people are advancing the world. Look, they got their car. Look, they got their fancy little apartment in the city. Like, what kind of pressure did you feel saying, hey, I have a 5-10 year game plan that if I stick it out, live with mom and dad, stack some cash, eventually learn how to build a portfolio, build my brand. Yeah, you guys are walking right now, but motherfucker, I'm going to hit the gate flying.
Dude,
so where
I'm
just
telling
saying,
you,
like, what kind of pressure did you have, like peer pressure, if you will, or was most of your circle pretty supportive because they caught your vision?
No, most of my circle was going off and working at Goldman Sachs. But I would say on a scale of 1 to 100, 99% of my mind in the past couple years, since graduating college, it's been 4 years, was saying, I'm right, fuck you, you're wrong. There was 1% of me that always thought, oh, maybe I'm doing the wrong thing, going the unconventional path. 99% of my mentality was, these guys.
I love that conviction. I love that.
It's like I can't even. I'm not even trying to be brag or be cocky about this. Like, genuinely, to start a startup and then to quit the startup and then to like start a YouTube channel, you have to have this like irrational belief that like you're on the right path. And what really confirmed it was 2021. One of my homies from college, she called me, and she was crying on the phone, like crying, and she was just like, I hate my life. I can't, like, every day I wake up and I go to this job and there's no purpose, no meaning, blah, 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 blah. And she was like, I'm like, yo, this is the most first world problem ever, right? Because you're crying because you don't have any purpose or meaning in your life. You're making 120 grand a year, right? Like, boo-hoo. But that is a real thing people deal with. It's like, once you have the food and the shelter and you have your nice apartment in DC, you have to realize that you have to keep paying for that apartment. You have to happy hour. You have to put up this persona. And I never had to do that because I just always went my own way, you know?
Well, and they got no family to put in that house either. So I mean,
they got no family. I mean, dude, she got a dog. Then she had to send back the dog because she couldn't even take care of it. She thought the dog would take care of her depression. No, dude. Depression is like, it can get very real. You've got to like have a real purpose in life. So I think I've always just had a purpose. And with YouTube now, every day you wake up in the morning, there's people that want to hear from you. That's a purpose. And it's like, yeah, it's been a cool journey.
It's been fun to watch. Because I guess I kind of came into Finance Junkies midway. I guess you were probably midway through. You were still on. Y'all still on your channel.
Yeah, yeah. So it was 2023, like July-ish. Yeah.
So you branched off a little bit, didn't you? Didn't you create another channel? Because I feel like I subscribed to something, but then notifications don't really come through. So you were doing something else, like little Palantir bits. I'm not sure what it was.
Yeah, that was a while ago. Like I was just clipping up my Palantir content and turning it into like small clips. What I really want to do for 2025 is start a podcast, like a legit fucking studio.
You gotta move to Austin.
Maybe, dude. Maybe. Like I want to sit down with fucking Bill Ackman for 3 hours. You know, like I want to start that type of podcast.
Get up with dude. Jake Cal will hook you up.
I think my network's growing to the point where I have a lot of connections and I can make the guests happen.
Probably
I
at
just-
least you're probably 1 or 2 away probably from getting
from a lot of these people.
hit with
Yeah.
him. Yeah.
Like a lot of
That's what he's doing in Austin. He is building like podcast studios. That's what he's doing there.
You're talking about Joe Rogan, right?
yeah. Yeah,
Jason
Rogan,
Calacanis.
yeah, Jason Cal he's a startup guy who can get me. There's just so many people that I think would be willing to like Chamath, all these fucking Noto, hopefully one day, but like Vlad,
Yeah.
all of them want to sit down because they know that like if they could have a conversation for an hour, the distribution of that conversation could get their company and their brand is so big. So they're willing to talk, but they
Right.
just got to talk with the right guy. And if you can be seen as the right guy over the next couple of years, you can really build out like a meaningful enterprise from that, you know?
So aside from like learning how to like be a WeLearn investor and all that stuff, are you like essentially trying to become like a Meet Kevin type, like with like a CNBC type channel where you're already streaming 3 or 4 hours a day. Like, I mean, is that like sustainable for you? Like, I mean, I know you love doing it, but I'm saying, let's say your Robinhood calls or whatever works out, you wake up and you have $300,000, and you're like, holy shit, I can make an extra $75,000 a year over here. Do you want to free up some time at some point off of having to go live so much, or where do you see yourself in 2 to 3 years?
I think this goes back to my attention thesis. So like, there's just two nuances to it. The first nuance is you have to get people's attention, and you got to keep it no matter what. The
Right.
second part is you got to not sell out when you get that attention. So the reason I'm so grateful to you, TJ, on teaching me how to wheel is because if I can get things in motion by the end of 2024 and things work out, I hopefully have enough capital where I can sustainably use that capital to never have to sell out from the attention that I already have, meaning
Right.
charge the coupon code, all that stupid shit, right? If that's resolved, then I don't need to make money off of YouTube in like the sellout type of way. I can just focus on building YouTube and keep the attention that I have and grow it. And so in terms of that second nuance of keeping that attention, I don't know what I want to do in the next 5-6 years, whether it's become the next Lex Friedman or whatever it may be. All I know is that the attention is here. It's compounding. It's growing. It's like aggressively starting to scale. And I love doing it. Like I fucking love doing this. I love going live 6 hours a day. So is it sustainable? I don't know, but I am ready to keep doing it and let that build into whatever it builds into. And you get more motivation. Right now, it's like 2,000 people live every morning. If that turns into 5, 7, 8,000 people over the next 4 or 5 years, like that's a legit enterprise. You know, a legit.
Is this you guys
Dude, if you have an audience of 8,000 people in the morning, that's got to be higher than CNBC.
Hey, hold on 1 second though.
I'm not
Is this
joking. I'm not joking.
Hey, hold
2,000
on.
viewers.
Is this who
Sorry,
y'all
go
are talking about or no?
Yeah, this is the
One of
podcast.
them, yeah.
Who the fuck is he, dude? I've never even seen this dude's face or heard his name until like 2 days ago.
You got to see his content. Dude, how have you never seen this guy? This guy is.
I know who Joe Rogan is, but who's this guy?
He interviews that. If you go to his YouTube, he interviews like every big name sits with him. But dude, CNBC has.
Is he like the guy that was sleeping with Yannick Garcia? What is his name?
I don't know who that
Lewis
is.
Lewis Howes, something like that. Is he one of those?
Oh yeah. Lewis Howes is like a motivational type of Gary V podcaster dude though. That guy's like, I don't know, dude. Like a Tony Robbins type of figure to me is not that exciting. I'd rather, if I'm going to be in a niche, I'd rather be in a niche that's so dynamic with the news. CNBC gets 100,000 people for Squawk in the Box every morning.
How much?
100,000 people. It's unbelievable, but I checked the ratings. They get 100,000 people.
That's nothing, though.
It is nothing.
On the channel.
It's nothing. And so, like, I mean, if you could get, okay, I was exaggerating when I said you get more than them, but if you could get 10% of CNBC's, think how much they pay for that, and you pay like nothing except for your internet costs, and you're doing a quantifiable percentage of their work.
Well, it's also how many of these 105,000 people are actually sitting and really watching versus it's just on the airport TV.
And they're not there for hours either.
Right. And that's the thing, dude. When you so TJ, your question is like, how far do you want to take it? Do you want to be like a Meet Kevin type of thing? I don't want to be like Meet Kevin in terms of how he like manipulates his audience and sells out and stuff. But but yeah, infomercial. But like the way I'm noticing the audience trajectory is like we start off with like 2,000 at the peak in the morning. By the time I'm done, there's like 1,100 people left, and so like 1,100 people are staying for 2.5 hours, like actually listening. Here we got Doug here, always there with his comments in the chat, right? So like if that turns into 5,000, then 2,500 staying, and then 10,000 with 3,000 staying, like I make $60 a day from the market open, $70, $80.
Wow.
I think having 2,000 people's attention is probably worth multiple hundreds, if not thousands of dollars a day in terms of just pure attention. But I'm willing to take $60 from YouTube ad revenue because I don't care about the money. I care about nurturing that audience, you know?
Well, and it's the demo you have. Like these are people who have money to spend.
Yeah, but I just don't want to be like, hey guys,
they're not like teenage girls, you know. Well, not that teenage girls listen to podcasts anyway, but I mean, they're not people there to spend mommy and daddy's money. They're there to put capital to work. Like,
well, that's the thing. It's a real special demo. So I don't want to be like, hey guys, go sign up to fucking my E-Trade discount code or whatever. Because I'm like, this is such a special demo. Like if I ever do offer something one day, it should be something where I know they have the money. So the question then becomes, what are you offering? And that should be something very special. And it should not be a stupid discount code, you know? So it's a special thing. And I, you know, my mom raised me with having a lot of gratitude. And like, so I'm very grateful that Doug joins and he stays. And it's like, how can I nurture that? And the only way you nurture it, quite frankly, is A, to be good at the craft, which you can get better every day. But B, it's like to show up. Like to just fucking show up. Because when you show up, it's hard to be denied.
That for me was one of the hardest things. I don't have quite your public speaking skills, but I mean, I wasn't debating, but I was national model UN. Okay, I was national model UN school. Okay,
that's good. That's not bad. That's not bad.
So I mean, not a national debate champ, but national model UN champ. So like, but I never was able to monetize it. And I did have issues with depression and stuff. And part of what happened to me, and hopefully you avoid this, it sounds like you have, is showing up. Got all the talent in the world, got all the talent you need to make it. But dude can't show up. Went through about 4 or 5 years in a really crucial time period, early 20s, where that's really bad to not be capitalizing on the momentum you have. And couldn't show up for about 4 or 5 years. And, you know, so had to reboot and find a different way. But but your point though about showing up, it's absolutely amazing to hear that you've got that figured out.
Yeah, it's
which momentum. Is why I'm worried about you missing the open. Like, I mean, I was thinking to myself, man, why doesn't he like find somebody to like get on his channel? Because you know, like I know you're too young for this, but the talk radio broadcast, like a Rush Limbaugh, okay? I mean, the politics aside, the man is a broadcasting legend, okay?
Yeah.
When he took a vacation, he had guest hosts sit in, and they ran the same 3-hour show.
Yeah, like crazy.
You know, like they didn't put on reruns. They put on.
All right, so you guys be my guests, and we'll run this till the open. It's only 1:30. We only got what 7 hours left. Come on, man, let's run this till.
Dude, my wife will come and throw me outside.
That was 12:30 for you guys in Texas. This is 1:30 for me.
That is nuts.
No, but I was kind of surprised you didn't.
Dude, it's hard to find someone.
Maybe it's a next time thing because you're still kind of, you know.
I also just don't know who would actually be able to run the show. Like, it's a very difficult job to like talk for 3 hours.
Like you're the talent and the producer. Like that's another thing that I'm amazed at. Like you have stuff like queued and ready to go. So I consume the show, right? So I do wonder a little bit about the mechanics of your show, which is like, man, he's got all these clips like ready to go. Are you listening in one ear so you know what they're talking about on CNBC while you're doing all the rest of your stuff? I definitely would see, like, you know, like a Meet Kevin. He's got like 3 producers probably watching that stuff to know when to cut the live to stuff. So
dude, it's so funny. We were on Palantir Weekly once, and Chad and I were talking, Chad from Palantir, on the WhatsApp, and he sent me a message that I needed to respond to at the moment. And I think Arnie was talking. And so Chad sends me the message. So while Arnie's talking, I'm like responding like into his message in a big paragraph. And then Arnie stops talking. And then I start responding to what Arnie said right after Arnie's done. But I wasn't like glued in on what Arnie was saying during the show. And Chad's watching it during the whole time. And he's like, how the fuck did you send me this paragraph and then respond to exactly what Arnie was saying? I was like, I don't know. At this point, it's just like second nature. So yeah, dude, I wake up in the morning. I get, I like 2 hours before the show, I start reading, start watching some clips, getting things together. I come up with this game plan of what do I want the show to be about today? Is today about China stimulus? Is today the narrative about why Palantir can't be broken? Like, what is the narrative for today? I try to think of some funny lines in my head some energy that I want to admit into I watched Halloween Town last night. Am I going to talk about that? Like, it's all this random stuff flowing through my head. And then really at 8:44, it's just like, all right, time to go live. One thing I'll tell you, it's funny you brought this up. I have zero nerves when I press go live. Like, you would think someone's a little nervous. I have zero nerves. It's just like, press it and you're into that zone, you know?
Yeah.
And it's just been really cool every single day doing it. And I am a perfectionist. So when I make a little mistake, I'll listen to it back and I'll be like, I can't believe I said this thing right here. I messed up this analysis. You know, I'm very critical of that.
I didn't do it at the time, but I just wanted to tell you, I didn't do it. It was the last AIP con. Like, it was like one of your opening lines, and I was gonna say something, but like I knew at the time too. Like, you get very emotional because you are such a perfectionist, and I was like, I just wanted to like rid him, just like, you know, just. It was some word that was mispronounced, and I'm like, no, he doesn't need
Of
me to do
course.
it. He's already beaten himself up over it, you know, an enormous amount. Because it's one of the lines you rehearsed, because it's one of your first lines. Like, so I knew you had rehearsed it.
I know. If TJ, last quick story. When we were in rehearsals for AIP Con,
Don't worry, my wife's going to sleep. She said she don't care. She's going to sleep.
Okay, so TJ's not getting late tonight. All right, so we're good.
No action tonight.
Dude, we were at the AIP Con rehearsal, right? There was this lady called Christy Lightsey. That's her name, Lightsey. Okay, this is the rehearsals. Yeah. We're not in the show. We're in the rehearsals. I have to like introduce her. And while I'm introducing her, while we're doing the dress rehearsal, I was like, all right, next up is Christy Leitz. This woman stops the rehearsal, like shuts everything down. She looks me dead in the face. She's like, it's Lightsey. And I'm just like, is it that serious?
Say my last name, bitch.
No, but she was also a white woman, and she's like, it was a very Karen moment, and I was like, I cannot believe she's actually like stopping the dress rehearsal because I said like it's not, we're not live. We can you know adjust. Right. But like, people get really serious about their name, and I'm like, people say my name wrong all the time. Like, I don't give a fuck. I don't have an ego. You say Amit, I don't care, dude. Like, I don't give a shit. Cucaracha, whatever.
Cucaracha.
I got called cucaracha many times. People get so sensitive about it. I'm just like, you know, it's. And then I don't know, dude. I'm like a national public
champion. Saying the name right. That's Dale Carnegie, How to Make Friends and Influence People. Getting their name right. That is one of the.
That's their favorite.
It's a red flag to me if people want if I'm with a girl and her name needs to be perfect when you say it. I'm like, oh, so you care that much about yourself that your name needs to be said? I don't know. Dude.
Yeah, that's a hard pass. It's one of those things you should put out into the world, but not one of those things you should spend any time with people who are trying to collect that, you know, like,
yes.
Amit, Kevin. That's nice.
But it's hilarious because I'm like a public speaking champion, but on the Market Open show, at least 10 times during 3 hours, I will say like, I still Estee Lauder, like Estee Lauder, like I still like, you know, it's weird. I can't say these things. And it's like, it just happens during the show.
Massachusetts. I'm just saying.
Can't say it, bro. Massachusetts.
Like, okay. I assume you got 1,400, 1,500 on the SAT.
No. So mine was 2,400. So I got the equivalent of probably 1,200 because I got a 1990 out of 2,400 on the SAT.
Okay. Well, I'm just saying, pretty smart kid. You need some SAT words. And now some of this stuff that comes up on the word of the day, I'm like, how does he not know this? Like,
what is this? The fuck is this?
This.
I like to tell people what I got on the SAT. I got a 740.
Got a 740
on the verbal. True story.
Dude, the SAT is so interesting. I mean, like, now colleges are saying they don't care about it, but they still do. It's like, it's a whole different, with AI, like, do tests even matter that much? Like, it's a different era now.
They do
Yeah.
because
Did you do? What did
man,
you do?
like
Did ACT?
AI
Did you
is
do
so
ACT?
bad. Like I know you use it all the time, Amit. I don't know how you do. Like I tried to do something the other day, and it was just like, hey, tell me about the gymnastics meet this weekend for this college, and it goes on, and it gives you like a 2-paragraph answer, including like breaking down the opponent and everything. And it's like, yeah, that's actually not happening. Like a Google search would have told you that gymnastics season
But
doesn't
no,
start till
you're using it
January.
for real world information. I'm using it for like, tell me why a call debit spread has less theta than blah blah blah. Like something I would read a blog for or like Investopedia, and it's giving me this like fucking rundown where they can't hallucinate in that scenario, right? When you
I
ask it
don't
something where
know.
it can't hallucinate, it's amazing. Like it's incredible.
So I mean, I guess I don't know the difference on those things yet. And so
Yeah.
I'm very hesitant. I mean, I know you use it all the time, but I feel like I can get it quicker with a Google search than just about anything else. Plus, half of the Google search is the AI breakdown anyway now, the first, paragraph or two.
I'm trying to find my last ChatGPT search. Oh yeah, Robinhood's doing this stablecoin shit. I was like, what is a stablecoin? Right? And it's like, this is something you could Google, but like you just get the answer right there. And then it's look, here's how a company like Robinhood can make money with its own stablecoin. Boom.
Yeah.
Get the knowledge.
Another income vector, by the way, TJ, you were wondering about those for Robinhood.
They have so many ways to make money, bro.
Or they can't figure out how to fill my order. They're saying I gotta wait till the morning. They're queued me to the morning. What is this overnight bullshit? You can't do
No,
anything.
you got to do 22. You just got to bite the 5 cents, bro. 22.65. That's how you get it.
Bro, I had already done all that. They just said they just keep queuing you to the morning.
I'll buy one right now at 22.65.
Can you like not act? Can you actually buy a share right now or not? It just gets queued.
All right, we'll do it right here. Let's see.
I have heard of some trades being
bought it.
undone from overnight.
You got to do 22.65 though to get it. What'd you say, Doug?
Yeah. I've heard of people complaining like their shares got rolled back or their trades got rolled back, but I think that was the blue, what was it called? Blue Ocean?
That was the
or
Blue Ocean
Water?
April issues.
Yeah. Yeah, that wasn't Robinhood's fault. That was their
ET
handling.
says didn't Hood buy Aladdin AI? They bought a Pluto, which dude, the founder of that company, he's so cool. We follow each other on Twitter. The dude fucking like left Nvidia. He was making 750 grand to start his AI startup. Almost went bankrupt. Barely raised money, and then 2 years later, Vlad buys him out. Like just a fucking like these are the types of people.
I'm looking forward to that, dude. I'm looking forward to some
Hey,
AI.
speaking of AI, real quickly. So OpenAI gets like this retarded ass valuation. This is the same company that Microsoft has a huge stake in, right?
Yep.
Yeah.
I just want to make sure because I don't follow these stories that closely because I'm like, okay, cool. How can I make money with it? Oh yeah, okay, cool. So I don't spend a lot of time on it. But Microsoft, how big of a stake does Microsoft have in this company?
It's 51%, isn't it?
Yeah, but with this new round, I wonder how much the stake actually is.
Dude, Satya is not gonna give up having 51%. If they're raising all this money, Satya is writing a check.
But doesn't that technically add 80 billion to Microsoft's valuation? Right? Like,
why do you think I'm buying shares, bro?
I mean, like that's bullish, bro, for Microsoft. Fuck, I think OpenAI is going to $1 trillion. I think OpenAI is going to $1 trillion. They have the best model, dude. They have the best fucking model. It's that simple. And they're the fastest.
What kind of revenue do they do right now? Like,
yeah, but dude, Facebook is coming for that ass though, and they're
Dude,
coming at it
Facebook's
for
not coming
free.
for shit, dude. No one gives a fuck about Llama, dude.
Yeah, 80-20 rule. It can get 80% of the same work done for 20% of the cost.
The API calls that OpenAI is getting, all these startups are using GPT as their foundation model. And I think that's where they're going to get a lot of revenue. They're getting $300 million a month right now, TJ, in revenue, which is growing like 4x or something. It's ridiculous. That's why I think they're getting the 157 billion. But they just released something yesterday with like this voice API dictation thing. Like Llama's not doing that. Llama's not pushing product quickly.
I agree. It's a generation behind. Generation behind. But what I'm saying is they're a generation behind, but it costs 20% of the cost.
Well, that's true as well. That's true. My question
And,
with Meta
and there are very few companies that have to be on the bleeding edge.
right. I feel like if we go long
Like-
the
like-
Mach 7, there's no way we go wrong with
Like
this.
BP doesn't need to be on the bleeding edge of AI. Okay,
Yeah.
they need a functional AI with an ontology to operate their business and do the various things that they need to do. But they do not need the bleeding edge of AI to compete with Exxon or Chevron or whoever else they're going up against. They just need to be able to execute and operate their business.
Would you buy OpenAI at 150 billion?
No.
I feel like I would buy it, dude. I would buy that shit.
And I told you what I would buy, and you know what I am looking to buy at.
What Andrew? You want to buy that?
At a smaller valuation than that for sure. But
I don't know, dude. The
Is
only
there a stock that you aren't in that you wish you were in? Like you feel like you did all the work, but for whatever reasons you just didn't.
Meta. Fucked
Meta
up.
and Nvidia.
No, I don't want to say I was in Nvidia because I never understood Nvidia, but I always understood Meta. Nvidia, I never understood. I didn't know what the fuck a GPU was, bro. Like I didn't. I didn't even know what the point of it was.
I've always loved Nvidia. Like Nvidia was the first graphics card I bought in 1998. I've always loved it. Like I would have just owned them because I liked having the GPUs, and then owned them because I was interested in crypto. And then it's just like that should have been something that I was in and got to ride all the way up, even though Chris Patel was saying it
dude, Chris's pivot was
I had the same reaction. I'm like, I remember I was listening to Finance Junkies, and I remember like Nvidia had hit like 437 that day, and we were just like, this cannot go any higher. This is insane. These numbers are crazy. Blah blah blah. This will never go any higher. This is a bubble.
Yeah, he said the same thing when he was like, dude, I wish people had the phone call of me and Chris and Steve the day of Nvidia's earnings when Nvidia dropped like 5%. And Steve's over here saying, we got to buy this dip. This is the best. And Chris is like, Steve, you're an idiot. Like, he's like legit. Like, he's not being disrespectful or anything, but he's like, legit, Steve. Like, come on. Like, this is like, and Steve's like thinking like, who the fuck is this guy? Like, come on, bro. Like, AI's like, and then 2 weeks later, Chris is like, I'm buying Nvidia.
You're buying Nvidia. Yep.
Steve was like, this motherfucker, bro.
No, I really appreciated all the viewpoints you had there. So because that's what got me on SoFi. Is because it was the same episode that Chris and Vitaly were both like SoFi. And I was like, oh, well, if these two dudes who don't ever agree about anything, if one of them said the sky was blue, the other would say it wasn't. Then I was like, okay, this is going to be a thing. And the leaps paid off very handsomely.
Oh, you actually exited at the right time, right? You fucking
yeah. I got those leaps when it was like 4 and wrote them up to about 10.
Yeah, I did the same, except I didn't sell at 10.
Yeah. Well, now you know how I feel with Celsius.
Dude, I was up 27 grand, and I was like, well, I can just let it. It's like I had no under. That's why I took my initial out of Robinhood this time. I was like, all right, I'm not going to be greedy.
I'm so glad that. I know I was in the chat too, like harping on you to take your sister's money out.
Oh yeah, thank God I did that.
Reds.
That was a good one. Yeah. Saved her on
that. You just can't play around with family's money unless you're TJ. You can play around with family's money.
TJ's a master at playing around with family's money.
When you get the returns TJ gets, family lets you play around with their money.
It's a lot of responsibility, though, dude. I mean, I couldn't imagine what those parties would look like if I wasn't good at my job.
You wouldn't have the job, I'll tell you that.
Everywhere I go, they always will want to just like talk about their little portfolio. So that's like the pro and the con. It's like the pro is, well, obviously things are going well because they're excited. But then the con is like that's the only thing they want to talk about. It's
so
like
what does a conversation look like at a dinner party with you and someone?
It's like, hey, the investments are great, and then Kristen hates it, bro. Like, y'all ever like meet my wife and stuff? Dude, she doesn't like talking about stocks because she's so sick of it with everybody in the family. Yeah, she'll talk to you about anything, but she doesn't give a shit about a ticker. Like, she doesn't want to talk about like wealth and all that stuff. She just wants to like, hey, let's have a conversation like we're eating good food. Like, there's a lot more to life than just like money all the time. Like, He's got a damn finance channel. That's all he talks about, and then family wants to talk about it too. Uh, but yeah, and it's usually always about that. But then I feel like they forget that like I'm just like a regular person at the end of the day, that I have other interests, believe it or not, aside
Yeah.
from just stickers and stuff. And nobody gives a shit about the fact that I rope, that I try to golf a little bit, that I play poker, that I attempt to fish, but I really suck at it. I
When are
mean,
you
there's
having
just
your poker? When are you having your poker?
I'm
Uh,
sorry.
when are you having your poker and sports gambling live stream? Remember, I
Dude,
had my buddy hit you up on that.
I want to try to kick that off because and I'm pretty good at sports betting. It's just, but I don't want to really like show that degenerate side of it. And then I've been watching YouTube videos about like how if you have a channel that's kind of like already known for something, you don't want to like confuse the algorithm and the audience and all that stuff. So
Yeah, that's true. That's true.
it's
You need to make another channel almost.
yeah, but the wife would definitely not be for
Well,
that.
you could be like Chris and just keep starting new channels and not stick with any of them long enough to like see them grow. Doesn't he do that? He's like an incubator, like angel investor for all these channels, giving all this great content and research, and then it gets big, and he's like, "No, I don't want to put this out of the like."
I'll tell you one thing that I did on the channel this year is I started charging for a few things, and it's been an absolute game changer from the standpoint that I do the FaceTimes with the members that pay like either $10 a month or 25 a month. And dude, these conversations, I average about 5 of them a day right now. They're 30 minutes each, and some go on longer because I'm not like like times up,
You're
get off the
probably not
conversation.
charging enough for them.
Yeah, dude, but dude, these conversations, bro, are like absolute game changers for my soul because I would say about 80% of them, 80% of the people that I talk to, they're not really in binds, but they're kind of in binds. And I look at their portfolio and it's so easy for me because I've been in so many dicey situations that I'm able to like nudge them on the right path. And then the
Okay,
next
you
time we
sold me.
talk,
I want a half-hour consultation.
the next time that we talk, they're like so fucking grateful, dude. It is like chicken soup for the soul, dude. Like,
Do you tell
Are you
them
like
like
helping them organize? Go ahead a minute.
I was gonna say, do you tell them it's not financial advice in
all that,
case protect you?
all that stuff. But essentially, the one thing that I can say, I mean, obviously, I don't want to like mention their names and like betray trust and all that stuff because we have a little private WhatsApp group as well where I give them like all the information before like I'll post it on X and all that stuff, like the screenshots and like the plays that I did.
Yeah.
But dude, I feel like there's 10 because there's I don't know, there's probably like 40 or 50 that are paying that level to do the FaceTimes. Dude, there's probably like tens that are like they're like legit turning into friends already. Like they text me probably 5 to 10 times a day because part of the package is you get a text me anytime during market hours. And the FaceTimes once a month if you're at $25. It's once every 3 months if you're at $10. But then I ran a little special where it's like, hey, for the next month, since I'm gonna like really be in the zone, it's once a week on the FaceTimes. And then I have this thing like Calendly, so people sign up on Calendly, and I just get like 5 or 6 emails a day, and then it just kind of gives you your whole schedule. And I just tell the app when I'm available, so to speak. And it's like it's cool. I created a little bit of a job, but dude, I just love helping these people, man. There's like one lady in particular, dude, she's in such a big fucking bind. It's a positive bind, but it's like the minute that I can like get her situation turned around, dude, I kid you not, she's looking at about $15,000 a month in premiums.
Wow.
Wow.
And it's a fucking game
I
changer.
mean,
And
I
I
can
can
just tell
see
you.
I'm saying I can see the gratitude on her face. You know what I mean? And it's just and it's so simple for me, but I know where she's at because I've been there. And
Yeah.
it's just awesome. It's
Well,
absolutely awesome.
I mean, I hear the prices you're charging, and I know what I pay for a 1 hour phone call every quarter.
Yeah.
It's up there, bro. $25 is, but you're doing it in
It's
a
got. I'll just say this: the number has a comma in it
yeah.
Yeah.
I mean,
for a
of
1 hour
course.
phone call, and all they're doing is everything that they're like taking all my statements and everything, and they run it through their little software, and it tells you, oh, this is your blah 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 blah. It's everything I've already doing on myself at personalcapital.com.
Yeah.
Okay, like all my retirement planning, everything. So, like, folks, if you're in the chat and you want good value, you could go to the people I go to, or you could go to TJ. I probably would switch to TJ because I can see
I just
people.
didn't
They
want
just
to
have
do it money though.
a lot of everything spread out. They've got a bunch of little trades they made and they never kind of finished on that strategy, and you just get a mess, right? Just like a dirty house. Just getting that cleaned up, I think, in a portfolio where everything's just kind of working together. That seems, even now just talking about it, it's like, oh, that sounds like such a load off the mind. Amit's here like, dude, I have 2 stocks. What are you worried about?
Yeah, so somebody here put a comment here that said, I would never do anything with family's money because it can end really badly. Or it can end really, really goodly. Like it's just you gotta, you're the best heart surgeon in the world, and somebody needs open heart surgery.
TJ's froze.
TJ's frozen. It's our show now, bro. I'm
All
the
right.
captain now.
You're the captain
I'm the
now.
captain
Okay.
now.
Well,
Crowd strike, bro.
look,
Fucking crowd strike.
that would have been a nice dip to get into.
That
I did look up. I found an ETF hack. I don't know if you're familiar with that one.
Yeah. That one, yeah. That's a good one. It's not a bad one.
I put that on my my Roth weekly. So rather than I just take the maximum amount you can contribute to a Roth, divide it by 52, and deposit that every Friday. And in Robinhood, you can assign the purchases, so that works very well. It's pretty easy.
But is Robinhood your main? Schwab is still your main retirement one, right?
Fidelity is my main.
Fidelity is retirement. Okay.
But nothing goes into Fidelity. Well, no, that's not true. My 401k is also at Fidelity, but my main account is there as well. It had to be Fidelity because it couldn't be Robinhood, because Robinhood does not have that.
So hold on, you put 20 grand into Robinhood calls and turned it into 200 this year.
I put 14 grand into Robinhood calls and turned it into 200.
Dude, wait, so hold on. Which you bought the $20 calls for 2025 when there was $7?
There we go.
I don't remember exactly. But yeah, it was something like that. It was something like that, and I was like hammering too. I was hammering it, because that's one of the largest trades I've ever made. And at that point in the portfolio too, I was like, I don't even like. I was even uncomfortable having like $20,000 of Palantir at the time too. Of course, Palantir is,
dude, but 14.
We have a lot more confident.
14 to 200 is kind of like big.
And I did sell at the top. Like at one point, it was up 2,100%.
So what was that total? Like 250? It would have been.
Yeah.
Still, dude, 14 to 200 is a hell of a return. And
like I said, it bought a laundromat.
Yeah.
And I actually got my logo finalized today.
For what?
So,
for the laundromat.
Yeah. Yep.
All right, TJ, you're back. You left us alone, and
yeah, what sucks though is I lost all my timestamp things, so I'm gonna have to go back.
Oh man,
dude, I wouldn't even.
This has been 5 hours. Stream just that Amit got on. You had like a legendary stream tonight, man. You start off with DDI, and like now you got a bit on in the back end.
That shit, yo.
And I'm just here like hanging out,
dude. I'm
a photo of it.
I'm in my basement right now because my carpet upstairs got a little wet, so it's like it's being dried by a carpet dryer, and so I have to sleep in the basement tonight. And so I saw he was live, but he was live after 3. I was like, I was watching him like 3 hours ago. Is he still live? And then I get in there and he's reading my tweet, calling me a nerd. I'm like, you know what? I'm gonna get into this.
Get in here.
I'm meeting with my father-in-law tomorrow, guys. There's not going to be no morning tomorrow because I have to meet with him because he's helping me try to get to another level.
No, do
Wheeler
you
already
guys-
went to bed, Heinzie.
Do you guys eat do you guys eat breakfast in the morning or no?
I'm on the shot, dude. So I'm only eating like one meal a day right now because I got back on the shot because my wife said I was getting a little pudgy.
The shot is what? The Ozempic?
What's it's terzepatide or sulfapide. It's got a weird fucking name. I don't know what it is. But my doctor prescribed
it's
it
supposedly
for me.
better for men than Ozempic.
But this is not because I was on one through this clinic and it was like $800 or $900 a month. And then my doctor's like, no, dude, there's this other thing here. And they essentially just get all the shit that helps lose weight. And it's like $200 or $300 a month. So I was like, send it over. And I had to watch a video on how to inject myself and shit, dude. It was crazy. So I'm like sitting there, fucking doing it, hoping for the best. And I was like flicking the needle for air and all this crazy shit, yo. And anyway,
how's the powerlifting going if you're eating one meal a day?
Yeah, dude, I've been doing reps and stuff because I'm only going to do what's called the push and pull. So I'm only going to do bench and deadlift.
Yeah.
So like
That sounds hard to recover though without being able to do that.
Yeah,
So
but right now
we're talking about lifting weights now. Amit doesn't know nothing about that.
No, but right now I'm not lifting very heavy, but I did do free weights. I hadn't done free weights in a while because I have a Power Tech machine. It's like hammer strength, if you will.
Yeah. Okay.
But I did free weights on bench about a week and a half ago, dude, and I did 225 for a set of 12 with like relative ease. So I really think that I'm gonna be able to bench probably like 320 to 330 on the platform. And
Nice.
so it's not horrible, and I'm gonna weigh in at 198 for the meet. That's the goal. And then I want to do another meet, and I want to weigh 181 because then that'll be closer to the weight that I want to like be permanently.
Bro, the problem with this time of the year is now we're coming up onto eating season, Thanksgiving and Christmas, and now everyone's like, you know what? I'll just wait till January.
Bro, with these medications, Amit, you don't even think about food.
With the time to eat. This is when Amit, real talk. Okay, nothing but love for you. Bro, you got to lift weights.
Oh, no, you're
right.
You
have a window that is like investing for young men. You have a window that is closing, and it is going to start closing rapidly, where you can easily add muscle.
Yeah,
it's called your 20s because it gets harder after that, and like you can easily add strength and muscle, and you don't have to bulk up. But like I hear you talking about, you want to get down to like 130, 120.
I would like to get to 145. I'm at like 170 right now.
See, with your build, like with muscle, you'd be very trim at like.
How much did you weigh in Vegas? You look like you weighed about 150-ish.
145 in Vegas a year ago. You know, I want to get back to that. No, you're right, dude. My mom tells me all the time, like, this is the time. And there's so many scientific studies that
because you can always starve yourself and do cardio in your 30s, 40s, and 50s.
Right.
You can't easily add muscle. You have to work a lot harder to add muscle mass.
Yeah, but the muscle eats the fat, dude, so it helps keep you kind of lean.
Yep. And you can eat. It's like, so if this is the good time of year to eat, well, that's the good time of year to be lifting.
No, you're right.
That's what helps you recover. So
yeah, but I did an analysis, dude, on my body. So when I was in high school or in college, I was like 5 to 8 when I got kind of pudgy, 8% body fat. And then they did this thing where you like do this little scan deal, dude. And I came back at like 31% body fat, bro. It was like a what? And so I went back this morning because I went to the doctor and they did the little scan thing or whatever. And I'm at like 27 and a half now.
All right, that's
so I'm trying to like, but it's harder because I'm older now,
progress,
right?
Not perfection, right? Yeah, it gets harder as you get older.
But I want to just like the goal now is just to get under 20% body fat because that's crazy, dude. I could not believe that I was over 30. And they're like, it's actually not bad for your age. We were expecting over 50%. And I'm like, what? So you're just walking around looking like a tub of shit? How does that even work? 50%
Well,
body
that was
fat.
me. That was me last year. So yeah,
Like, I was just like, dude, that's
Yeah,
nuts.
you
bad.
lost a lot of
But
weight,
I'm
right, Doug?
yeah, yeah. I
I feel like you
lost
lost a
100.
ton of weight.
I lost about 100 pounds
Yeah,
since
dude.
last summer. Yeah.
What did you what did you do to lose the weight?
So I actually had to have a intestinal surgery, and that really contributed to most of it. But I was running up against starting to have liver issues, and my mom had just passed of
Mm,
bile duct cancer,
Oh,
and like it's effectively liver failure because the ducts just get sealed off by the cancer cells, so
right.
you get no function out of the liver. It still works by its own, but it's not. There's no way to get the chemicals into the bloodstream. So yeah, so mom died of liver failure, and I was like, I am not dying like that.
Yeah, yeah,
That was the worst thing imaginable.
yeah.
Um, to see her go through that. So yeah.
But
So it
do
was
you
like, all right,
drink
you got to
or
lose weight. So I mildly. I haven't had a drink in probably 2 months, but I
when
have some
you
nice bourbon. Like when we go to Vegas, I'm definitely having something to drink. But
yeah, but
um,
you don't like get drunk randomly on a Tuesday. Like that's not.
no, 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 no.
Yeah.
dude, I think it's
Vince, what's
possible
up,
to get
Vince?
$20.
Yo, Vince, can we talk about how loaded Vince is on Rocket Lab right now?
Dude, it's crazy,
I think
yo.
he's up like.
Speaking of a stock I wish I owned, I think you asked that earlier. That
Why
was
didn't Vince tell us to buy Rocket Lab?
I'm
He
pretty
was
sure.
out there buying 65,000 fucking shares of this stupid fucking company. He told nobody, hey, guys, it's $4. Maybe you should give it a shot.
I know. What a selfish prick.
No, really. He could have at least started a
Huh.
podcast every week talking about Rocket
Yeah,
Lab.
something like that. Hey,
Something
look,
like
I bought 300 shares and immediately sold cover calls against them at 4, and I sold the cover calls at 6. So yeah,
There you go.
I was like,
There you go.
I like rockets. I can't buy Space Lab or SpaceX, so I'll
Fucking
throw a
Rocket
little
Lab, dude. I feel like it's
little
gonna keep
rocket money
squeezing.
around.
It might keep squeezing.
Well, if it's a squeeze, it won't last forever.
That's true.
But if it's really people piling in because I mean, look, there's a lot of political risk for Mr. Elon, and it's very easy to see how there's going to be a market for people that just don't want to do business with SpaceX.
I wonder what's gonna happen on November 5th, bro. Because I just think neither side's gonna be happy, and they're gonna have their way.
We're gonna have MAGA again, or we're gonna have the horse laugh lady, or we're gonna have
Thanks, Heinz.
somebody.
That was a couple years ago.
So do y'all think there'll be a definitive winner on November the 5th?
Nope.
Nope. And whichever side loses is going to burn it down.
That's my thinking.
It doesn't
Like-
matter. One
like,
side
I
is
think-
going to burn it down, and
Yeah.
if they don't, the other side will. Which, look, that's what happened with COVID. It was whichever way the president decided to handle COVID, the other side was going to be, they were going to take the other tack.
All right.
And he's, not to get overly political, but he's kind of easy to manipulate like that. You just kind of punch him in his pride, and you can make him go one way, and then you take the other. It was like, well, if he was going to go all lockdowny, then the Dems would have been talking about everybody's freedoms. And if he kept things open and wanted to keep business running, then they were going to talk about how it was unsafe. Like they knew exactly how they were going to play him.
It was
And
actually a
they
genius.
played him like a drum.
Yeah. I still think he's gonna probably win. That's my assumption. But
I don't see.
then
No,
again, I kind of am like, is he really gonna win some of these swing states?
He's already in late phase. He's already selling watches and cryptos.
Dude, but
That's
that's
what
the
you
thing.
do. That's what you do when you're done and you're trying to milk every last nickel out of it.
I could not believe he launched the crypto Liberty Financial. I was just like,
That is so scammy.
his brand. He's the he's the trying to be the president of America, launching a coin. Just like, what is going on? But Kamala's no better. She's fucking doing horrible shit too. But it's just like that's just like the optics are horrible on that.
Yeah. Which is like I mean, if he's trying to leverage his audience, I think we talked about somebody else doing this earlier tonight, but he's trying to leverage his audience to make gains. And if that's what you're doing now, that means you're not interested in being president. That means you're now spending time leveraging your audience. So,
Yeah.
I mean, yeah, there you go. Garcia Capital says right. Unforced errors. That's all it is.
Yeah, and I don't think Kamala Harris cares about people either. Cares about the average worker. Like, I don't think any of them. But it's just she's not launching a coin, and a coin is just such an obvious grift. Like, we all know it's a fuck. Even all the crypto people underneath his post were like, "Dude, what are you doing? Like, what is this?"
Yeah.
You know.
So what do y'all think about that comment when he said, maybe we'll use Bitcoin to pay off the 35 trillion in debt? Y'all
I think he was
remember
just saying that to say it. I don't think he's serious about that.
If
So wouldn't
he
that be
was
cool to use
serious about
money to do that?
establishing, well, look, I mean, the mint could make a $35 trillion coin.
Yeah, but I'm saying,
tomorrow
doesn't
and
the
pay off
government
debt.
own a shitload of Bitcoin that they've seized somehow? Isn't that like something I
Yeah,
heard?
U.S. government's the largest holder of Bitcoin in the world. If he would just commit, or if they would just commit to saying no, we're going to have a national strategic reserve of Bitcoin, that's boom, done.
Yeah, but I'm saying, how much do they
But dude,
own?
Bitcoin needs to go up.
Goes to 250 million or 250,000. What's that Bitcoin worth? And could they pay off, $3-5 trillion of this debt?
Well, if the U.S. was going to establish a monetary fund in Bitcoin, that plus Michael Saylor's not going to leave a lot else out there. So, if you want to buy, the price is going to go up, and it's going to go up rapidly because there's not a lot of supply.
Yeah, and every fucking Bitcoin has to go up a lot for it to be even making a dent in our national debt. Do we have 35 trillion in debt? What price does Bitcoin have to be to even take off a couple trillion? Like, we're talking about
That's what I'm
millions.
saying. I don't know how much Bitcoin the U.S. government owns. Does Google tell you? Use a
It's-
little
it's-
fancy chat GPT that you talk about.
It's
They're the largest holder in the world.
247,000 Bitcoin.
They own how much?
247. It's about
247,000 Bitcoin.
50 billion worth roundabout, which is nothing.
Which is nothing. I mean, that's more than you would get though if you were going to tax all the billionaires, how they're proposing. So
Yeah, but if Bitcoin goes to say some ridiculous number like 250,000,
That's still nothing. Bitcoin's got to be at like 5 million to
you
read.
gotta. I mean, that's how many. That's what it is. So how many zeros is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 9, 10, 10. Shit. 1, 2, 3, 4, 5, 6, 7, 8,
that's
9, 10. Seems like a lot. Maybe like 61 billion. What is that?
I mean,
Yeah,
it's a small position that could pay off large.
It's 61 billion that does not, like, again, that with 35 trillion in debt, like, we need Bitcoin to be 2.5 million.
I heard a statistic the other day. I think it was one of the all-in talks. 40% of the so we've are now arrived at this flippening where the debt now exceeds what we spend on national defense, right? Or the interest payment is now what we spend 40% of what we spend on national defense is spent on maintenance. That's how old our equipment is.
I mean, it's bad, bro. Like,
I'm like, okay, send it all. I mean, I know this is like, not the political. Send it all to Ukraine. Send it all to like whoever wants it. Okay, fire sale. Come take this stuff off of our balance sheet that is not protecting us. Okay, like A-10s and F-15s. As much as I love that airplane, they are not protecting us from drone swarms. Okay,
Yeah.
and cyber activity. Okay, that is going to be software. Like, get all that stuff that we are spending 40% of our national defense on. Get that out of here. Let them fight this war with it, because it's not going to be used to fight the next war.
I feel like the debt problem is never going to be solved, and we're just going to have to deal with it. Maybe that's the bull case for Bitcoin.
It is.
Or maybe the military is just always going to be strong, and no one's going to care about our debt. Maybe.
Well, we have a huge country to defend, including 2 oceans. So
Sure.
we have to have a huge military. Like, for everybody who wants a small military, it's like, you don't get to have a small military when you have half of a continent and 2 oceans.
And when your values are under attack by 2 fucking communist countries that are ready to snipe at you at any second.
Yeah, like you don't get to have a small military. So it's baked into the price of doing business.
Yeah.
I'm trying to understand the
Iran. Heinz is saying Iran attacking Israel is a big deal. I don't think so. They had one confirmed death after the largest rocket attack ever.
Yeah, it kind of just like happened, and then everyone forgot about it, I guess. Like,
do you guys understand the makeup of the debt? We always hear these numbers, 34 trillion, 35 trillion, but like, I know that like Japan is that's our biggest creditor. And then I think China's after that. But who's after those guys? Like, why can't we pay money to like if our relations aren't so good with China, like why don't we just like zero them out and then you're not like beholden to them in any way.
Well, then we would be zeroing out US bonds, and then they would be really difficult to sell, because we're going to have to sell them to make the other debt payments, because the only way we make our debt payments is we borrow more to pay our debt payments.
Fun game, bro.
That's the problem we're in. Yeah, it's the infinite money glitch, right? Yeah, that's our problem, is we keep borrowing just to pay our loans.
You should get 3 or 4 smart people together, Amit, and do an episode on the national debt. Like, well, what does it consist of, and like how is it? Like, 'cause, I mean, I feel like it's like obviously the world's largest Ponzi scheme going.
I got to get Doug on that.
Dad Saves America did a really good job on that. I don't know if you watch his podcast.
Dad Saves America?
Yeah.
Okay, I'll check that out. Dad Saves America.
I can't remember his name off the top of my head right now. I'm blanking on it, but like he used to be a Nickelodeon guy, and then he worked at and then he was a like MTV on air personality, and now he's like totally libertarian pilled. But he does a good job breaking down a lot of stuff. What was that, Heinzie? Pay off interests. Yeah. So it's print or default, and if you default, you can't print ever again. So yeah, it's keep printing until people stop buying, and then when that bubble bursts, it doesn't matter what stock you have. That's all, as Matt would say, it's all going to zero.
I think we're going to try to print for a long time.
I guess here's the $35 trillion question. When was the last year, or was there ever a year that the United States was solvent and did not incur any debt?
1994, we had a surplus with Clinton. And it wasn't too long ago.
So what did he do, or what happened that hasn't been able to be replicated or duplicated? So I'm saying
so the president, we give the president credit, but remember the House of Representatives is the one that actually spends the money. So you haven't had a Republican House of Representatives that have acted like Republicans ever since then. They got used to, because they came in, they took over after not having been in charge for 40 years. They did what they said they were going to do, and then they got used to being in charge and started wanting to spend money and send pork back home. Look, Newt Gingrich was the Speaker of the House. Is there a mystery in anyone's mind why the F-22 was built in Cobb County, Georgia? That's where the Speaker of the House, that's where his district was.
Dude, I'm reading a sentence right now from the Clinton administration. This was back in 1991, or sorry, 1998. They said the president plans to eliminate the debt by 2012. President Clinton's budget proposes to reduce the debt held by the public by 2.9 trillion over the next decade and eliminate it by 2012. The president's debt reduction comes from saving the entire 2.3 trillion Social Security surplus, the entire 403 billion Medicare surplus, and 192 billion of the on-budget surplus for debt reduction. So their goal was in 2012, we'd be done.
Yeah,
With the
we had a couple things happen along the way.
We did indeed. We had a fucking war we went to, in
Had
Iraq.
a huge ass bubble burst. So all that money they were projecting that they were going to have, nobody had. And then we had 2001. Then we had September 11th. And then we had some global wars. Like,
Then we had 2007.
you can project those things. That's all well and good. Actually, saving Social Security had been fine. In my 30s or 20s, I would have been like, yeah, you know what? Don't pay me Social Security. Just don't charge me for it.
Yeah.
Like, if I was in Amit's shoes, I would be like, you know what? Don't charge me Social Security, and you don't have to pay me for it later. Okay. But, now I'm getting closer to 50, and I'm like, as you get closer to retirement, you start making that $23,000 a year, like the step one, of your income for the rest of your life.
When do you want to retire? Like in the next couple of years?
I want to retire tomorrow, man.
But like, when do you realistically think you can retire?
I will be able to retire early. I'll be able to retire at 60. I probably will have to work until I can get Medicare, though.
Yeah.
Because as you age, healthcare becomes such an enormous part of your living expenses, and it ain't going to get cheaper.
Yeah.
And also, the earlier you apply for it, like the more premium you can apply earlier, but you have to pay additional premium, and that premium never comes off of your like, you can never get into the proper age bracket where that premium goes away. So if you retire early and you start taking Medicare early, just like if you take Social Security early, you can never get your take rate back.
Right.
You'll never get your 100% back. Yeah. So it's, yeah. Are you wealthy enough to totally self-insure? I will probably be on the gray zone of.
Well, that's like what, $5,000 a month to
self-insure.
totally insure yourself? Like,
If I get.
Did you freeze for you,
I think I
TJ?
lost everybody.
I'm good.
If I get standard compounding returns of 10%.
So what is how does it work for
So if I don't screw it
Medicare
up.
or Medicaid? Is that like income based, or what is? My parents have. I think they have some of that stuff. I know my mom's got stuff because with cancer and stuff, the government's helped out quite a bit. Is that like all based on income, or how does that work?
We lost him. I think that means.
Do you know how it works, Amit?
I know the government, when you get to a certain age, they pay for a decent amount of like health issues. That's why your mom's getting relief. My grandmother got that relief, but you got to be a certain age. Like if you're 20 years old, they're not going to give you, massive amounts of Medicaid. Whereas like if you're 75 or something, then they pay a lot more for it. Yeah. But if you self-insure yourself, it's like thousands and thousands a month. It's not easy. That's why most people have insurance from their companies, their employers.
I think there's like a couple of really big scams that this country's built on. One of them, Social Security, and then obviously the biggest scam is fucking taxes, because with the amount of taxes that they charge us, and then to have the debt that we have, I mean, if your job was like to balance it's like, who balanced these books? Like, how did we get to this point? Like, I mean, I remember as a kid, they were talking about it, and it was like literally like 2 or 3 trillion when I was a kid. We can look at whatever the tables are, but I feel like the number was less than 5. And now we're at like 35. I mean, like, you give a kid a credit card, they keep maxing it out. I mean, it's only makes sense to take the fucking credit card away because they're not good with it. So how does it? I mean, how did we get to this point? I mean, it just seems silly to me. But yet they will just, you go to jail if you don't pay your fucking taxes. Well, who sends all these government officials to jail? Because they're the ones that put us in these predicaments.
We keep electing them to do it, though.
And it's fucking crazy. Isn't it crazy?
I mean, you can't elect someone who serves a 2-year term and send them there to say no to everybody. Oh, you're the party of no. It's like, well, that's actually what we probably could use for half of a generation. And hopefully on the back end, that generation will be able to recover as well.
Right.
But yeah, nobody gets elected saying no.
They all promise dreams, bro.
Well, when we made the Senate popular elected, that's when we lost the thread.
Yeah.
Because remember, the Senate used to be elected by the state legislatures.
I don't understand why the Supreme Court justices don't have fucking term limits, bro. Like,
oh, good reason for that.
I don't understand why anybody in Congress doesn't have a term limit if fucking the president has a term limit.
that I'm like, dude, if you're 20 years old, you get on this, or 40 years old on the Supreme Court, you get to stay there for the next 50 years.
Yeah.
Like, I don't know, bro. That
It means you can't. It means you can't be bought. They can't hold your job. No one can hold your job over your head. But
dude,
look, that's the best way. It's the way that sucks, except for all the rest.
But you saw Clarence Thomas and all the shit that came out about the billionaires having on private jets. Like, he's already bought. Like, we saw that. I'm not saying he's good or bad. I'm just saying objectively, he was bought.
Yeah.
Like, it happened.
But you can't hold his job. Bought is different than being your job held over you because you get sideways with a president. I mean, look, they can still impeach him. It's not a lifetime. Like, the Senate can impeach him whenever they want. But it's a political process, just like the president. And the president only has had term limits since the 50s, right?
Wait, really? I didn't know that. I thought I thought George Washington had a term limit.
It was 8 years is a long time in that job. But no, FDR was elected 4 times.
That's wild.
Agreed.
And honestly, do we really want Nancy Pelosi to not have to post her trades? Like, don't we all like knowing that we're in a good trade?
Dude, all this legislation coming out trying to get politicians to stop trading. I'm like, no, keep them trading, bro. What are you talking about?
They're giving you the playbook.
Why would we want to stop them?
I mean, honestly, we talk about investing all day, and it's like, why am I just not following Nancy? Like,
that's it.
Wouldn't I just be having the greatest year? Like, I'll have Nvidia.
Well, you've had a pretty good year, still.
Yeah,
I know. A good year. But...
Hey, Amit, with the amount of money that you're now making and on YouTube and all that stuff, how much of your revenue are you using to continue to fund your portfolio? Do you have a funding strategy in place, or are you just kind of winging it with all these fucking spreads and stuff?
No, it's 50%. So if I'm making $6-7 grand a month, it's at least $3 grand going into the portfolio.
And how long is that funding strategy in place in your mind, as part of your overall business plan for your life?
It's really, 50% of my gross income for the past couple of years has gone into the portfolio. Now, it hasn't been a lot of income in 2022 when I really wasn't taking YouTube seriously or anything like that. But ever since I was in college, I started making $7 grand in college with my consulting firm for public speaking. I would be putting $6 grand of that 7 and just dumping it into Robinhood and buying stupid shit like Neo at the time and stuff it was not what it is now. Plug Power at $1, but yeah, it's majority of it goes into that. I have a bit of debt that I'm paying off as well. I have student loans. I'm trying to pay off $500 a month. I have 6,000 on that I have to get rid of. I have some credit card stuff. My laptop I'm paying off, but I should be relatively debt free, I believe, by early next year. And then, I don't have any expenses. I don't have rent, But one thing I have to make sure next year is I'm getting ready to save up for a down payment. So a lot of that can't come to the portfolio. Or I can, but it's going to leave the portfolio if you put it for the down payment by the end of the year.
You're gonna be hitting the market at like the right time too. I have a feeling.
I think so too, dude. I think
everything is just lined up for you to land.
I think I'll snag a 4.5% mortgage. I think it's possible. I really do.
So you're what are you looking to buy? Like an apartment or something? Or you're in Jersey? There's actually houses over there. Are you looking to buy a house?
I want to buy an apartment. I don't want to rent. I want to buy an apartment. There's a bunch near my area for about $350 to $400, which is a really decent price. If I go to Jersey City near New York, it's like $575 to $600, which is a stupid price to pay, but I get to be near the city, so I'm kind of like, it's not the worst thing in the world. I get to be near New York, but I'm not in New York. But $350 to $400 is like a really good price. I feel like next year.
You can get half an acre on the golf course over here, 3,300 square feet for $500,000.
Dude, I would love to move to the south, but like my family's not going to move, and I love staying, in the Northeast. My family, and I love the city, New York, New Jersey, Pennsylvania. Like I love the Northeast. I feel like I would love Austin.
So when's your target to try to move out? Because I mean, yeah, the down payment and all that stuff is cool, but now if you're talking about $4,000 a month all in to live there.
Well, so I have so there's a set of Robinhood spreads I have right now, $15, $20 spreads. I put in 30 grand into those. It'll make a profit of 150. So that'll be a total of 175 by January 2026 if Robinhood is above $20. So realistically, I think Robinhood will be above $20. That 30 grand will turn into 175 grand. And that is what I'm going to use probably by December of 2025 to fund the down payment. I don't think I want to put 20% down. I want to put 5% down and kind of see how it plays out because I know how to wheel with the money now, right? So I'd rather just keep.
Yeah, but there's programs called like FHA.
Yeah, there's ways to not.
It's about with the closing costs and everything. It's about 7.5% down. Give or take.
Yeah, exactly. So
that's how we bought this home. I've got it half paid off.
What's your mortgage on it, Doug? Rate?
I have 3.75%.
That's not bad. That's not too bad.
That was COVID stuff though. Right now, I think the rates are like 5.5 to.
No, this was 2014.
Oh wow!
Bro, this house was 172 brand new built.
Wow,
that's crazy.
How many? What? 3 bedroom? 2 bedroom?
Yeah, three bedroom, 2 bath.
Well, see, that's
I'm 1 block off of Galveston Bay. Like I get this.
If I actually move down south, I don't have to worry about these New Jersey prices for what I'm getting, but it would require moving.
Dude, why don't you look at Dallas, man, the exchange, the Texas Exchange Company?
Yeah, that's what, he's saying he wants to live there. I'm like, dude, you want to be a podcaster and a finance guy? You need to move your ass to Austin. Yeah, but that's good. They're building a new exchange.
Is Austin really?
That's in Dallas. That's in Dallas.
That Texas exchange thing seems like a joke to me. It doesn't seem even like it's like.
Does BlackRock tell a lot of jokes?
In this state, Joe, do you know how much money is in the state legally? Not to mention illegally, because we're real close to Mexico. I'm just saying,
and Louisiana.
Money is in the state.
No, I have some friends who are rich in Dallas. I have a couple friends from high school that are their parents are very wealthy in Dallas, or not Dallas, but Texas in general. There's a lot of money in Texas, 100%. It's just Texas, bro. It's not New York. It's not.
Bro.
It's not New York.
State income taxes.
I know that. I know that also is amazing. It's incredible.
Not to
mention, Let him see a tax return after wheeling $500,000 for a year. Wheel $500,000 for a year in New York and tell me you're not making a beeline for Texas.
Hey, but Dougie, also our politics, dude. If you're a Democrat, you do well here. If you're a Republican, you do well here. We're not super radical on either side of things. If you're pretty liberal, go live in Austin. If you're pretty conservative,
live in the suburban suburbs.
A lot of suburban areas and stuff as well.
Dude,
There's
I've been
options.
to Texas many times. Green Hill is a school there. I've been to debate camps there all day. I've seen the conservative parts of Texas. Like Texas is a cool place.
Dude, what are you talking about? We got huge ass poker houses in Texas because you can pay by the hour as long as there's not a rate. So you can do social clubs. Like, dude, we have probably 50 social clubs in Texas that they're like poker houses, bigger poker rooms than what you see in Vegas. And the games are bigger. Like the games are way bigger in Texas than they are in Vegas.
Like no rake.
There's no rate though. You're paying $12
Yeah,
an hour to be there.
yeah.
So
Like I
that's
said, there's no rake. The games can
yeah,
get
that's the
huge.
loophole. That's the loophole of not having a rate because you can charge by the hour for
Yeah,
your time.
there's a poker house right around the corner from my house. I've not been there, but they opened last year.
Yeah, Johnny Chan has won a AAA poker in Houston. Him and a couple of other pros have that over there, and then I think the Lodge just bought out Rounders in San Antonio. There's one here where I live, close by, 20 minutes away, called the Elite Poker Lounge. My God, dude, that's like the nicest poker room I've ever been to. Like it's like this shit at the Bellagio doesn't even rival it. It's pretty fucking crazy.
Cool.
And I just played at the Palazzo and at the Venetian recently, and I mean those are cool poker rooms, but dude, they got it going on at these poker houses over here in Texas.
I've got a home game. They meet every Friday night. I don't play every Friday night, but man, it was one of those where like I started going a few years ago, and like the first 3 weeks they played. I mean, they played a tournament. The first 3 weeks I won all every week, and I was
Yeah.
like, oh man, the gravy train is on. I'm about to like run the game here, man. Like this is gonna be easy. And I've lost it all back since. Like from rebuying and everything. It's like
TJ, what's the most amount of money you made in a night in poker?
Ooh, in a cash game, it was right at 12,200. And then in a tournament, my biggest cash out in a tournament was 71,000 bucks. But that shit took 3 days. Three
Yeah.
days. And that was exhilarating, dude. Exhilarating. There's people that have made millions of dollars in tournaments, and Lord knows how much money they've made in cash games. But I was never a high stakes player. It just, I didn't have the genetic makeup for it. Because I felt like it was, and it's probably the way that I trade the market, guys. It's so much easier for me to find 10 plays that are going to make me 100 grand versus looking for that one play that's going to make me $1 million. Because I feel like finding 10 plays to make me 100 grand is very duplicatable. It's systematic for me. Whereas like swinging for the fences, and you're like, well, you strike out one time, you can make like 2 or 3 million at once, going for the home run. I'm like, yeah, dude, but you're like angry and you have a really shitty batting percentage. So I'd rather just do the safe. So I'm a singles and doubles guy. Like that's the way that I look at making money, and that's the way that I like to play poker. So I just was like, as soon as I can make $500, you got to give me a reason to stay. Like the table has to be pretty soft, and I feel like I got to like legit win the game. But that was always my strategy: is like the fastest I can make $500, I'm gonna go like turn on Uber and Lyft, and then I'll guarantee myself another 100, 200, stack my bankroll, and then now I can go study the market because this is not sustainable. The market, I can turn it into a legitimate career because I saw that I was good at the game, but I wasn't great at the game. If I wanted to like elevate and play bigger games, then those people,
we'll
I was
start
going to
taking
be,
your lunch money. Yeah.
yeah, I was going to be the minnow at the table because they're playing like game theory and all this other shit versus playing the man, bro. That shit,
Did you ever run into what happened to me too? Like whenever I get to like know people, I kind of start making it
bro, they're all
personal.
playing with each other and they bet you out of pots and they check it down to each other. Bro, there's like
Yeah.
other
Or I
ways of
make it personal, like, oh, I know this guy's full of shit. I'm not gonna let him win this hand. So you're playing hands you have no business being in just because this guy has been getting away with shit all night long and it's pissing you off. That's how I lose my stack. I'll take everybody else's stack at the table, and I'll lose it to one guy who's just been pissing me off.
Yeah. Yeah, I mean, you're tilting a little bit, but
Yeah.
I
But
just,
he's calling with everything. Like, he turns over his cards. He's been playing 2-8. He's been playing 4-7. He's been playing all the junk you can think of.
yeah, I think the thing that helped me that like when I was doing it full time in San Antonio, because I got a stint early on in Vegas, but recently I was playing full time 2021 is I wasn't going to the same poker houses over and over. So I wasn't really having to play poker. I was having to play very good cards. And
Right.
there's a huge
Mm.
difference.
Yeah.
So I was just like really playing the math more so than like playing the man. And I was playing situational poker. I play a tight aggressive style. And I just looked for one double up. I was buying in for 300 to 500. Look for one double up. If the table gives me some good reads, if it gives me an opportunity to where I feel like, hey, I could legit run this up to 1,200, $1,500. Maybe I could actually take a day off this week or whatever. Then I would do that. And sometimes I was able to get that double up, dude, in like the first revolution of the table. But then you want to sit there for like an hour. That way it doesn't look like a hit and run. And so you're just kind of like posting blinds or whatever. You order something to eat, so you're able to take strategically a couple of hands off, and you want to like, okay, yeah, I'll pay for my button or whatever. So I mean, there's like a lot of ways to make sure you don't get into a situation where you get the money right back. And so you're just posting for like an hour or two, and unless you run into a situation to where like the odds are really, really in your favor, you just stay away from big pots. And it's fun. And then a tournament's totally different because early on is your chance to like stack as many chips as possible because people are usually playing really, really tight early on. They don't loosen up until the end because they have no choice because the blinds are so expensive.
Yeah.
So you can gobble up a lot of chips if you're very aggressive early on in the tournament. And also for me, if I want to get cracked in the tournament, I'd rather do it early than like be the fucking
Go home.
to
Go home and
be,
get some sleep.
you know what I mean? To be the guy that's the term escapes me. Help me out, Doug. The guy that loses right before the money.
Oh, yeah.
You don't want to be
the guy who's leaving said, "Man, I should have chopped."
you should have you don't want to be the bubble. You don't want to be the bubble boy.
Yeah.
And I'd rather be the first one out than the fucking bubble boy. You know what I mean? And so I just have different styles to play whenever it was tournaments versus.
You see, when you and the other thing, when you're playing winning poker, you're not getting a lot of sleep.
Yeah, no. Dude, sometimes it would
So-
take me like 12 hours, guys, to make fucking $300 to $500. It wasn't very lucrative.
It's not glamorous. It is not a
Oh,
movie.
So wheeling has to be a whole different world for you then, right, TJ? Because
The market closes and you got to go to bed.
okay, TJ texted
can.
me, he was like, you want to double down on the hood puts? I'm like, sure. And then boom, we made another couple grand, like just by swiping up, right? Like it's totally different, totally different.
Yeah, but it's just, but the thing is like my strategy now with like selling puts and calls is I hone in on my, 10 to 15 stocks.
Yeah.
And that's my go-to move, right? Like that's my go-to move.
I think that's the strategy. You know a couple names and that's it.
You know what's going to make you money. That's your business. My business is to sell puts and calls on those stocks. And you got to give me a really compelling argument to pick a different ticker because I know how to make money off of this one. And if y'all haven't figured out that's the name of the game, I don't know what fucking game you're playing. Because you can know all about a fucking stock. That's all cool, but can you make money with it? Do you know how to make money off of that stock? Because if not, then I don't know what to tell you. Buy a fucking ETF. I mean, you got to learn how to manufacture. And I figured it out. 10 to 15 stocks. I'm kind of overextended on the 10 to 15. I feel like I was doing better 7 to 10, but I also want to try to grow the channel, and having more names helps because you have a lot more to talk about.
Yeah.
And it's also because the portfolio is getting so big, I feel like I need to have more names just for managing the exposure. And because I mean, fucking, how many shares of SoFi can you really own? It's a fucking cheap stock. So it's
You
it's
can own them
crazy.
all. You can own them
Yeah.
all.
Fuck, trying to be Anthony's exit liquidity.
Dude, he hasn't sold. He hasn't sold in 3 years.
Dude, and who the fuck is this guy that keeps selling his shares, yo? Like, what is he in SoFi? The
Jeremy
CTO
Rishel. He's the
or
CTO.
some shit? Guy named Jeff. I think his name's Jeff. Paperhands.
Jeremy Rishel.
Jeremy Paperhands, bro. What the fuck, dude? Like, there's Edward Scissorhands, and then there's Jeremy Paperhands. Like, my God, bro. Like, what the fuck, yo? Like, man, fire this
Dude,
motherfucker.
I feel like Noto wants to sell, but
This
he
is Wheeler's
knows
after dark right here, guys.
he knows if he sells, everyone will get so pissed, and that's why he's not selling.
He can't sell at these levels, bro. He ain't that fucking dumb. He's in this thing to win it, bro. He
But
can't.
why is the CTO selling then? Like it's
I
annoying.
think he went through a divorce, or is he going through a
Fuck
divorce?
that. He's been selling for like 3 years, bro. Fucking
Maybe they were separated.
taking everything, bro. Like,
I don't know. I'm just saying, like Peter Thiel, I got a notification he unloaded even more shares, but he's unloading at pretty good levels. That's I mean, you'd probably do it too, right?
yeah.
Selling over here at fucking 7 or 8, whatever the hell SoFi's at right now. I mean, dude, that's just, first of all, you're not a good investor. So I'm wondering how good you are in your position in the company.
Well, here's what it tells me about Peter Thiel, right? Is Peter Thiel is selling right now. He's got something.
Peter Thiel, what?
He's selling Palantir right now. He's got something he's buying. Because he's not selling to become a billionaire. He's not selling to change his lifestyle or buy a boat. He's probably trying to buy into
either there's a private startup he wants to put money in, or he's buying Accelera, or he's buying China.
Yeah.
He's buying something. I agree.
He's buying something. He's taking his money out of here to buy something else. He's not just taking it to put it on the side.
Yeah.
Because, I mean, look how badly the stock has performed for years anyway. And he rode that out without problems.
Dude, I saw in the SEC filing, he had these shares granted in 2006, man. It's been a long time holding.
Can you imagine? No, you can't. You're barely that old. TJ, can you imagine like holding shares since 2006 and something that were like next to worthless?
Then it goes up 30x or something, or whatever it is for him. Like, it's crazy, bro.
I mean, it's almost like forget you have them in 2015, like, or 2012. Forget you even own those shares. Like,
but that's what I'm planning to do with Figure. I don't even, like, people say what's my net worth. I forget like that investment. I don't even think about it, and I'm just hoping this motherfucker gets it to a couple $100 billion.
Oh, that's right. You did some iRobot shit, right? What did you do?
Yeah, it's a humanoid company, dude. My 25 grand goes to fucking 6 million if he can get this thing to 200-300 billion.
He's competing against us in Tesla. So,
I mean, if they win, Tesla should be worth multiple.
And that's that super rich dude that you had that you met through your chat or whatever.
Yeah. He put in a lot more. Yeah, I mean, if Figure goes to a couple $100 billion, he's gonna make a couple $1 billion.
I remember I didn't know you that well, and I kind of grilled you on your channel, like, how the fuck did they get you accredited, yo? Because I used to work for venture capital first,
yeah.
And then I was like, oh shit, dude.
No lie, I was a little pissed too when I found out you got accredited.
It's not that hard, dude. Like, what is?
I didn't know about being an accredited investor at one time, and I was like finding all these great things.
Think about it. What's an accredited investor? Someone with a net worth of
$1,250,000.
You make $250 a year, or you have a net worth of $1 million.
Well, it's supposed to be.
So when I was on the phone with a lawyer that day, I don't make $250 grand a year. So he was like, "Do you own a business?" I was like, "Yeah." He was like, "What's your business?" I was just my YouTube and Twitter. He was like,
"It's conceivable."
Yeah.
He was like, "Do you think it's worth $1 million?" I was like, "I think it's worth many millions." He's like, "You're accredited." I was like, "Boom, baby, sign me up." There we go. No, but seriously, it's actually that simple. If you can justify in a court of law your business is worth XYZ, there you go. Now, obviously, like it can get into the nuances of it, but at the end of the day, if you have a
Hey,
fundamental belief, then boom.
We're joking, but this is exactly what Donald Trump got convicted
Yeah.
for
That's
valuing
true.
his businesses at a
But see,
number that
he
other
was doing,
people disagree with.
he was doing it at a crazy scale, though. He was doing it at hundreds of
That
billions.
no one ever got hurt by. Like it's not like
Yeah.
they were providing him exit liquidity in something. He still has them.
Yeah, when it comes, I mean, that's why we consulted with a lawyer. Like, I mean, dude, the lawyers that I consulted with get paid thousands and thousands of dollars per fucking minute, you know. So like when they talked it over with me, I was like, all right, you know, if the lawyers say it's good, then we're good to go, and that's it. Take my money, get me in
Nothing,
this shit.
nothing matters unless they audit the fund, right? Like I used to work for a company called Can-Am Capital out of Culver City, California, and they would do private placement memorandums, PPMs, Reg D, 506 offerings at the time.
Yeah.
And as long as they don't audit the fund, dude, it doesn't even matter. But if they audit the fund, they want everybody's tax returns in the fund to make sure that everybody's legit.
Well, no, so that's why I asked the lawyer. So what if they want to do an audit? And what if I have to literally prove that I'm worth $1 million? And he was like, they're not going to audit. I mean, like the odds of them auditing, like, are they going to audit Microsoft and Nvidia that invested in this round? Like, no, they're not going to audit. You know.
But
Can you imagine the amount of paperwork to audit Microsoft?
Dude, and the other thing is, he was like, if they ever audit, it would take years, and by the time they come to audit you, you would probably have $1 million. I'm like, yeah, probably in the next like 5-10 years, I'm probably gonna have $1 million. So, like in cash, you know.
So what? So how long or what? Like, what's the time frame for this iRobot?
The way Derek thinks about it, the way I've been listening to the guy talk about it, if he's not bullshitting, they should IPO in the next 5 to 6 years at a couple $100 billion, and the market should be big enough where it goes to $1 trillion, and then my 25,000 turns into like 20 million over the next 20 years. Really, over the next decade, it should turn into at least 5 million, the 25,000, and then after that, we see what happens. So it just depends on, do we believe robots are going to fucking replace all these port strike workers? Like, and if it is, there's going to be a couple companies that win. Tesla's going to be one of them.
Yeah.
And hopefully Figure is another one.
Hey, what's going on with that shit? Are they still striking? Because I saw an angry white dude talking on TV the other day.
Bro, the toilet paper's gone. I hope you stocked up. Costco, Sam's Club, HEB, Walmart.
People are fucking doing COVID-19 again. They didn't learn. God dang it, dude.
I actually sent my wife to go buy some. I told her yesterday on the way home from work to stop and pick some up. And she's like, well, I'll just order it. And I'm like, honey, you missed the thread. So we put in an order last night. She was going to pick it up today. Well, she got there and Sam's canceled the order. And this was on like the commercial grade, like single ply stuff that no one actually wants to use, right?
Sandpaper.
Yeah, anal sandpaper.
Dude, I think they'll resolve it by this week, but if they don't resolve it in the next 2 days, then it's going to start becoming an issue.
Well, like old boy said, you know, the first week they'll talk about it. The second week, there won't be any cars to sell.
I'm like,
that doesn't include Teslas. Dude, imagine if that is the turnaround for Tesla.
Like I'm gonna start printing out medical wipes. My mom gets them from the government. Medical wipes. They're like huge ass wipes. You can cut them in half, yo, and you can like get double the trouble. And I can sell those for like $10 a pop.
Yeah, I mean,
I think Doug's frozen again. Dude, this got to be the longest stream in freaking
5 hours, bro. What the
fuck? Dude, I ain't gonna thumbnail or what's it called? That fucking shit. Hey, there's not a chat GPT that does these timestamps for you. You got to physically do it.
No, I physically do it, but you can put the transcript into ChatGPT and it'll make timestamps for you.
So that's part of the $20 deal that you do, or what?
Yeah, because when you get the transcript, you have a lot of text, and that's why you got to pay $20 a month to condense all the text. But there's a couple websites. I can send you some stuff that just
Because I paid money to something called Opus. The kid Alex that helps me out with the channel. I don't know. I gave him like
Opus is good. Yeah.
100 and something for something. He does clips or something with that Opus, or he does short. I don't know what the hell he does. But
He just pastes the YouTube link and it takes out small clips. It's a good software. It's a really good one. But again, that's like taking away the job of video editors if like that thing can just make the clips, you know? So it's like it's moving fast.
Did I get like 10% of my subscribers from those shorts that he does with that Opus thing.
Yeah, it's good. Shorts help increase visibility.
And all that stuff. So I think it's cool, but I'm going live less and less now. I'm able to go live because I have the obligations to the folks for the FaceTimes. So I really like it because I have a lot more energy when I go live now because I don't have to go as often.
Right.
And I'm still able to grow like the Bitcoin hodl. We're doing 4-wheelers meetups next year with all the money from the YouTube channel.
That's great.
Cool.
And so we're looking at New York, we're looking at Miami, Vegas, and San Diego.
I'll come see you guys in Texas. I'm gonna make a trip out there, and I'll see you guys and Matt Money and everybody.
Yeah,
dude, that'd be cool. We go to Houston.
DD at Rick.
We got to go to Rick.
We should go to. Dude, he lives over here close to Kima, bro. That's a real cool spot. Real cool spot. That's a good place to hang out, and you're right there by the water, and they got really good food there. Or if you like seafood.
I love seafood.
Kima is fucking chill place, dude. Super chill. And it's clean, right, Dougie? It's clean, bro. Y'all take hiding y'all shit over there. All the traffic lights work and everything. There's a lot of money over there in Kima, man. It's like I think it's where like rich people from Houston go to retire. It's a real cool spot. I've only been there a couple of times, but I definitely enjoyed it both times.
It's nice. It's a nice place.
What's
the
that?
real rich people in Houston, they go to the Woodlands now.
Yeah, what's the place that we stayed at? What's it called? The Boardwalk or something like that? Is that what was it?
The Kima Boardwalk.
Yeah, the hotel that's right there by the little theme park.
Oh, I don't know the hotel name. I've never stayed. I drive by it like almost every day, I'm sure, but
yeah, it's really cool, dude.
Yo, do you guys eat at a Whataburger?
Not anymore, but yeah, like
once,
when I worked in the plants, I did. Yeah.
Did you like the honey butter chicken biscuit?
Yes, that is absolute crack.
It's the best thing ever in Texas, bro. I remember I had it.
Except for my
10 years
crawfish.
ago.
And I love that you remember that. It is that good.
Yeah,
I just got an email from Google Workplace. They're adding Gemini for free now. Like,
wow, no one gives a fuck. They're like, we added Gemini to this. It's like no one cares. Google. No one cares.
That's what I mean. The LLMs are just all.
So what is more interesting than that on the YouTube side? Because the X, I don't know how that shit works. I think people just see your face and then gives you all these people.
What do you mean?
We're still up 6 hours in. Amit's like 2 hours in now. Or that there's 67 people still fucking watching. Motherfucker, crackhead, junkie motherfuckers. We're all going to the meeting tomorrow. I want y'all to sit in the fucking library with me and be like, hi, my name's so-and-so, and I'm
a finance junkie.
You junkie son of a bitches. I love y'all. What the hell? Dude, this is an addiction, bro.
Fucking ET. He's in California, so what time is it for him? It's only 11 for him. It's 11 p.m. That's
fine for him.
Yeah, dude, this is I don't know how we stayed up this long, but we stayed up this long.
I don't know. I'm gonna make like $10 on this stream. It's gonna be awesome. Straight to the heart.
Hey, that's $10 more than I'm making, bro. No, I'm glad you have.
There's probably somebody watching shit in your watching area right now, bro.
All right, do we
Wash-
call it, man? I gotta do a show in the morning.
I gotta go, brother. I gotta go. Appreciate
Yeah.
you guys, man. TJ, the Wheel Deal signing off with $30 in the Mint investing. Croatia. That's how you say it,
Yeah.
right, Amit? Close enough.
Yep,
Yeah.
yep, exactly.
As always, blue
The
skies,
cockroach.
blue skies. Peace out. God bless
Good
you
night,
guys.
everybody.
Good night, guys.
Take care, guys.